in India. He started his career as a lecturer. Thereafter, he joined AP State Finance Corporation and worked for about 11 years. During the period 1984 to 1987, he played a leading role in developing an integrated financial accounting and management information system for APSFC. While he was in APSFC, he was deputed to work with Public Enterprise Management Board of Government of Andhra Pradesh as officer on special duty. He also has worked as general manager and company secretary of AP State Film Development Corporation. In 1992-93, Professor joined in Capital Market Regulator, the SEBI, as the Division Chief, Secondary Markets. At SEBI, he was in charge of broker registration, inspection of stock exchanges, and also worked on drafting regulations for custodians and depositories. In 1996, he joined India's first securities depository, that is National Securities Depository Limited, NSDL, and worked with it for 10 years. In his stint with NSDL, he was responsible for spreading the DMAT concept amongst all issuers and investors in the country. In addition to being a part of senior management team of NSDL, he played a key role in new products and services like setting up National Skill Registry for NASCOM, biometric-based investor registration system called MAPIN, conceptualization of Central Record Keeping Agency for PFRDA, etc. In 2006, he joined Kotak Mahindra Group and played multiple roles, including setting up Kotak Mahindra Pension Fund Company, setting up Kotak Commodity Derivative Exchange, Group Head for Capital Market Complaints. In 2013, the year in which the SEBI regulations for stock exchanges and clearing corporations was made effective, he joined as the first Chief Regulatory Officer of National Stock Exchange and retired from that position in April 2018. As a member of the Institute of Company Secretaries of India, he plays an active role in the academic activities and contributed articles to their professional journals. Presently, Professor Narasimhan is the Dean and Professor of Practice, NISM, Mumbai. Sir, I am very much grateful to you, sir, for your presence here in this first technical session. I thank once again on my personal behalf, on behalf of the Department of Commerce, Usman University, and the Center for Promotion of Financial Literacy. Thank you, sir.
Welcome. Thank you very much, Dr. Naresh. And it's a homecoming for me. I've been an alumni of Usman University Department of Commerce. I also work for this department. Therefore, I feel privileged and honored to be speaking on a platform provided to me by Department of Commerce, Usman University. I do not know the spread of the students. Are they from all across the country, Dr. Naresh?
Across the country, sir.
Okay. I mean, should I stick to only English or can I switch to Telugu as a question?
English.
Only. Okay, that's fine. Okay, that's fine. I have a presentation, Dr. Naresh Reddy. I request you to kindly run the presentation for me.
Yes, sir.
You can open it. My dear students, you must have gone through various investment opportunities that are available in the financial markets in our country. But the most important requirement of any investment activity is, what if something goes wrong? What if I have a difficulty? What if I've been cheated? This kind of question always bothers, because unless you have an excellent investor grievance redressal mechanism or consumer protection mechanism in that sense of the term, it will not be a very wise thing to get into a particular investment activity. Investments essentially are hard-earned money that we set aside for our future requirements and so on and so forth. And we do not want to be shortchanged on our investments. We want our money to be safe. We don't want to be cheated by anybody. While we may take any kind of investment risk in our life, our primary activity is that we don't want to get cheated. That's reason why we wanted some kind of investor protection. And in this context, I wanted to explain in this session as to what is the regulatory framework. How is an investor actually protected in our country is what I would like to present before you all through my presentation. Next slide, sir. I'm not able to see the slide, sir. I'm not able to see the slides. Hello? Dr. Reddy, I'm not able to see the slide. Hello? 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 Am I audible? Are you able to listen to me, please?
Yes, sir.
I'm not able to see my presentation. How do I see it? Hello?
Yes, sir.
Or shall I share my screen? Otherwise, I'll share my screen. Okay, that's better. I'll do that. Okay. Now I'll run the presentation myself. Okay. Ha. My presentation has these bullets to go through. Introduction, investor beware, general regulatory approach towards investor protection in capital markets, investor protection in other sectors is what I'm going to present. I request students to ask me questions wherever they have a question. Don't have to hold back the question. They can ask me on the spot, no problem. I may not be able to complete the presentation, but doesn't matter. Ask your questions and satisfy yourself. Now let us see. Hello? Hello?
Yes, sir. You are audible, sir.
Okay, fine. Okay, I'm sorry, there was a little technical issue. Now let's continue. Now we're in the first slide. Let's understand what are the objectives of savings. The primary objectives, not necessarily from any other point, economics point of view, generally speaking, it is when you try to invest your money, you say that I want to protect my capital. Two, you will want to earn a satisfactory return. When I say satisfactory return, the satisfaction is individualistic. It is nothing like a benchmark. I may be satisfied with 8% return. Another person may be interested in 12% return. Another person may want a 24% return. But whatever return, everybody has an expected return and he wants to satisfy himself that he's getting that kind of return. And third and most important thing is whenever I invest money, I must be able to withdraw the savings when required. On demand, I must get my money back. Let us say you invest in real estate, or will you able to get your money at your will? Not necessarily, because real estate sale will take a little longer time. You have any other type, so depending upon the kind of investment you have made, it could be a liquid asset, it could be non-liquid asset, but generally liquidity of an asset is also an important characteristic of your investment objective that you will always see. But then when you're making an investment, why should you require protection at all in the first place? You require protection because certain reasons. One, there is inadequate understanding of investment opportunity. This is the first and foremost requirement or a problem that actually you face. You don't understand the full scheme. You understand only certain elements of the investment opportunity and you try to invest, but the other portion which is not understood by you will actually kill you off. For example, somebody brings you a concept of annuity before you. They say that annuity is a very good investment opportunity. Will you please invest in annuity? Do you understand what is annuity? What they say is that if you invest 5 lakh rupees now, every year you will get a 50,000 rupees or 40,000 rupees as your pension money. Every year you will get it. You are getting caught up with the 40,000 rupees per annum forever in your life, but you will not understand that the 5 lakhs will never come back to you. Therefore, when you do not understand the investment opportunity in full, you have a difficulty in understanding or in accepting a particular investment opportunity. You think somebody is cheating. First thing is your not a lack of understanding is one of the reasons why you need a protection. Second is that between investor and the investee entity, investor is always weak. Let us say between investor versus a mutual fund, investor versus a insurance company, investor versus a broker, investor with a NBFC, investor with a public limited company which has taken deposit from you. So that way, wherever you see, as an individual investor, you are comparatively weak compared to the investee opportunity, and they are mighty enough. They can go to court, they can go to Supreme Court, they can go to anywhere to protect their interest. Will you be able to fight them? It's a problem. See, because you are weak compared to the investee opportunity, you need a kind of a regulatory setup to see that you are trying to get protection. The second reason. Third is that intermediary misbehavior and inbuilt conflict of interest of the intermediary. My dear friends, please understand that most of the investment opportunities are brought to you or brought to your attention by somebody called an intermediary. You want to take insurance, an insurance agent comes to you. You want to take a vehicle insurance agent comes to you. You want a medical insurance agent comes to you. You want to invest in the stock markets, a broker comes to you. You want to invest in a mutual fund, an investment advisor comes to you. You want to invest in provident fund, maybe your employer will act as intermediary in that. There's not a big problem. So if you want to invest in a public provident fund through post office, you may go through an agent. You want to invest in the post office savings scheme, you may go through agency structure in that. You want to invest in RBI gold bonds, you may go through a broker structure in that. So therefore, an intermediary brings the investment opportunity before you, and when he tries to present his case before you, it's quite possible that the intermediary is trying to give you only rosy picture of the investment and not the darker picture. The difficulties and complexities behind the investment opportunity may not have been explained to you, and therefore we need a regulatory intervention to see that intermediary does not cheat you in any way. That's the important reason why you need to have a investment, what you call a grievance redressal mechanism. And then often what happens is you have a blind trust. You have a blind trust on the intermediary. This is one of the reasons why most of the time you will actually get into investing grievance module. For example, somebody tells you that if you invest in derivatives in stock market, you can make a lot of money. Do you understand derivatives? No. But the derivative concept was taught to you by one of the persons who is a broker or authorized person of a broker. And he's been a very good friend of yours, or he gets into friendship with you over a period of 1 or 2 years. After 2 years, he will say, "Aap to achhe dost hai, why don't you please invest through me?" Now you have a blind trust towards him. Then you will say, "ठीक है, I'm giving you 5 lakhs, please invest and make it double and give it to me in 3 years' time." He will take away the money. After that, he may not be appearing to you at all. Similar things happens with any intermediary. Intermediary because he wants to make money out of you. Intermediary because he wants to earn commissions out of you. Because intermediary because he has a criminal intent of even cheating you. It's quite possible that because of the intermediary misbehavior, you may get huge amount of losses in investment process. That's reason why you require a kind of regulatory protection to you. And then there's a harsh reality. All terms and regulatory rules are all in English, and therefore it's quite possible that you would not have understood the terms and conditions of investments thoroughly. And as legal people draft these terms and conditions, even people who are postgraduates like you and me who are MCOM students, even we also have a difficulty in understanding because of the legalistic way in which the terms and conditions drafted. That could be one of the reasons why you require a regulatory framework to see that your interests are protected. And finally, the gap between investor expectation and outcome of the investment. This is the reason why actually most of the time you have a complaint. You expected 12% return, the return received actually will be 9%. You expected 12% return, you got 15% out returns, you are very happy, you put more money, next time it will come to 12% only, then you feel that array you got cheated. Therefore, expectation gap is also one of the reasons why you think investor protection is required for you from a regulatory perspective. Any questions here, please? Okay.
Sir.
Yeah, please. Yeah. I'm not able to hear you.
Sir, continue, sir.
Okay. What I'm doing in this is, I am not going to address the institutional investors. I am going to address only the what you call household and retail investors. Let us see what exactly we have to do. First and foremost thing is that investors should take care of his investments. That's the best protection you can ever have. That is, if they are saying that you have to have a helmet on your head when you're driving motorcycle, and you have wear seat belt when you're driving a car, you are not supposed to talk when you're driving your vehicle. If you are not supposed to drink and drive a vehicle, these are minimum requirements, minimum protection requirements. You do all that and you say that you got an accident, you will get an accident. Nothing surprising about it, and nobody can protect you in that case. Therefore, we should be very clear that investor has to protect himself. That's the first and foremost requirement. First thing is that what is your financial goal, and what are the means through which you are going to achieve your financial goals is the first thing you have to understand. Let us suppose for a while, there's a flat being sold at 1.5 crores in one of the posh localities in your locality, in your town. You are a young officer, joined a particular company just now, earning about 25,000-30,000 rupees a month. Should you be saying that I will take a loan and buy this property? Or somebody says, I will give you a loan of 1 crore of rupees, please take 1 crore rupees and invest in share market now, and you will be able to make 1 crore to become 1.5 crores in about 3 years time, please take the loan. And they say, in case you are not able to repay the loan, in case of losses, I will take away your house. Will you take it? Please understand your financial means. Please understand your saving potential, and then try to achieve the financial goal you have based on your means, and don't try to unnecessarily fly beyond your means. That's the first and foremost requirement. And then there's something called the life cycle objective in your life. What is the state of your life? You have entered the job. Next thing requirement will be you may have to buy a vehicle for yourself. You may have to have a better phone for communication purposes. You may have to marry after 3-4 years of time. Once you marry, you may want to have a house. Once you have a house, you have to educate your children. At that time, your parents will become retired, and then you may have to take care of your parents. Then you may have to build your savings for your education and marriage of your children. Then you have to what you call save for your pension fund and so on and so forth. Look at the way the stage of your life and the savings objectives are actually changing. Therefore, you should understand that you should uh, uh, you should elect a particular investment objective, an investment opportunity that satisfies your life cycle requirements at that particular type in which you are trying to live. That's a very fundamental requirement. It's all to be done by individual concern. It cannot be taught by anybody else. For example, I am a son of my rich parents. For me, house is not a problem. Therefore, I can actually divert my financial goals into a different way. I am a son who is a sole bread earner for my elderly parents who have been living on fairly frugal means. Then my responsibility is different. Therefore, I am going to marry a housewife who is not going to work. My objectives are different. I'm going to marry a professional who's going to earn as much I'm going to earn. My way of work life is different. Therefore, your life cycle, your stage of life, your ability to take financial risk, your financial goals are highly individualistic. Therefore, you should match your individual financial goals with your financial means and then define your investment objective. You will not get disappointed. You don't have this kind of understanding, there will be a lot of disappointments. You start distrusting the investment opportunity itself. That's a dangerous thing to happen in life. And then please understand that every investment opportunity has got a regulatory and a legal base. And you will have to sign certain documents when you're entering into a particular investment opportunity. Therefore, when you're signing something, you are binding yourself with certain terms and conditions. You should understand those terms and conditions. There's no point in trying to be unnecessarily gentlemanly while signing off these documents saying that aap to pad liya na, aap to theek karta hoga na. You don't blindly trust anybody, read it. If you're not able to understand certain clauses, ask them, understand before you sign. That's very important because once you sign it and give the paper back to the intermediary or the investment company, that can be held against you. You should take care of that. Therefore, it's your responsibility to take care of yourself. That's very important. And every investment comes with some terms and conditions. Understand those terms and conditions. Once you understand the terms and conditions, then you can actually moderate your investment, whether you want to go for high investment, low investment, no investments, more investments. All the decisions can be taken only when you understand the terms and conditions of such investment. And then you should not allow your greed or expectation to blind the legal nuances that may impact your investment. This is a very important point. I often seen, I have as a chief regulatory officer of National Stock Exchange, I was in charge of investor grievance redressal myself. I've seen several grievances where person was actually overwhelmed by the greed he had, and his greed blinded him, and he took unnecessary risk in the market, and he hunted into losses, and he came to stock exchange for redressal, but we could not help because it was very obvious that he has ignored several terms and conditions. He signed at places where he is not supposed to sign, and all those problems were there. Therefore, don't be greedy. Don't say, if somebody says that an investment can give you 40% return, don't accept such kind of offers, because no investment in this country today can ever give you 60-40% returns at all. If fixed deposit in a bank is giving 6% return, you can at best expect 10-12% maximum. Even if somebody is doing some what you call business very well, it cannot be more than 10-12% return. If somebody is offering you 30% return, how do you think he can generate 30% return at all? You cannot become that kind of a rich at all. Therefore, you should be very clear, moderate your greed. Don't allow the greed to take over your what you call investment capabilities and common sense. Let the greed be pushed back, apply your common sense, and then only go ahead with whatever you want to do. And then whenever you have invested, please keep copy of the application, copy of terms and conditions. If they are given you any term sheet, if they are given you any brochure, please preserve them, because that forms your basis for arguing and discussing with them when you go to your regulator for redressal. Therefore, please keep all the records very careful. Only then you'll be able to protect yourself. You don't have records of your investment, you just can't go to anybody asking any relief at all, because no office in this country will accept anything without a paper. Only the words that you speak out of your mouth are not going to be accepted. You have got to provide them documents and documentary evidence for your arguments. And therefore, please keep a record of all your investments as a fundamental requirement. And then, please understand that usually intermediaries bring the investment opportunities before you. So when they are bringing investment opportunities before you, please understand and be aware that they may also have some interest in you, making you invest in that. Please understand that. I'm not saying don't pay 1% commission. I'm not saying don't pay 0.5% commission. I'm not saying that he should serve you for free. What I'm saying is he should not be cheating you. That's all. You should be careful that he's not cheating you. That's an important point you have to understand. If you are able to take all these things, in all probability, you may not have to go to any regulator for any relief. But nevertheless, if you are here and there somewhere, and there'll be some problem here and there, there's a regulatory framework to protect your interest. Let us see what it is now. Let us understand who are all the various regulators we have in this country in the financial markets. We have the financial market regulators are Reserve Bank of India for, I think next slide says anyway, Reserve Bank of India for investments into banks and NBFCs, SEBI for capital market investments including mutual funds, insurance, IRDA for insurance related investments, PFRDA for pension fund regulatory investments, etc. So what is that all these regulators generally take a view? How do they frame rules? What is the substance of their rules? How they look at any investor complaint at all in the first place? Let us try to understand. What they do is, in all investments, the fundamental point is that commercial risk of capital is always with the investor. They will never, no regulator will assure you that commercial risk involved in investment will be taken away by anyone. For example, you invest in a Sahakari bank and the Sahakari bank goes for a toss. The Bank of India will only compensate, but it will not give you the full money back. They will not refund the whole money. Let us understand very clearly. They may compensate as per the rules, deposit guarantee rules of 1 lakh or whatever. They will not be able to give you full money at all. Please understand this. Therefore, you have invested in a company shares, and the company goes into liquidation. You lose the money. SEBI does not guarantee that company will refund you the whole equity money at all. Even Companies Act does not say that. Therefore, all regulators will only say that commercial risk, that is when the money is given to investee company will use that money for their commercial purposes, and that commercial purpose results into a loss. That loss will flow to you. No regulator protects you out of that particular kind of a commercial risk. What they do is, investor is expected to be aware of risks involved in any investment opportunity. Regulator ensures transparently disclosure of risk. That's all they do. What all the regulator does is that risk involved, the commercial risk or other risks involved in investment are transparently told to you. For example, somebody is giving you a prize of 1 crore rupees if you jump from 14th floor of a building. And they will say, if you jump from 14th floor of a building, you may die. If you are alive, I'll give you 1 crore rupees. This is the prize money given. So it is now very clear. It is for you to take a decision whether you want to jump from 14th floor or not. But here there's transparency is that they are also saying, if you jump from 14th floor, probability that you will be alive will be 0.000001. You will not be alive at all. But if you are alive, I'll give you 1 crore rupees. Now you jump or don't jump, it's your choice. Similarly, every company, every bank, everybody gives you the risk involved in investing with them. The regulator will make such institutions to disclose the risks involved in dealing with them. And it is for the investor to assess the risk and take a decision whether they want to take that risk or not. Let us suppose for a while, if you invest in derivative instruments in the stock market, there's a probability that you will get a very good return, and the probability is about 80%. If you invest in fixed deposits in a bank, you will get your principal and a return of 6% per annum for sure. Are you happy with 6% return? Take it. If you want to have 15% return by investing in stock markets, take the risk as per the stock market risk disclosure that you have. So it is for you to assess the risk, and you can actually take the kind of risk you want to take depending upon what you understand the risk. What the regulator does is, regulator will ensure that the investee entity, it tries to give you all the information and risk about the investment opportunity. That's what the regulatory approach is. Regulations usually create rules and regulations and regulatory framework in a way that there's a prevention of risk or elimination of risk of intermediation. And what it means is that intermediaries should not deceive you. That's what they try to do. Commercial risk is yours. Investment opportunity is showcased before you through intermediary. The intermediary is supposed to disclose all the risk involved in the investment. He's not supposed to cheat you. If the intermediary cheats you, they will take action against the intermediary and try to get you compensation for the kind of a deceit he has done. What they ensure that by making intermediaries register with the regulatory authority, intermediary does not misbehave. If he misbehaves, some kind of universal protection measure is trying to be put in place. That's all regulator does. So the whole objective is to eliminate the risk of intermediation and nothing beyond that. That's what the regulator does. And then they also see that every investee entity generally has a compliance officer, and there's a established investment grievance redressal procedure. So if you follow the redressal procedure, you're supposed to have your investment grievance redressed. For example, you put money into insurance company. Insurance company has not given you insurance policy. You can go to the insurance grievance redressal procedure. You will get the insurance policy. Compliance officer is supposed to get you the insurance policy. If the compliance officer fails, you can go to insurance ombudsman under the IRDA and get your insurance policy. There's something wrong with the mutual fund. Compliance officer of the mutual fund is supposed to address your grievance. If it does not do, SEBI will step in and try to give you the solution. Stockbroker trying to your grievance against stockbroker. If the stockbroker does not resolve, go to the stock exchange. Stock exchange will resolve. Even if stock exchange does not resolve, go to SEBI. SEBI will try to resolve. That's how they create a hierarchy in a way that you will get the redressal of your investment grievance through the compliance officer and investor grievance procedure. And all the regulators in this country, they heavily invest into what is called as investor education and awareness program. The program we are now attending, all of us attending, is a part of that kind of a what you call initiative only. They try to see that all investors are educated well, so that they take the information, they are aware of what they're going to happen with them, so that they will not get cheated, they will not have any problem in investment. That's what they try to do. So investor education and awareness is an important criteria, important initiative for protection of the people. That is, people tell you. I mean, nowadays I've seen many places where I have, it's a personal experience of mine. I was driving a motorcycle in a particular place. A police stopped me because I was not wearing helmet. You know what he did? He did not charge penalty. He had a helmet vendor behind him and say, "इनके पास अभी vendor helmet खरीद के पहन के जाओ." I have purchased helmet, put on my head and went off. So here investor education is completed. Similarly, there is a lot of education. Many people, even in COVID times also, we have seen several what you call YouTube and WhatsApp messages wherein police try to teach lessons to people who are coming out, though there's a lockdown and all that. What exactly they are trying to do? They're trying to create awareness amongst you, saying that take care of yourself. Therefore, investor education and awareness programs are conducted in a way that you take care of yourself. That's the best thing a regulator can ever do. And then all investor education, all the regulators have actually invested what you call established something called as investor protection fund. And investor protection funds usually are utilized towards compensating, not giving the full money, but they try to give you some part of the loss that you incur in case your investment procedure was correct and you have been a disciplined investor. If you are greedy, if you have not adhered to the normal investment procedures, investment processes correctly, you may not get compensation. But you have followed everything, you got cheated by intermediary, in all probability you will get some kind of a compensation from the investor protection fund. This is a general approach that all our regulators have taken in our country so far. Any questions at this stage? Okay. I'll be focusing on the capital markets because capital markets, I'm thorough, I know everything. And as far as the other markets are concerned, I can give you very broad structures only. Actually, time may not be sufficient for us to talk about regulatory structures in every field. Therefore, I'll take you through the capital market structure in detail. When we say that you are investing in capital markets, what it means is that you are investing into primary markets, that is public offers, public issues. Yesterday there was a public issue which was oversubscribed 150 times. That is Happy Minds issue, 150 times it was oversubscribed. So when you may invest into public offers, you may invest it through the stock exchange using brokers, you may invest in mutual funds, you may use structured agencies like portfolio management services, alternative investment funds, collective investment schemes, etc. And you also hold your equities in what is called as depository account. In all these areas, you will need some kind of protection because you are interacting with the capital markets and you have to be protected in all these transactions and interactions. That's what the capital market exactly tries to do this for you. Say, in every of these steps, you want to invest in public offers, you want to go to stock exchanges, you want to go for PMS, you want to go to alternative investments, mutual funds, everywhere there is a definite intermediary involved, and therefore the intermediary has to be what you call uh, intermediate has to be regulated. That's what exactly they do here. So how is that intermediary is regulated? Intermediaries are regulated through what is called as SEBI regulations, and all SEBI regulations essentially require you to register with SEBI, and the moment you register with SEBI, they have a registration certificate, and the registration certificate gives authority to SEBI to inspect and take action against the intermediary should the intermediary do anything wrong. And investor protection measures are generally on the 3 or 4 categories. One is called as a protective measure. Second thing is called as a preventive measure. Third is called as a remedial measure. And fourth is compensation in some form. Let us go through each of them in detail now. Under protective measure category, we have investor education and measures to protect investors by investors, protect investors by investors making use of these measures. How to investor education is the first measure. Second one is preventive measures, that is communication to investors, and several preventive measures in trading systems, which I'll explain as we go forward. Remedial measures is, in spite of all this, there is some investor grievance, then how that investor grievance has to be redressed through what is called as a scores. I'll explain scores later on. We have got investor grievance redressal committee and arbitration at stock exchange. I will explain as we go forward. Inspection of stock exchanges and enforcement actions, I'll explain to you as we go forward. And appeal to SAT, Security Appellate Tribunal, SAT, I will very briefly discuss about it because investor need not have to generally go up to this. Most of the time, investor get with justice within the available measures that I have described already. And beyond all this, there is something called the compensation also in case of broker default. These are 4 measures through which, these are 4 regulatory measures that we have got to protect the interests of the investors. Let us see what they do. SEBI has actually launched a huge investor education initiative. They themselves run a lot of investor education programs across the country in the vernacular languages. Students who are interested in understanding what kind of work they do, go to SEBI site. There is a, within the SEBI site, there is a subsite called as investor education site, and go there. You can download any amount of information on capital markets in Telugu, in any language of your choice. They have got literature in almost all national languages in our country. Therefore, you can actually download all the literature. It will be very interesting to study all of them. In addition to the literature produced, they also run classroom kind of sessions, and they announce in advance. They have appointed resource persons across the country, and these resource persons are responsible to run the classes for investors across the country, and they try to explain what are the issues in to what you call investor education club initiative is taken through them. In addition to this, stock exchanges also conduct a lot of investor education programs. Stock exchanges and depositories also conduct a lot of investor education programs. I would have myself addressed not less than 300 to 400 investor education programs across the country at different points of time in my life. Therefore, stock exchanges, depositories do it very regularly themselves. In addition to that, SEBI has ordered mutual funds to necessarily spend not less than 2% of their profits towards investor education, and therefore mutual funds also involve themselves into what is called an investor education activity. Then all the four regulators together, that is RBI, SEBI, PFRDA, and IRDA together, they have set up one National Center for Financial Education, NCFE. I encourage each one of you to access their site www.ncfe.com, our organization. You please go to the site and see amount of education that's being done through this particular site. A lot of work is being done in that area also. A lot of literature is available in terms of investor education in that. You can use all that for the purpose of educating yourself. In addition to this, brokers and mutual funds have their own programs. For example, I know some mutual funds who conduct programs for housewives only, doctors only, lawyers only, lecturers only, army people, defense people, so on and so forth. They run programs for homogeneous groups. Brokers also do such kind of programs to improve their business. They try to educate and make educated investors to invest through them. That's what they do. The investments, these initiatives are both classroom sessions and also language that are written, that are actually what you call literature to be produced in different languages. That's what the investor education program does. Any questions here, please?
No, sir.
Yeah, please. No question. Okay, fine.
Sir,
I'll go ahead.
continue, sir.
Okay. Now,
Sir, you said about the email, what ఇది ఎన్ఎస్సి అది ఆ వెబ్సైట్ చెప్పారు కదా సార్, అది ఒకసారి చెప్పండి లింక్.
యూ కే అంటే మీరు సెబీ సైట్ చూడొచ్చు. సెబీ సైట్ చూడండి. స్టాక్ ఎక్స్చేంజ్ సైట్ లో కూడా ఇన్వెస్ట్ ఎడ్యుకేషన్ ఇన్వెస్టర్స్ అని చెప్పి ఒక పర్టికులర్ కాలం ఉంటుంది. దెల్ బి ఏ కాలం ఆన్ NCFE, www.ncfe.organization. NCFE అని ఉంది కదా, fourth bullet. You see that you will get a lot of information from there also. Okay. And then we have, as I told you, general approach of regulators is to see that you get a lot of information by way of disclosures about the investment opportunity. Therefore, disclosures is an important approach, a regulatory approach to protect the interests of the investors. Risk disclosures are done in different ways. For example, in IPO, something called as a prospectus, which runs in about 400 pages. You will be completely flabbergasted. But in the application form, has got abridged prospectus, which will give you brief information about the company. You can read that and understand the risk involved. This is very important to understand and appreciate that. Let us suppose for a while, I'm talking about anybody, whether boy or a girl, they want to buy some dress for themselves. What they do, they go to the shop, go to the trial room, pick up select 4-5 dresses, go to the trial room, wear it, see for themselves, show their friend, sister, mother, whoever it is, and say, is it okay for me? Then only they will buy. What is the value of the cost of the dress? Cost of the dress is about 2,000, 3,000, 1,500, depending upon your budget on that. But are you doing the same thing when you are investing 10,000, 20,000, 50,000, 1 lakh? You should do the same thing that you are doing when you are trying to buy anything for yourself. You need to understand the risk involved in the particular investment. Only then you do it. Let us suppose for a while, Happy Minds oversubscribed by 150 times. Why is that Happy Minds is oversubscribed 150 times? How many of us have heard about Happy Minds company at all? What do they do, Happy Minds? What they do exactly? Unless you know all these things, there's no point in giving your money to that company. So you say HPCL produces petrol. I understand, I put the money there. Dr. Reddy's produces pharmaceutical and drugs. I understand, I put money there, it's okay. Happy Minds what? Some logistics company what? I mean, do you understand what is logistics? If you understand logistics and you think logistics is going to be beneficial to you, put money there. Therefore, first and foremost thing is that you should understand why you are investing your interest. Similarly, mutual funds also. Mutual fund is a very broad term. In mutual fund, there are different type of schemes. Some schemes says large cap fund. Some schemes says index fund. Some scheme says government debt fund. Some scheme says banking and PSU debt fund. Some scheme says liquid fund. Each scheme has an objective, and as per the objective, they invest into some securities which match this particular objective. You should see whether the objective of the scheme and your objective match or not. If the objective of the scheme and your objective match, invest. Otherwise, don't invest. There are so many varieties of mutual fund schemes where you can actually define your objective and check which objective matches your objective and invest into the scheme. What I'm trying to say is, please understand the opportunity before you invest. Similarly, broker also, when you want to use the broker services, broker is supposed to give you a risk disclosure document. Read the risk disclosure document. It runs into about 3 to 4 pages. Read that and sign off, no problem. Nothing wrong about it. What are the various disclosures to be made has been defined by SEBI. Every broker has to say all those things in any case. If you understand them, it is fine, then you sign it off. So in every document that brings any investment opportunities, it is necessary and the regulations concerned that risk relating to the investment opportunity is very well described. Please read them, understand them. You don't understand, then ask somebody who understands it, then evaluate it and take a risk and then take a plunge. Investments are not bad. Investments have risk. Understand the risk and do it. That's all I'm trying to say. Nothing else. And then other intermediaries also can, intermediaries are also required to match your risk profile and investment risk, and they only recommend the risk to you. Let us say an investment advisor comes to your home and say, sir, please invest into mutual fund. When he says that, he is expected to recommend a mutual fund scheme that matches your risk profile and your lifestyle requirement. You are 25 years old, 28 years old person, you want to invest, he may recommend you equity schemes. Here, I'm a 60-year-old person, I'm already retired or I'm about to retire, he may advise the debt scheme to me. Therefore, his responsibility is to match my risk with the risk of the investment. That's the requirement of the intermediary also. That's how regulators have ensured that the intermediate don't misbehave. And in the case of companies where you are invested directly into an equity of a company, companies are expected to give you continuous information about their what you call changes. Every quarterly results they will give you. In case they are going to give you a bonus, if they are going to give you a dividend, they have to make it announcements in advance. So in case some rumor is happening, say for example, Chanda Kochar is arrested. If she was already in the managing director position, she is going to be arrested. The information has to be given by a company to you and so on and so forth. Therefore, corporates will continuously disclose about every event and any event that can have impact on the price of the company's shares. That also disclose. So you understand those information and act accordingly. And then whether you like it or not, SEBI and stock exchanges have got a huge market surveillance mechanism. They keep on monitoring the market to see that there are no traps created within the market to see that investors are trapped. Otherwise, this market would have been very bad. We could not have had so much of foreign investments coming into our country unless we signed that our stock exchange is efficient. Today, our stock exchange has got one of the best, world best surveillance mechanism we have in our country. That's reason why most of the foreigners like our markets and they invest in our markets. That's what I can tell you. I had been in charge of myself surveillance of the market. Therefore, I can tell you with confidence that all this is being done very clearly. Any questions? Okay. These are, I mean, in addition to initial disclosures at the time of investment, they also have to give a continuous information to you on a periodic basis to see that you don't have any difficulty. For example, depository participants and mutual funds are supposed to send you account statements periodically to investors so that you will know. Today, shares are not printed in its paper form. They are given to you in an accounting statement. Just like your bank passbook, you have got a passbook where all your shares get reflected. If your shares have been taken away by some broker or somebody, how will you know it? Only comparing current month statement with the past month statement, compare these two. If some shares are not seen in that, and you know that you have sold or not sold, you have bought or not bought, whatever you have purchased should get added in your statement. Whatever has been sold should be deducted from your statement. You know what happened between last month and this month. So you get a statement every month. You will understand what is happening with the shares. Similarly, in mutual funds also, if you have invested last month added some more mutual funds, they get added. If you have sold some mutual funds, that get deducted. If you have not done anything, it will stay remain same. So that's how the continuous statements will be given to you. In addition to this, I don't know how many of you are trading or how many are willing to trade. Stock exchanges will send an SMS to you as soon as some trade is done in your name. They will say, Mr. Narsimhan, you have purchased 100 State Bank of India today at so and so price at so and so time. If I have sold it, they say, Mr. Narsimhan, you have sold 100 State Bank of India shares at so and so time at so and so price. Stock exchanges from their system will send a communication to investor. Though you have used a broker to do the trade, stock exchange will tell you information, because before a trade is commencement, before you start trading on the stock exchange, your details are all uploaded with the broker to the stock exchange. So stock exchange also knows that you are trading in the stock exchange, and therefore stock exchange will send an SMS to the mobile number that you have given to them. Therefore, ensure that you have given the right mobile number and right email ID, so that stock exchanges will directly communicate to you. Similarly, depositories and depository participants. You have an account with the depository participant, but depository system itself, that is the main office itself, will send you an intimation saying that this is your stock of trade, stock of your stock equity shares in your account. That's how direct communication comes in. And then I don't know, people who trade regularly will understand this. Stock exchanges will send every fortnight the balance of your shares with the broker. That is, you let us suppose for a while you are regularly trading in the stock exchange. You kept some 1,000 shares of State Bank of India with a broker for your play purposes, to buy and sell, etc., etc. So on 15th day, how many shares are left with the broker? A information comes to you by SMS and email. It is for you to check and see whether whatever these things are being said is correct or not. It is for you to understand. And then even a broker is supposed to tell you end of the day, every day, if he has any trade on your account, they'll have to tell you one communication saying that I have traded on your account. I have not traded on your account. If you have not traded, they will not send a communication. But if they traded, they send you a communication. Not only that, they can trade on your name or on your account only when you have placed an order with them, and you can always challenge. Let's suppose there's an intimation to you saying that one trade was done on your name. You can ask him, where is my order? Without order, how can you trade on my name? You can question that. That's also a part of your right. And then your margin balances, your trade confirmation, etc., are regularly communicated by the broker to you. And then DPs send send SMS and communications. Okay, when you're in a depository account, you have got shares. If your account is debited or credited, an SMS will come to you straight away on your mobile number saying that your account is debited, your account is credited. Look at the beauty. So there is so much of communication, and if you ignore the communication and sit quiet in your home, then nobody can protect you. But as far as system is concerned, regulatory structure is concerned, there's a continuous flow of information on what kind of transactions you are doing, where are you trading, etc., etc. That's an important measure that regulators have put in place. Any questions, please? Okay, I'll go to the next one. Now, I will take you to the trading system. A broker can place an order, or say the broker can trade on your behalf only. Yeah, what's the question? Yes?
Sir, nothing but, sir, can you share this PPT after the class, sir?
Yeah, we can do that. I'll
Share
request.
this to Naresh, sir. He will share in the group.
Yeah, I've already shared with him, therefore he can share with you, no problem.
Thank you so much, sir.
Yeah. Now, a stockbroker, a share broker can trade on your account only when you have placed an order. It is in 2017, SEBI has brought a rule saying that every order placed by a customer has to be recorded, and documentary evidence. Evidence has to be shown to the regulator that every trade is done only on the basis of an order. Earlier, what used to happen was there were some trades being done even without order or with a understanding. I told you blind trust, So with an understanding between customer and the client, the customer and the broker, they used to trade. And if the loss in the trade, then the customer and the broker will keep on fighting, saying that why did you trade, and all that. In order to prevent that situation and ugly picture situation, what the regulator has said now is that for every trade that you want to do, there should be a particular, there should be order behind it, and the order should be recorded with the stockbroker. The moment order is recorded, the problem is solved. That is, even if the profit or loss, since there's an order placed by you, when you question him, why did you do the trade, he will show your order back to him. If he's not able to show the order, you can say you have done it without my consent. It is called as order trade without consent, and it will be easily accepted by regulator, and broker will be made to pay the full money back to you, full compensation back to you. That's an important point to understand. Then what happens is, how do you think that price in the stock exchange is decided? Today, State Bank of India is being purchased or sold at 230 rupees. How do you think 230 is correct? For this, stock exchange has brought what is called as a pre-open trading session. They said something called as a pre-open trading session. The pre-open trading session will run for about 15 minutes before the market starts. Market starts at 9:30. Between 9:15 and 9:30, there's a pre-open session. In pre-open session, without any obligation to deliver, people will place orders as to what they want to buy and at what price they want to sell. The average price, weighted average price that is arrived at in that pre-open session will become the starting price for the day. And who will participate in the pre-open session? Everybody can participate, no problem. There's no bar on that at all. So people can participate. And let us say there's a beautiful news yesterday saying that State Bank of India has made its profit doubled last quarter. The moment it got doubled last quarter, everybody will have a very positive view on State Bank of India. They want to pay more price for it. It was 200 rupees yesterday. Today they will be interested to pay something called as a 230 rupees or 250 rupees. That is how they try to do it. So the pre-open session is a no obligation session without obligation to deliver or pay money. They set their price stone, and the 15 minutes auction will happen. After that, that becomes the benchmark price for opening price on the day for that day. So this is a very important this important rule. 1 minute, please. 1 minute. I'll just take half a minute. I need to call you back. I'm in a session. I'll call you back. Then there is one more prevention activity, protective measure taken by trading system, is that risky stocks are in a separate trading window. Both on NSE and BSE, risky stocks are taken away from the normal stocks. There's something called as a trade for trade stock. That is, you can't buy and sell the stock just like that. For every trade, you have to deliver short shares or give money. Whereas in the case of normal trade, you can do a gross. Let me explain to you. What happens is in normal market, let us say you buy 100 stocks 5 times and sell 100 stocks 4 times. What is the net purchase? 5 times 100 purchased, 5 into 100, 500. 4 times you sold, 4 into 100, 400. So net buy is 500 minus 100. You have purchased 100 shares net by the end of the day. So you have to pay 100 money for only 100 shares end of the day. Whereas in case of a risky stock, which is not a good stock for everybody to buy and sell, the situation is different. What they say is, in this case, it's called trade for trade. That is, for every 100 shares you purchase, you have to give money. That is, you have to give money for 500 shares and you will get money for 400 shares back after 2 days. That is, for 2 days, you have to invest 500 multiplied by what is the price of the share minus 400 multiplied. You have to wait for so much, two more days. First, you have to pay money, and 2 days after that, you will get money. Whereas in the case of normal market, you will have to pay only shares for money for 100 shares. You will get 100 shares as your delivery for your purchase. So trade for trade is an important thing. For example, the Bombay Stock Exchange, it is called as a Z stock shares. Z stock shares are fall-through shares. That is, if you buy these shares, it's not going to be very good for you. It's very risky. That is, the shares was sold at 100 rupees yesterday. Today it's getting sold at 300 rupees. Why 300 rupees jump? Nobody knows. This is a risky stock. So they try to create this kind of a segregation of stocks, and if you have to deal only in the normal market, you will have a fairly smooth kind of a transaction because you will not have any difficulty. You don't have to run to the broker for getting cheated, etc., etc. Then in some cases, what happens is they impose what is called the margin. There's something called the margin in the stock market that you should understand. What happens is every buyer and every seller has to pay something called the margin. Let us assume that I want to buy stocks worth 1 lakh rupees. What happens in the stock market is, if you say I want to buy 1 lakh rupees worth of stocks today, if I place an order today and your order has become a purchase trade in the market, you have to pay 1 lakh rupees after 2 days, and after 2 days only you will get shares for the 1 lakh rupees. But in order to say that you are a very serious buyer and your intent is correct, you will have to give something as a earnest money or a margin money. You have to pay about 20% or 10% depending upon the stock. You have to pay 10% of 1 lakh rupees to the stock exchange first, and after 2 days you can pay 90,000 rupees. So 10,000 you have to pay first. So what they do is, in case of a risky stock where they think not many people should participate, the margin will be increased from 10% to 40%, 60%. And there are some cases where they keep margin as 120%, more than the price of the stock itself. So that you will understand, why is he asking so much money? You feel a little aback, and then you will go back and say, no, I don't want to buy this stock because it's a very risky stock. So the risk involved in the stock is communicated to the margin system by stock exchange. It's a beautiful protection measure. If you ignore it and go, what can you do? Let us say on the highway when you are traveling, they put a speed limit, 80 kilometers, 100 kilometers, 120 kilometers and all that. You want to go at 160 kilometers speed on a road which is fit for 40 kilometers speed, you'll end up in an accident. Nobody can help you. So there are enough indicators for you to protect yourself. You ignore it, you will take a risk. If you follow it, you are fairly protected. That's what they do. And then not only that, in addition to this, the risk measurement rules are introduced within the trading screen itself. If you do internet trading, or if a broker is trading for you, they have put some rules on the trading screen. For example, you wanted to buy 1 lakh rupees worth of securities, 1 lakh rupee value of securities. Instead of putting 1 lakh rupees in that, you put 1 lakh State Bank of India. To give you example, State Bank of India is being sold at 200 rupees a share today. So for 1 lakh, how many you will get? You will get 5,000 shares. Okay. So you wanted to write 5,000 State Bank of India shares purchase. That's what exactly you wanted. But by mistake, you put 1 lakh by quantity instead of 5,000. What will happen? You'll have to pay 1 lakh multiplied by 2, which is equal to 2 crore. On that margin is equal to 10%, which is 20 lakhs. Okay, you have to pay 20 lakhs margin, and if the trade gets through without even if you don't ignore it, the trade gets through, you don't pay that kind of margin and you don't collect the money, there's a lot of fines and penalties on you. In order to protect you from this, they keep a restriction on the screen itself. That is, they will say, you can actually set for yourself, maximum value limit is 1 crore, maximum value limit is 10 lakhs. You can put on the screen yourself. Even the broker also can put a limit saying that, oh, Narasimhan cannot trade more than 5 lakhs for every transaction. Narasimhan cannot trade more than 50,000 for any transaction. That is how they can put a limit. The moment you ask for an order for Narasimhan, the system will tell you, the computer will say it is Narasimhan's order, it cannot exceed 50,000 rupees in value. It is Srinivas' order, Dr. Naresh Reddy's order, it cannot exceed 1 crore rupees in order. It is Srinivas' order, it cannot cross 50 lakhs in order. That is how the screen itself will have risk measurement measure so that you are very well protected. That's how they do it. Not only that, even sometimes even the broker manager himself will be having a maximum limit. That is, a small time broker in a small village. So total value of trade that you can do in a day can be what you call restricted. He cannot have more than 1 crore total value of transactions for the day. That's how they can put a lot of restrictions, which will protect you all. Then there's one more thing called a circuit breaker. That's also a very important measure that has been put. Assume for a while that the price of a stock is increasing very rapidly. For every 2 minutes is increasing 5%, 3%, 2%, 10%, 10%, 20% goes on increasing. So stock exchange has got a right to say that the stock cannot grow more than 5% in so much time. cannot grow more than 10% in so much time, cannot grow more than 20% in so much time. They keep a limit. That's called circuit breaker. The moment you have hit 5%, you cannot grow but beyond that. No trade will be allowed. The stock will be stopped from trading altogether. With this, what happens is people will say, hey, why is it my trade is not happening? You will say, hey, the circuit breaker has come. Why did the circuit breaker come? Circuit breaker is reasonable, not reasonable. Why the 5% growth in the price? All these discussions come. Once you discuss it, then okay, oh, this is a bad stock. But people start saying, I don't want to buy this. Then go away. Or people say, I don't mind buying it. Let us assume for a while. The profits of State Bank of India has become 3 times more in the last quarter. Therefore, the prices will jump by about 10%. But if it is going by 10%, some people without understanding the news, they want to go and buy the stock. But at 10% it will say stop. I will not allow State Bank of India to be bought and sold anymore for next half an hour. When it stopped for half an hour, all of us start discussing why State Bank of India is stopped for trading. Oh, it has grown by like this. That's then fine. This 10% growth is all right. We don't mind accepting it. Therefore, 10% growth is allowed. And after half an hour, they open. On the other hand, let's say State Bank of India has lost profits and now gone into deep losses. And then prices are going up or prices are going down. Then all of us will sit down. The moment it is circuit breaker, all of us sit down. All the investors will sit down and think for a while. State Bank of India has entered loss. How can the prices go up? If the prices are going up, something wrong. Let us not trade. So people who don't like to trade, they will withdraw, and that's how they put sense into the people. When the market is becoming mad, in order to make sense into the market, they apply what is called the circuit breaker. In addition to that, there are several other order types in the system where you can say stop loss order. That is, when you make an order, you can say stop loss 200. That is, it will not go beyond 200 rupees at all. That is, you are a buyer, you put a stop loss order. So it will not buy above 200 rupees at all. If it is a market order, it will go and buy whatever the price market is available. This is what exactly happened. Let us suppose for a while, you have a younger brother of 12 years old, and for Ganpati Chaturthi, we wanted to buy a Ganpati idol for home, and you are busy with your examinations. You send your 12-year-old son or child to buy the Ganpati idol. What will you say? Go buy an idol, but if it is more than 150 rupees, don't buy, come back. So what you are saying is, his ability to buy is only up to 150 rupees, not beyond that. So if it is 150 rupees, you are willing to take the risk to that extent. But on the other hand, above 150 rupees, you feel that your brother will be cheated, and therefore you will say you come back. Similarly, you can have this kind of a what you call order type, stop loss orders or market order, or let's say there are 6-7 types of orders that are there. I don't want to go into all those details now. So this kind of orders types are there. You can use the order type also to see that you are trying to protect yourself, trading on the stock exchange. Any questions, please? Okay.
Please continue, sir.
Okay, I'm going to the next one. Similarly, so when you're going to buy in the public issue, even there they have given some kind of a protective measures for you. First and foremost requirement is called as a anchor investor requirement. It's a very beautiful measure that has been brought in by SEBI. What they do is, whenever the public issue is opened, we are using what is called as a book building process in our country to fix the price of a equity share. In a book building, all investors will go and bid their prices, and based on the bids given by the investors, price will be fixed. But how does an investor fix the price for the equity? How does he do the valuation? What is the base on which he can do the valuation? You and me, who are going to invest about 25,000 rupees, do we have the capability to value a 1,000 crore company? Mostly no. We may not have the ability to value the 1,000 crore company. But SEBI has introduced a concept called as an anchor investor concept, where they say that there are not less than 2 anchor investors should invest, and each of them should invest not less than 10 crore rupees in a public issue, and their price have to be made public to the people. So what happens is, a person who's going to invest 10 crores in the company, he will be doing a lot of study. He's not going to blindly invest. He will do the valuation. He will examine the business model. He will understand the business of the company. He will have the background of the company examined. He will check the background of the management examined. All that done, and then say, okay, this company's share 260 rupees per share is okay, reasonable price. And they say, I'm going to invest 260 rupees per share. That's how we invest. This investment has to happen before public invest into the company. That's the first requirement. And secondly, the price at which anchor investor will be made known to the public also. So public knows that a person who has invested 10 crores rupees in the company is investing at 260 rupees. Now that you have got a guidance, you may also bid for 260, you may bid for 240, you may bid for 280 depending upon what you want to do. Now the best part I'll tell you is that if the retail investors, you and me, all of us have agreed to, let us say, invest at about 280 rupees and anchor investor invested at 260. Can he go away with 260 rupees? No. Anchor investor also has to give that additional 20 rupees. That's the rule for them. So anchor investor cannot benefit. Anchor investor can only be a guide to the public to be able to invest into the public issue. That's an important facility that has been brought in by the regulator. Next one is that second important facility, cut-off price facility, is again a very interesting facility for the public point of view. How can I say what is the right price for the shares? I don't know. But some of us will know, some of us don't know. Let's assume for a while, in about 1,000 investors, 600 people don't know, 400 people know how to price these shares because they have got advantage of QIB. There are some mutual funds invested. They also know how to value the security, etc., etc. Therefore, now, based on that, they all have bid it. Now, company says that anything up to 260 rupees is acceptable to me. So, 260 becomes cut-off price. So, small investor, you and me type of investor, we don't have to write a price in application form. We can say cut-off price. We can simply say cut-off price. When you say cut-off price and make an application, the application will be accepted. No problem at all. That's an important facility that has been brought in. Next facility is called as ASBA facility. And you find out the full form of ASBA yourself. I don't want to go for that. ASBA facility is wherein what used to happen earlier, before 2012, 2013, what used to happen, 2008 if I'm right, what used to happen is, if you wanted to make an application for a company shares, you have to give the full money for application to the company along with your application. And application will be considered, allotment will be done. After allotment is done, whatever the amount you have given for application, if full shares are allotted to you, then money will be kept by them. If allotment has been done for a proportionate amount only, the balance will be returned to you. So the money is with the company until allotment is made. Let us take the example of Happy Minds case, which is oversubscribed by 150 times. It is oversubscribed by 150 times. That is, if you have applied for 150 shares in the company, you will get allotment of only one share. Please understand. If you have applied for 150 shares, you will get only one share allotted. So before 2008, what used to happen is 150 shares multiplied by, let us say, 100 rupees per share, 100 rupees. 150 multiplied by 100, 15,000 rupees you must have invested and waited for 21 days. After 21 days, they will take 100 rupees from you and give 1,400 rupees back to you. And if they don't give 1,400 rupees back to you within time, then it's a problem for you because you have to follow up with the company and so on and so forth. It's your money after all. In order to see that all this headache is completely removed, SEBI has brought in what is called as a ASBA. It is completely technology-based facility, wherein whatever the application you are making from your savings bank account, amount is blocked to the extent of application made by you. So if you are making a 15,000 rupees application for Happy Minds, from your savings bank account, 15,000 rupees is blocked. Money will not go out of your account, but it's blocked only. Then the company will be intimated saying that Narasimhan has blocked 15,000 rupees in your favor. After 7th day or 10th day allotment is done for 100 shares. Then what happens is they will send a signal back or say instruction back to my banker saying that I want only 100 rupees from this blocked amount, release 1,400 rupees. So 100 rupees goes to the company, 1,400 rupees released. The beauty is that money is with you, money is safely with you, and only money on allotment will go from your account to the company, and against the allotment money taken by your company, you will get your shares credited to your depository account. In the demat account, you will find 1 share, 10 share, 15 shares, whatever shares allotted to you will get credited. Simultaneously, money has gone, account, your share account, the shares have been credited to your account. There's a beautiful kind of a situation. Therefore, they are completely protected. You don't have to wait for refund money. You don't have to worry for shares. Shares will get into your demat account. Money will go only for the shares allotted to you. There's a beautiful protection facility you have got. Therefore, grievances will come down. Then, important item is, I have discussed about anchor investor just now. What if anchor investor will sell the shares immediately on listing? What happens is, when you apply for shares in public issue, the shares will be listed on the stock exchange. That is, they start trading on the stock exchange. Normally, on the first day of trade of those shares, prices will flare up if the company is a good company. Prices will be subdued in the company is not a great company. Assuming for a company is a very good company, and prices have flared up. That is, what was paid by 260 rupees for anchor investor, on the day of listing, the share prices touch 300 rupees. The anchor investor will sell all his shares on the first day itself, make 40 rupees profits per share and go happily home. And after second day, the prices will fall down to 200, and you and me who pay 260 rupees will have to now take the loss. Can this happen? In order to see that does not happen, in order to see that there is no extra supply of shares in the market to reduce the price of the shares, the rule is that qualified institutional investors, that is big investors, institutional investors who have invested in the company and anchor investors in the company, they are not allowed to trade the shares until 30 days from the date of listing. For the first 30 days, only retail investors will have to trade. With that, the anchor investors and QIBs cannot run away with profits. You have to see that only retailers are trading in the market. That is how you will find that the market price will stabilize and there's no exploitation of the investor at all. You don't get cheated by the market. That's the point here. And the best part, final part is that in order to see that money, the moment you get shares, you want to trade and make money out of it. Therefore, the time gap between your shares and listing, getting shares and getting listed should be reduced. Now they have made it in about 7 days from the date of opening the issue. Listing should start. That's how the rules have been made. So all these measures are very interesting measures for what you call protecting the investors who invest in the public issue. Any questions now? Okay. Now we'll go to the actual investor grievance redressal measure. I've talked to you about the preventive measures so far. Now go toward the remedial measures. What happens? What happens? You have got a actual grievance. Something wrong happened, and you want your investor grievances to be redressed. What that you would like to do? As per the rule, thankfully, if you see that all intermediaries have to work under the supervision of some institution called Market Infrastructure Institution, MII, Market Infrastructure Institution, stock exchanges, clearing corporations, depositories. These three are categories as MIIs, Market Infrastructure Institutions. All brokers are controlled by stock exchange. All depository participants are controlled by depository. All clearing members are controlled by clearing corporations. That is how all these people are being controlled by other entities, and this depository, clearing corporation, stock exchange, these are controlled by SEBI. Therefore, SEBI can instruct these three institutions. These three institutions can instruct the broker, depository participant, and therefore there is instruction chain possible, supervision chain possible, due to which there is a lot of protection that's extended to the investors generally. Okay, so what's happening is, let us take the, so all these MIAs are supposed to have investor grievance redressal mechanism. I encourage all the students to access depository NSDL CDSL site, NSE BSC site, to say investor complaints, investor grievance mechanism. Go click there, you will get a beautiful procedure, download it. You will also see the complaints, category of complaints, how many complaints have been satisfied, how many complaints are outstanding without resolution and all that. You will find you are surprised that there are not many cases which are pending for more than 30 days. That is, investor has a complaint, a maximum of 30 days is taken for resolution. Today, this resolution level is about 17 days or even less than that. People who want to write an article in their journals can download all this data. I can write a beautiful article also on that in terms of how the investor grievance redressal mechanism is working in the stock exchange and deposit system. You can look at it. Similarly, every mutual fund is supposed to have a investor grievance redressal mechanism and process. Every mutual fund, go to mutual fund site and click there, you'll find investor grievances procedure there very clearly. So everybody has a beautiful investor grievance redressal, and every intermediary is responsible for investor grievance redressal. In case they don't resolve the investor grievances, the huge action is taken by SEBI itself. SEBI has set up something called as a SEBI Complaints Redressal System, SCORES. SEBI Complaints Redressal System. It's a portal. It's a internet-based system. You don't have to post. You don't have to go to the post office. You don't have to write anything in English. You can just go, download on the screen itself. You can fill up your complaint and submit. That's all. The moment you submit it, you'll have a number for your investor grievance, and you can track your investor grievance based on the pattern number continuously. If it's an investor complaint against a mutual fund, it will go to the mutual fund concerned. If it's a complaint against a broker, it will go to the broker concerned. It's a complaint against the deposit department, it will go to the deposit department concerned. It's a complaint against the company, it will go to the company concerned. All of them will have a compliance officer. All of them will have a investor grievance redressal officer, and those officers are responsible for resolution of the complaint. In case they don't resolve the complaint, they'll be taken to task by their board of directors, by stock exchange, by SEBI. Therefore, there are so many people looking at the investor grievances system in the country, and therefore you find fairly good amount of resolution done in our country. Then SEBI will monitor, and you can track you can also track your complaint very continuously based on the number given to you. And then investigator is transparent reported to websites, and all websites also will give you how the status of investor redressal is happening. You can check them. Any questions? Any questions? Okay. Fine. Now we have I'll go to further down in details now. What they said is, with the complaint against the broker, let us suppose for a while, the broker is primarily responsible for resolving the complaint.
Mute చేసుకోమని చెప్పండి
Somebody that has been muted, please. That has been muted, please. Okay.
సార్ ఇప్పుడు లింక్స్ ఉన్నాయి కదా సార్ మీరు చెప్పేటి వెబ్సైట్స్
ఉన్నాయండి.
ఆ వెబ్సైట్స్ క్లాస్ అయిపోయినాక అంటే ఎండ్ అవ్వ ముందు లింక్స్ ఒకసారి చెప్పండి సార్.
చెప్తాను.
అంటే ఇప్పుడు www.
చెప్తాను.
Okay sir, thank you.
Okay. Now the question I'm saying is that every broker or mutual fund is supposed to have investor grievance redressed. If the broker does not redress the grievance, stock exchange will come into play and say, why are you not resolve the complaint? Then broker has to resolve and answer the question. But broker says, I am correct, investor is wrong. Investor says, I am correct, broker is wrong. Then what happens is, stock exchange will set up something called as a reconciliation meeting. They both are asked to come for a meeting. This meeting can happen on the phone. This meeting can happen in physics. It can happen in the nearest town also. They have got about 18 offices across the country where they can go to the nearest office and have a reconciliation meeting done. In the reconciliation meeting, there's one person who understands the business very well. He is not from SEBI. He is not from stock exchange. He is not from broker's office. He is an expert in the subject. He is a third party outsider. He will sit there, listen to both broker and the investor, and he will make a decision saying that who is right and who is wrong. If the order is that investor is wrong, investor can't do anything about it. Investor has to only go for arbitration. If broker is wrong, then investor, the officer who is going to say broker is wrong, say that you have to pay the money immediately. 50% has to be paid to the investor immediately. If he does not pay within 7 days, stock exchange will cut money from the deposit of the broker and give money to the investor. So because stock exchange has got deposit to the broker, happily they will cut and give the money to the investor. That's how investor will protect it. 50% money will come, and after 50, after sometimes full money has to be paid by the by the broker. He will be given another 7 days to pay the full money. That's how the what you call that's how the procedure has been set up. It's called as investor grievance redressals committee or reconciliation mechanism. If both either broker or the investor is not satisfied with the decision taken by the IGRC, they can go for arbitration. This arbitration is not anything outside within the stock exchange itself. Stock exchange will select eminent people not related to stock exchange, but people who are like lawyers, judges, retired income tax officers, retired bank managers, kind of people. They are appointed as arbitrators, and the arbitrators list is available on the stock exchange site. You can go and select whichever the arbitrator you want. You can go and select them. So that arbitrator will sit for your arbitration. He will listen to both broker and investor, and he will make an award. That award has to be implemented. If within 7 days of award, the broker has no complaint, money has to be paid. If the broker has not paid the money, his deposit will be cut and money will be given to the investor. There's a procedure given. There's a beautiful system that has been brought into existence. In case of other countries, other so-called developed countries, in case of dispute between broker and the investor, they have to go to court, civil court, which may take long time. In our country, no such civil court can happen within the stock exchange mechanism itself, which can happen. Say, you have a complaint in Hyderabad, it can happen in Hyderabad. If you have a complaint in Vijayawada, Vijayawada can have it. If you have a complaint somewhere in near Surat, Surat has an office. That's how the office have been kept about 18 places in the country, and you don't have to go anywhere. Within those 18 centers, you can have the redressal done. It does not require advocate. You can argue for yourself. You don't appoint any professional for that. You can argue, you can submit your papers, evidences, and you can actually do all these things. So the beautiful facility that have been brought in. Any questions, please? In addition to this, in case there are a lot of complaints against a particular broker, stock exchange and SEBI will go for inspection on the broker. They will check why that so many complaints are coming in, and they will take enforcement action. Enforcement action may be a penalty. Enforcement action may be suspension. Enforcement action may be expulsion. There can be any type of action. For example, we are talking about Hyderabad. In the case of Hyderabad, we had a Carvi issue. Carvi has been expelled from being a broker now. Their monies have been taken away. Their properties have, not properties, but all their liquid stocks have been blocked, and the money is used for the purpose of paying compensation to the investors. So SEBI has got enormous enforcement rights with them, including expulsion. That is, they can remove the brokership, they can remove a mutual fund, they can remove a portfolio manager, they can remove a credit rating agency, they can do so many things. SEBI has got that extraordinary powers under Section 11B of the SEBI Act, and that's how they will take all the enforcement actions. That's what exactly they do. So in case compensation, in case of compensation, there's a limit of compensation. They will not compensate more than 25 lakhs. If the broker goes bankrupt taking your money, he has taken your money not as a deposit, but let us say he has sold something for you, but he has not paid you money. He bought something for you, has not given you shares. In such cases, for this trades that have been done on a stock exchange at your order by the broker, if the broker is not able to fulfill his action and because of his bankruptcy, in such cases, a protection is given up to about 25 lakhs per transaction per investor is given. That is a kind of compensation that is not per transaction. 25 lakhs per investor is what maximum amount of compensation that is given by Investor Protection Fund. National Stock Exchange gather about 160 or 600 crores of such compensation fund, and BSE is having about 200-250 crores of compensation fund that is used appropriately wherever the compensation has to be given. This is all about capital markets. In other cases like RBI, IRDA, they have got ombudsman. You can make an application to the ombudsman using a portal that is supplied by you. Ombudsman is like a judge, like an arbitrator. He will hear to both the parties and settle the grievances and ask the compensation to be paid or try to settle the grievance. And in the case of deposits with the banks, the deposit guarantee scheme is there. I think the deposit guarantee, the maximum of 2 lakhs. So even if you make 2 crores of deposit in a bank, you will be protected only of 2 crores. Balance of 98 crores is hanging in the balance. There's a complaint many fixed deposit holders are making against the banks, but that's the reality of today. That's how other sectors of investor grievances done. This is all the framework that we have got under this investor grievance protection regulatory framework. This is what I wanted to say. I am open for questions and answers.
Yeah, any questions from the participants?
Yeah, please. Any questions?
Please post your questions in the chat box.
Yeah, book building. I have some questions. I'm answering them in an order. Okay, I've opened the chat box. I'm trying to answer from the questions. First question, Mayank is asking. No, not Mayank. Good information. Data science company. Okay.
Pravalika,
Mayank has nothing to say. Okay. Okay. There's a question saying that what is book building? Is it a part of IPO, sir? That's a good question. The question that comes up is that whenever the shares are issued in the public issue, what should be the price for the equity share is a question that comes up. So the answer to the question is that it is not anybody who's going to fix the price. It is the market that's going to fix the price by what is called as a bidding process. Everybody, there is a merchant banker who keeps a book, electronic book, in which he will enter the bid that everybody is putting in. Each one can put a bid saying that I want to buy the shares at 260, I want to buy the shares at 280, I want to buy the shares at 320. Whatever price you want to put, you keep on putting it. Company has something and accept. Company has an expectation. Company expects that the price should be about 310 rupees. So company says, okay, I have built the book now. People are willing to give me 260 to 350 rupees per share, but 310 is a good price for me. I at 310 rupees, I accept the price of the share. So 310 is the accepted price. All the bids above all the bids above 310 will be brought to 310, and all the bids below 310 will be rejected. So people who have bid 310 and above will get shares. People who have not bid 310 will be rejected. They will not get the shares. And if somebody people says at cutoff price, since they don't know what the price, if there is a cutoff price at 310, they get the shares allotted to them. So book building is as you said rightly, it's a part of your public issue process. That's a way in which price is discovered. Yeah.
another question is ASDA.
That's ASBA. He has given full form. That I'm okay with that. There's one question saying that when the company was issued green shoe option on the shares. Green shoe option is a kind of a permission given. I don't know to go into technicalities of it. I'm just giving the concept behind it. Let us suppose for a while, a company has filed a prospectus saying that I want to take 1,000 crores rupees towards equity from the market. Okay. And the shares are oversubscribed by so much. Within the prospectus itself, they will say, company retains a green shoe option of accepting another 100 crores. That is 1,000 crores plus 100 crores. The additional money that they can accept from the market is called green shoe option. In very layman terms, there are some technicalities behind it. I don't want to go into that. But from the concept to retain which is little more than the target amount is called green shoe option. Okay.
Yeah, any more questions?
Okay, somebody was interested in asking the links to be given. You have www.nsc national. You Google for National Stock Exchange, National NSC site. You go, you will get everything about National Stock Exchange. You go to SEBI, SEBI. You get everything about SEBI from that site, sebi.gov.in, and BSC, Bombay Stock Exchange, BSC. You go there, you will get every information about BSC. NSDL, National Securities Depositories Limited, NSDL will give a lot of information about NSDL from their site. CDSL, Central Security Depositories Limited, will give a lot of information about CDSL. IRDAI, Insurance Regulatory Development Authority within Hyderabad.
India.
Yeah, that is, you can go to IRDAI and take a lot of information from them. You go to PFRDA and take information from them. You can go to RBI and take information from them. Therefore, there are a lot of information available on their respective sites. It's not a no-brainer. Just Google it, you'll get it. So I'm done from my side. It's for you, Dr. Naresh.
Yeah, thank you, sir. Thank you for your extensive lecture on protection measures. You have covered protection, preventive measures, remedial measures, compensation measures, right? These are the certain important measures you have discussed, sir. Sir, we are very much grateful to you for your presentation and your presence here. So thank you, sir. Thank you very much.
Thank you very much. Thank you. Thank you.
Right.
Sir, Murthy sir is waiting, sir. Hello.
Yeah,
Hello, sir. Sir, Murthy sir, unmute yourself, sir.
Yeah, good afternoon.
sir, good afternoon, sir.
Good afternoon.
Start your video, sir.
Can I start the video? My video రావట్లేదా?
Yes, sir.
Okay.
ఇప్పుడు వస్తుందా?
రావట్లేదు, సార్.
రావట్లేదు, సార్.
అదేంటి?
అన్మ్యూట్ చేయండి.
అన్మోట్ మాట వినిపిస్తాం కదా?
వినపడుతుంది సార్, మాట వినపడుతుంది.
మీ పేరు వస్తా ఉంది, సార్.
రామకృష్ణ. బాగానే మళ్ళీ లాగిన ఏమైంది? మీరు ఆన్ చేయొచ్చా అది?
మేము చేసినాం సార్, ఇప్పుడు మీరు చేసుకోవాలా?
కాదు, మీరు కనిపిస్తుంది అది.
కోహోస్ట్ చేసినావా వెంకట్?
సార్
కోహోస్ట్ ఇచ్చినావా?
ఇచ్చిన సార్. సార్
మీరే మ్యూట్ అన్మ్యూట్ అని మీరు చేసుకోవచ్చు, పర్మిషన్ ఇచ్చింది.
రామకృష్ణ అధ్యక్ష కాదు,
యువర్ కోహోస్ట్ సార్. చెప్పండి సార్.
నా దాంట్లో వీడియో రావట్లేదు. నేను ఓపెన్ చేసాక మీరు ఓపెన్ కదా?
వీడియో
అంతే సార్. మా సైడ్ నుంచి క్లియర్ ఉంది సార్, మీ సైడ్ క్లియర్ చేసుకోవాలి. అంటే మీ వీడియో ఆన్ చేయాలా?
ఆన్ చేసాం, రావట్లేదు. ఇది నేను ఆడియో నేను ఆన్ చేస్తే నేను కనిపిస్తాను మీకు, అంతేనా?
మీరు మాకు కనిపిస్తారు మీరు ఆన్ చేస్తే.
కాదు, మీ వీడియో మొదలుపెట్టి లోపల పని నేను ఈ లోపల మా వాళ్ళు పిలిపిస్తాను. కెమెరా రావట్లేదు ఇక్కడ, కెమెరా రావట్లేదు. చెక్ చేయలేదండి, మైండ్ వెళ్దాం. లేకపోతే ఇదే అంత ముందు అప్రోచ్ చేయడం మర్చిపోయారా ఏంటి? మళ్ళీ అవుతానండి, మళ్ళీ లాగిన్ అవుతాను.
ఓకే సార్, వీఆర్ వెయిటింగ్.
బాగా ఫైట్ అయింది.
పేరు ఎట్లా కంపెనీ
సార్ మూర్తి సార్ మీరు చేస్తారా తను చేయమంటారా సార్?
చేయండి, చేయండి.
వస్తుందా సార్?
వస్తుంది, రాలే ఇంకా వస్తుంది. స్క్రీన్ షేరింగ్.
ఓకే.
యా, వచ్చింది.
రైట్.
ఈ ఆప్షన్స్ ఆయనకుంటే మనకు జరుగు. నేను కింది మీద జరపడం మనకు జరిగేది. అదే ఎవరు షేర్ చేస్తే వాళ్ళు. మూర్తి సార్ కనబడతలేడు.
సార్ మూర్తి సార్ వస్తే మీరు ఇన్ చేయండి సార్.
ఏంటది?
మూర్తి సార్ వస్తే ఇన్ చేయండి, నాకు కనిపించట్లేదు.
ఓకే ఓకే ఓకే.
నేను కోస్ట్ ఇస్తాను. సార్ మూర్తి సార్ అన్మ్యూట్ యువర్ సెల్ఫ్ సార్.
హలో. మూర్తి సార్
చెప్పండి అమ్మా.
సార్ ఆన్ చేసిరా సార్?
లేదు, కెమెరా ఓపెన్ అవ్వట్లేదు, ఇది వస్తుంది కానీ వాట్ మిస్టేక్ స్టార్ట్ మై వీడియో. ద హోస్ట్ ఆస్క్ యూ టు స్టార్ట్ వీడియో. ఓకే, స్టార్ట్ వీడియో. అందులో ఎలా వస్తుంది? రాదు కదా.
మీ పీపీటీ కనబడుతుందా సార్?
కనిపిస్తుంది.
ఓకే,
లాగించారు దాంతో.
మరి మాట్లాడండి సార్.
ఇది వెంకీ ఫోన్ చేయండి.
సార్ మీరు నెక్స్ట్ అని చెప్తే నేను ఫర్దర్గా ప్రొసీడ్ అవుతుంది సార్. మూర్తి సార్
అలాగే స్టార్ట్. మీరు మొదలు పెట్టండి, నేను ఇస్తాను. నా బొమ్మ కనిపిస్తుంది అంతే కదా ఇప్పుడు?
అంతే సార్.
ఈ లోపల నేను చేయిస్తాను
సార్. యా, వెల్కమ్ టు దిస్ సెకండ్ సెషన్ సార్. డాక్టర్ మూర్తి సార్. సో డాక్టర్ KCHAVSN Murthy garu. Sir, I am very much thankful to you for accepting this particular proposal to address the students on income tax in India or in simple tax planning. of individuals. So, sir has completed BCom, FCMA, FCA, Chartered Accountant from 1981 onwards, taxation and auditing, public speaker, appears on television, columnist, author of books on taxation and standards. So there are so many capacities and under, for example, in CMA, Sir working as Central Committee member. Sir involved in various committees in setting up of the standards. Now, not only that, active member in Hyderabad chapter, CMA. Now, Sir is a very senior cost accountant and chartered accountant. And not only that, you can't forget Dr. Murthy sir. Now, because of his humor, now you are going to enjoy the way he presents. Now, sir, thank you, sir, for your acceptance. Yeah, please start your session, sir.
Okay.
సార్ మూర్తి సార్
Yeah.
స్మాల్ థింగ్ సార్
చెప్పండి.
మీ దగ్గర ఎవరైనా టెక్నీషియన్ ఉంటే మీ మొబైల్ కెమెరాని ల్యాప్టాప్కి కనెక్ట్ చేయొచ్చు సార్. అట్లా ఒకసారి ట్రై చేయమని చెప్పండి.
ట్రై చేస్తున్నారు, సైమల్టేనియస్ ట్రై చేస్తున్నారు.
ఓకే ఓకే.
ఇప్పుడు వితౌట్ వేస్టింగ్ టైం విల్ స్టార్ట్ ది లెక్చర్.
ఓకే సార్, షూర్ సార్, షూర్.
మా అబ్బాయి హెల్ప్ చేస్తాను నాకు, బట్ కాల్ దట్ అప్పటికే మనం బాగా డేట్ అయిపోయాం కదా.
Okay, sir, no problem.
ఐఎమ్ ఏబుల్ టు సీ నరేష్ రెడ్డి అండ్ both of you.
Okay.
Very, very good evening to all of you. Mr. Naresh Reddy and other lecturers, dear students. First, let me thank you sincerely, the Usman University Commerce Department of Commerce, for giving me a chance to be with you today to share some of my thoughts on the subject of income tax. We will briefly touch income taxation in India. Briefly, but full income tax I wanted to cover, given chance. Let me try. Next. This is ancient taxation. If you refer to book called Raghuvamsh written by Kalidas, he talks about taxation. He says that taxation should be collected from the payers like honey is collected by that worm. Without pinching them, we should collect. That's what he says. Then comes Manu. The Manusmriti talks about taxation. Then Kautilya, the worldwide famous economist hailing from India, talks Arthashastra. It is about people, it is about kingdom, it is about everything, finance, everything. It's how in Kautilya. And we will come to Hyderabad. Sultan Shah is also very good for taxation. I will also tell you that their commerce friends or accounting friends, please note that in Ramayanam, when Rama is in Vanavasa, Bharata goes to see his brother. The first question is about the welfare of the people. The second question is about the finances of the kingdom. He asks, are receipts are more or not? How is your expenditure? This means this accountancy or taxation is not yesterday's development. It is as old as Ramarajya. In Mahabharata, Draupadi is in charge for accounts, and so also Nakula. And Krishna talks about accountability in Bhagavad Gita. So what subject now we are going to have is not a new one or a new development, it's old one in new bottles. Next. We have got already ancient taxation. Now we will talk about modern taxation. Before independence, we have got our own act called Indian Income Tax Act 1922. We got freedom in 1947. And in 1961, we have our own act called Income Tax Act 1961. This is our act now what we are reading. Next. You always normally find the finance minister of the country goes to parliament on 28th February normally. Of course, now the date is changed. He will go to parliament with a suitcase. 4 people will escort him, follow them. He will present budget in the Lok Sabha. All 542 parliamentarians will be presenting there. They will listen him, clapping, against, for, in. That is how budget becomes finance bill. Finance bill becomes finance act. The moment president signs the bill, and then it becomes part of the Act 1961. Then we have got IT rules, which have come in 1962. Then we have got CBDT, which is the head administrative authority of the entire income tax matters in the country. We have various judgments given by Supreme Court, High Court, and Tribunal. Next slide. Same thing I represented through pictures. Budget becomes finance bill. Finance bill becomes finance act. And then it becomes integral part of 61 Act. Whatever we read today, though it is latest, we call them as sorry for the disturbance. You are able to now see me? Yeah. Yeah. Thank you. Able to see me and able to hear me also? No? Yeah. Now, this comes Act 62 rules, and these are all administered by CBDT, and then comes the judgments of Supreme Court, High Court.
Sir, log out from one device, sir. Another device, which is not having camera. Please. Okay, perfect.
Sir, it is okay.
Audio less, sir. Hello.
Hello. Sir, audio problem.
Sir, Murthy sir, ఒకసారి మాట్లాడండి sir.
Sir, Murthy sir. Hello.
Speak something, sir. You are not audible, sir. Murthy sir, now you are co-host, sir. You can unmute and you can start your video.
Now you are able to hear me, no?
Yes, sir.
Yes, sir.
We will continue with this one key point.
Yeah, continue, sir.
Continue. This is how actually the act is made or implemented. The judgments given by Supreme Court, High Court, Tribunal will become part of the act. So at the end of the day, we have to read 61 Act, 62 rules, and all judgments. They will be applicable to us. Next. Now, briefly, I will pay tax on my income earned by me in 1 year of a person. Every word here has got a meaning, a definition: tax, income, year, and person. Next. Now, before that, we will understand what is meant by SSC. SSC means assessed to income tax. But these people are given 3 definitions. Anybody liable to pay income tax, whether interest or penalty, anyone, need not be only income tax. Next, any proceedings. That can be SSC. Third is any default. These are 3 people who are called assessed to income tax or SSC. Now there is one more word, looks very simple like the word person, but it has got a very, very broad meaning, person. I am not referring to sections here for our kind information. Don't go by sections, go by concepts. Person means individuals like you and me. HUF, Hindu Undivided Family. Ummadi Kutumbam under Telugulo. AOP or BOI. AOP means association persons. BOI means body of individuals. Artificial persons. Vyaktigata, I don't know what exactly. Artificial persons means if like God, deity. Societies and charitable trusts, partnership firms, and cooperatives, lastly, companies. All these 6, 8 are called person. Normally, English person means only a man or woman, but it's not so. So you should be very, very careful in the definition of any law, not only income tax. Next. Assessment year. Before that, we will know what is previous year. It is a very simple concept. Don't go by the exact meaning. The financial year, accounting year is nothing but year in which you earn income. Income year, financial year, accounting year means one and same. The income what earned in this year will be assessed by the ITO in the next accounting year. So the next year is called assessment year. Or from the language of income tax, if this is assessment year 2021, before year is called accounting year, income year, or previous year. That's how the word previous has come in practice. The Act talks about only previous year. It is simple nothing but in our own language, accounting year, income year, or financial year. But why we will not say like that? Means each one company or anybody can have their own financial year. That is the reason they use the word previous year. Okay, next. Residence status. We have got mainly SSCs or persons of 2 types, individuals and entities. We classify like that for easy purpose. The tax burden of any person depends upon the residential status. In simple words, if a person or individual or Hindu Undivided Family, if they stay some amount of period of stay in India, they will be deemed to be a resident. If a firm or entity, if control of management lies in India, it's called resident firm or resident company. Basically, in the case of resident, the income in India, the income in abroad, both are taxable. Okay? And in NRI case, which means non-resident Indian case, the income only in India is taxable. Rather, the other country where he stays, he will become resident, that country will tax him. So, at the end of the day, residence means that fellow has to pay tax on his income in India, and also income abroad. Okay. Next. Now, this is most confusing or controversial or confusing or important topic: capital versus revenue. In simple words, every receipt is not income. Suppose I received out of love and affection, that narrator has given me 1 lakh as loan. For me, it is receipt, but it's liability. I need not pay tax on that. So it is called capital receipts. So no capital receipt is taxable. Then comes revenue receipt. I am a practicing chartered accountant. I collect fees from my clients. The fees paid by the clients is called revenue receipt. This is taxable in my hands. Next comes capital expenditure. I have spent 10 lakhs on my furniture. I have spent 2 lakhs on electrical fittings. These 12 lakhs are not my expenditure. They are what you call capital expenditure. Revenue expenditure. I have employed 2 people and I am paying salary to them. I am paying rent to them. I am paying current bill, telephone. These are revenue expenditure. This is general concept. However, there are some exceptions in the Income Tax Act. For example, insurance policy matured. The amount is received is purely capital receipt. It's not taxable. But one more classical exception is I sold my property. I got good amount as consideration. This is taxable to the extent of gain. So, in simple words, no capital receipt is taxable, no capital expense is allowable. I always take care of revenue receipts and revenue expenditure. But there are many exceptions as per the law. Next comes heads of income. If you go to section 14, it says that we got only 5 types of incomes: salaries, income on house property, capital gain, profits and business gains from business or profession. The last one is residual category. అంటే ఈ 4 కాకుండా ఏది వచ్చినా కూడా, salary కాకుండా, house property income కాకుండా, capital gain కాకుండా, business కాకుండా ఏ ఇన్కమ్ వచ్చినా కూడా అది అదర్ ఇట్ విల్ కమ్ అండర్ అదర్ సోర్సెస్. ఇప్పుడు కెమెరా రావట్లేదు. రెడ్డి గారు 1 minute నేను బ్రేక్ తీసుకుంటాను. ఇట్లా కెమెరా వస్తుంది లోపల. ఏమి తీసిన పొరపాటు చేయట్లేదు.
గూగుల్ మీట్లోనా, జూమ్లోనా మీటింగ్?
జూమ్. I'm extremely sorry. Venkatesh, sorry. Now we'll
Okay,
continue.
sir.
We'll continue.
Yes, sir. We can continue. Just a second.
Thanks. No, I'll separate.
Sir, my screen is sharing.
Yeah, screen share, sir.
Okay.
Yeah. I will just again, I will start from this again. You are able to hear me, no?
Yes, sir.
Yeah. This is again nothing but the entire income, whatever anybody earns in 1 year, one financial year is divided into 5 parts: salary income, house property income, capital gains, profits from business or profession. But other than these 4 are clubbed under income from other sources. So, like for example, dividend, interest, rent on plant and machinery, anything other than these 4 will be covered under income from other sources. Next. Yeah. Now, this is exemptions. I got income from 5 sources. I add all the incomes, and then comes exemptions. Section 10 of Income Tax Act deals with more than 100 exemptions in income tax. For example, agricultural income is exempt. Mutual fund income is exempt. Societies, they are exempt on the basis of income-wise, income of entities. For example, from sports funds, some trusts it is exempt. And in capital gains, they are given some exemption. Best example is if I purchase a property, sell it, I got some consideration. Again, I will invest it. The investment in the new house is called a capital expenditure, and it is exempt. These are major types of exemptions what we read in income tax. Next, deductions. Each account of say 5 heads have got different deductions: salary, house property, business, profession, other income. Salary, you got 2 deductions, namely one is standard deduction, the other is professional tax. House property, you got deduction for the payment of municipal taxes, and then comes interest on loans. Business or profession is a big devotion. Any expenditure incurred for the purpose of business, for the purpose of profession, will be deducted. You have to establish to department that, so this is a genuine expenditure, I have really incurred expenditure, then this should be reduced or deducted. Similarly, depreciation, investment allowance, something what they have given, it can be exempt. It is called deduction. Then capital gain. Whatever expenditure incurred on account of transfer is a deduction in capital gain. The 5th one is other income. General principle income taxation is whatever I earn and whatever I spend to earn that income is fully exempt. Suppose I got 10 lakhs. I have given 10 lakhs to my friend for interest. He is paying me for every 1 lakh 20,000 rupees. But I have taken this 10 lakhs loan from my wife, to whom I am paying interest. The interest paid to my wife is my expenditure. Of course, this is also a big, good planning. One can think of it, proceeds and go ahead. Then comes direct 80, section 80. Section 80 again, it has got many such directions. Most of the employees will love it. Savings, contribution, for LIC, premium paid is exempt. Investments, for example, mutual funds. Expenditure, there are many expenditure. Live example is medical expenditure. Then comes interest on education loan. We take loan on education for loan on education and pay interest. That is exempt. Similarly, the interest paid on HBA, house building loan, is exempt. Rent paid, employees will be either getting HRA or they will be in their own house. Professionals like me or any businessman, he will not get that allowance. He gets benefit under section 80 GG which stands for rent paid, donations. So if you donate to recognized funds, you will get donation exempt. Similarly, income of certain agencies are exempt, and there are many others which are dealt with section 80. These are called deductions. Next. Next time, yeah. Again, this is the same thing I represented in a picture. 80C is nothing but investments. 80CCC is nothing but insurance premium. 80CCD is nothing but pension. Interest house property is interest on saving bank is 80TTA. 80GG is rent paid. 80E education loan interest. 80EE home loan. 80GGB is RGSS scheme, medical expenditure. Then comes disabled persons. Suppose we spend some amount on disabled persons, family exempt, medical expenditure exempt. 80U, the SSC is physically handicapped. We should not tell physically disabled. Divyangulu and Telugu Kotta Bhashalo. Divyangulu. If any physically disabled person earns anything, that is exempt up to 1 lakh. Similar 80G donation. Next comes company contribution. Next comes political parties. Next comes royalty of a patent. For example, our lecturers, they write books, they get royalty. Some portion is exempt. Similarly, interest income is exempt. That's all. Thank you. Next slide. Next time.
1 second. One second, sir. My net is disconnected.
No problem.
Sir.
నేను ఆపరేట్ చేయాలన్నది
లేదు సార్ వచ్చింది సార్.
ఓకే నాకు కనిపిస్తలేదు మరి.
సార్ ఇప్పుడు సార్
లేదమ్మా రావట్లేదు. నా బొమ్మనే కనిపిస్తుంది పెద్దగా.
1 second.
నా దగ్గర ఉంది. కంటిన్యూ చేయనా వద్దా?
సార్ చేయండి సార్.
నెక్స్ట్ ఈజ్ కాల్డ్, మీరు ట్రై చేయండి. నెక్స్ట్ స్లైడ్ ఈజ్ డీమ్డ్ ఇన్కమ్. సి ఇన్కమ్ ట్యాక్స్ very it is a voluntary act, but very, very dangerous act. Dangerous means normal common sense logic do not apply here. Normally what we say, any income is taxable. That's okay. But they told very clearly in section 62, 3, 4, 5 that deemed income అంటే అది నిజానికి యాక్చువల్గా మనకి చూడగానే వినగానే ఏమనిపిస్తుంటే ఇది ఇన్కమ్ కాదు, కానీ దే ట్రీట్ ఇట్ యాజ్ ఇన్కమ్. మనకి పాత ఇంగ్లీష్ సినిమాలో ఒక డైలాగ్ ఉండేది, కానూన్కి హాత్ బహుత్ లంబే హోతే హై అని చెప్పేసి. ఇక్కడ సేమ్. ఇక్కడ ఏంటంటే దిస్ ఈజ్ వెరీ డేంజరస్ ఇన్ సెన్స్ ఇట్ ఇన్క్లూడ్స్ ఎవ్రీథింగ్ ఇన్ ది వరల్డ్. డీమ్డ్ ఇన్కమ్ అంటే ఇన్కమ్ కాదు, బట్ ఐ విల్ ట్రీట్ ఇట్ యాజ్ ఇన్కమ్. ఐ మీన్స్ ద డిపార్ట్మెంట్ విల్ ట్రీట్ ఇట్ యాజ్ ఇన్కమ్. Income of spouse. Suppose my wife is there, we are partners, her income will be added to my income. Though I can't say that she is a partner, she is earning independently, and I can't. I have to compulsorily add her income into my account. One more classic example is minor. I got a minor son who is earning amount. Suppose interest, he has got 10 lakhs. I deposited in his name. That boy is getting interest. That income is added to my income. Actually, I will say that no, it's not my income. It's income of my son. It's technically, legally, evidence-wise, my son's name is there in the fixed deposit sheet, but I am taxable. Oh, thank you, Venkatesh. Next, daughter-in-law. In some cases, daughter-in-law's income will be added to the father-in-law. Like that, there are many deemed incomes in the Act which catch hold of you. So you should be very, very careful. Next. Next presentation. Yeah. Now, if I take all 5 incomes, 1, 2, 3, 4, 5, I will add them. It's called gross income. From that, I do deductions. I also implement all eligible deductions. Now the part here, if I have got more expenditure, means I have loss. There cannot be loss in salary income, ruled out. But in case of house property income, if my rent is less than what I pay interest to on the house building loan, for example, I am getting 10,000 rupees per month, 120 is my income on rental. I will deduct property taxes. I also deduct 30% towards maintenance. If still the income is only 130, if I pay to the banker or the man who gave me loan beyond 140, the excess is called loss. The one advantage in this act provided by the act is if I got loss income, loss, it is not income, it is loss. That loss can be set off against the income. Suppose I got 2 houses, I let out them. One is let out, one is self-occupied property. I have taken loan for both the properties. I am paying interest. One is loss, one is income. I can add these 2 things. It's called set off, cancellation, or what do you call? I don't know. That's a set off. That is set off. If I set off, I can set off headwise, inter-headwise. Salary, of course, there's no salary. Profit, income, house property wise, capital gain wise, other income wise, business wise. Even if it's set off also, if I still have a loss, it's called unabsorbed loss or loss which is more than the income earned. This loss can be carried forward to next year. You must be seeing many companies, they go on showing more losses to avoid income tax. They take advantage of this particular provision. They will be always having more losses than the income. The unabsorbed loss is set off and carry forward like that. That carry forward you can do up to 8 years. So this is one advantage for loss-making companies. But in those cases, after Chidambaram has come in 1991 or 92, they introduced an act called MAT, Minimum Alternative Act Tax. That means till that point, many people were not paying tax on the loss-making companies. But after introduction of that MAT, every company is paying at least, if not full amount of 30%, some amount is being paid towards income tax. This is briefly about set off and carry forward. Next. This is nothing but total income. I add all 5 heads plus deemed income, deductions, set off. The net is called either total income or taxable income. The total income is the word used by the income tax department. Nothing to worry. Don't go by the literal meaning. It is nothing but the taxable income in our hands. Next. This taxable income, we have got separate rates. I have already told you in the beginning, we got 8 types of persons. So the rates are different for each persons except individual and HUF. This is the individual limits, basic limits, slabs and rates. I'm talking about the latest year 1920 accounting year, which means current today's assessment year. We have 3 categories, above 80, 60 to 80 and below 60. General category, senior citizens, very senior citizens. I will just take one slab for kind information. We talk about general category. Up to 50, there is no tax. That means after adding all 5 incomes, After giving all exemptions, deductions, deemed income, your income is less than 250, you need not pay any tax and you need not also file the Income Tax Act. If your income is beyond 250 but less than 3 lakhs, you have to pay 5%. If the income is between 3 and 5 lakhs, again 5%. Then 5 to 1 lakh, 5 to 10 lakhs, 20, and about 10 lakhs it is 30%. Up to for senior citizens up to 60, there is exemption up to 3 lakhs. 80 సంవత్సరాలు అయితే 5 లక్షల ఇన్కమ్ ట్యాక్స్ లేదు. This is the benefit given to senior citizens. Next trend. Now, how do you pay tax? You means I refer always SSCR person. One should pay, any income tax payer should pay advance tax. That means every year in the month of April, you should estimate the income. What is my probable income and all exemptions and calculate the liability. I have to pay advance tax into 4 installments starting from June, September, December, and March. That means by March 31st, I should pay all the amount due in the head of advance tax. Now, next comes TDS. TDS is nothing but a tax. Somebody pays my tax. Means somebody, before he pays, he gives money to me, he will record 10% or 5%. It's a big chart there, chart. They will recover. For example, your lecturers, like Naresh Reddy, will not get full salary, whatever he earns. The university people will make a statement of him. He will add all salary income, less transaction, less savings reported by Mr. Naresh Reddy. On the balance, they will arrive at the tax. They will recover the tax and pay to government of India. It is called TDS. In case of persons like me, I am a practicing general accountant. Any client who pays me money, he will recover 10% of the gross bill and pay the difference on it. Suppose I raise a bill for 1 lakh. That man will not give 1 lakh to me. He will give 90,000 rupees check, balance 10,000 rupees. He will deposit straight away into the account of government. It's called TDS. I have paid advance tax. Somebody like bankers, employers record also TDS. With all that, if there is any liability still left over, if any liability is yet to be paid, that I should pay in the name of self-assessment tax. Names total liability of tax minus advance tax paid minus TDS done by the different people. If still some amount is left over payable, I should pay. It's called self-assessment tax. At the end of the day, if the tax is paid by you is more than the actual liability, you will get the refund from the income tax department. Next. Now, we have got now as it is law prevails, we have got 1, 2, 3, 4, 5, 6, 7 forms. These are very, very easy but time consuming. Nowadays, everything is only online. Form 1 is for individuals. Form 2 also for individuals. 3 slightly only individuals. From 4 onwards, it applies to only business people. 5 trusts. 6 companies. Again, 7 companies. We can call societies like that. It's very. I will again explain in the next slide only. Please, next slide. Yeah, we will touch them afterwards. First of all, I will go to due date. Due date means for every purpose, TDS, self-assessment, advance tax, returns filing, everything there is due date mentioned by the Act. Here I mentioned only 3 dates. This is nothing but filing of returns. If I have got international transactions, I should file well before 30th November. If I got only no internal transaction, I can file before 30th September. Otherwise, other cases 31st July. But current assessment year, because of Corona, government has given some exemptions. Now, every return, every person, be it individual or company or any tax site, anybody will have to file up by 30th November. Normally, it is 31st July, 30th September, November. These things will be normally dealt in the budget. Normally, when budget comes, everybody will be anxious to listen to the finance minister. They discuss all these things in this budget. So, tentatively, for the current assessment year, that means March 2020 financial year, the dates are November 30th. Otherwise, these are the original due dates for filing of returns of income. Next. What happens if you don't file return of income on due date? Dear friends, I am not going to for want of time, but there are 10 cases, 10 situations where interest is attracted by is charged by the government. For all those 10 defaults, you have to pay interest. There are such 10 occasions. Normally, they correct for every 100 rupees, 1 month, 1 rupee is charged. That means we are paying 12% interest to the government of India for any such default. Next. Penalty. Most dangerous one. You have got 960 penalties for various defaults, for false declaration, for not filing return, for not doing tax audit, for not filing a tax audit report. Like that, we got 60 penalties, and these penalties are really unbearable. Sometimes the penalty is equivalent to 300%. If they find a payer has not declared his income, has not shown his income as defaulter, they can levy a penalty of 300%. That means they want to discourage dishonesty. Normally, before levying penalty, they'll give you chance. They will not simply levy and make the SSC cry. They use all the good officers to reach the client, to convince him, to impress them. With all that, if the client is not cooperative, did not do anything in favor of the government or revenue, then only they will levy the penalty. Next is Sri Krishna Janmasthanam. There are 19 cases where a person can be booked under, kept in lock, not lockdown. What we are saying, it is in lock-in or central jail. We call as in jovial manner Sri Krishna Janmasthanam. These are if the SSC is defaulter, willful defaulter, continuing defaulter, they don't mind putting them in jail. Next, we have got two important numbers in Income Tax Act. We call shortcut as PAN and TAN. PAN means permanent account number. It's 10-digit number. It's used by the payee in TDS and TCS purposes. Penalty is there are some cases where PAN is compulsory, and if you don't use penalty PAN, they will levy a penalty of 10,000 rupees. This is for employees only. But TAN is for an employer, for example, Usman University, Syndicate Bank, New Andhra Bank, or Union Bank. Suppose you are working in Amazon or Infosys. Infosys will have TAN, Amazon will have TAN, Usman University will have TAN. Tax means tax account number given to the employer only, not SSC. This is allocated to all deductees. And again, if you don't apply, you will get a penalty of 10,000 rupees. It's compulsory on the part of every deductor to take TAN. Next. Venkatesh, next end. Yeah. See, I told you in the beginning that we have got CBDT, the Administrative Central Authority in the Delhi quarters. They will take care of entire jurisdiction of CBDT. We have actually CBDT commissioners, chief commissioners, deputy commissioners, assistant commissioners. Then comes ITO and inspectors. They are the people who administer the entire income tax in the country. They are section 120 deals with them. Nothing but in simple words, we have to go to an ITO or EO in the latest language, assessing officer. For example, in Hyderabad, we got I-Car Bhavan anywhere in the country. Those you will find these offices, they will work on behalf of the department. They are called IT income tax people. We have to deal with the ITO or AO. AO means assessing officer. Next. What do? They do, first of all, we have to do ourselves, do self-assessment. I told you we have to pay advance tax. I sit carefully, take all precautions, documents, make a statement, and I assess my income. I will pay tax. It's called self-assessment. I file return of income through form 1, 2, 3, 4, 5, 6, 7. Again, I will explain you afterwards. Once the form 1, 2, 3 goes to department people, they will do assessment. What do? They take my return of income, they verify all the papers with them, and they will make assessment. Means they will again calculate the total income, calculate the liability, and make order. It's called summary assessment. Out of 100 cases what we file every year, 97 will be done like this. Means they trust you, they believe you. They simply make they again check. There may sometimes mathematical characteristic mistake is there. Sometimes he may wrongly claim. Some it's possible either from our side or that side. So they'll calculate. That's called summary assessment. Scrutiny. Scrutiny is nothing but a little bit. You should be very careful. Out of every 100 cases what we file, 3 cases will be picked up by the department people on some important criteria. For example, you are every year declaring losses. Your case will be booked. Your income is too much. They will pick up your case. Your expenditure is too much. They will book your case. You have drawn more than 1 lakh from your current account. They will select your case. If your deposits are more than 5 lakhs, investments are more than 5 lakhs. Like that, they got some 30 to 40 criteria. On the computer will select the returns of income. There, they will make scrutiny assessment. It's nothing but they will give a letter to you, notice to you. They will ask you to come to them. You have to show all the records to them, and they will scrutinize all the records and then make orders. It's called scrutiny assessment. But for the current year, if you see the latest finance minister's speech, she told that we are going for faceless assessment. Till last year, all of chartered accountants, practitioners were going to Department of Income Tax, to our concerned authority, and produce all the documents, whatever they asked, whatever they require, books and everything, and convince them. But from now onwards, we need not go to Income Department. We have to file everything through online electronic. They will ask, please give us your sales ledger. We have to give sales ledger. Please give us your cash balance, BRS, or confirmation of debts, confirmation of loans, whatever they asked. We are supposed to file electronically. It is now called faceless assessment. I don't see my ITO face. ITO will not see my face. That's the latest concept in the assessments. Now, the fourth one is best judgment award. This is nothing but expert assessment. Suppose I am IT officer. I have given notice to you. You did not come. You did not cooperate. You did not produce a document. I will wait for a certain amount of time. If still you are non-cooperative, if you don't listen to me, I make assessment on my own way. Own way means I will not do as per my wish. Based on records available with me, I will take the records available with me. I will collect information from different sources and make income statement and recalculate the tax liability. It's called best judgment or expertise. Means I will not involve you as SSC. Now, there will be mistake either on your side or from department side. Then they will do reassessment. They will again check. You have to make an application for the reassessment. You have to again go for, and they will do reassessment. But now, except self-assessment, all 4 assessments will be done only by faceless assessments. No question of meeting the ITO. They will do on their own. They will ask everything electronically, produce them, cooperate with them. Your assessment will be over at our table. Next. Venkatesh, next time. Yeah. normally tax planning. Tax planning means, first of all, the act is voluntary complaints. You should, on your own, go and file return of income. Nobody will ask you. It's a voluntary complaints. No evasion. అంటే ఇన్కమ్ ట్యాక్స్ ఎక్కకూడదు, రద్దు చేయకూడదు. యూ కాంట్ ఎవేడ్ ఇన్కమ్ ట్యాక్స్, బట్ యూ కెన్ అవాయిడ్ ఇన్కమ్ ట్యాక్స్. ఎవేషన్ అంటే ఎక్కొట్టడం, కావాలి విల్ఫుల్గా కట్టకపోవడం. అవాయిడెన్స్ అంటే ప్లాన్ చేసుకోవడం. 80C సేవింగ్స్ ఉన్నాయి, 1.5 lakh. అయితే ఇల్లు కట్టుకున్నారు, లోన్ తీసుకున్నారు, లోన్కి ఇంట్రెస్ట్ కడుతున్నారు, అవాయిడెన్స్. 80D మెడిక్లెయిమ్, 80D expenditure, 80U physical handicapped. These are all legal ways. Legal means to avoid tax. That's called avoidance. Next, you compute income very carefully with your own assistants or with the experts or with the lecturers and arrive at the correct total income. Then arrive at the tax figure, pay it through advance tax, TDS or self-assessment, and file a return of income within the due date. They have got some due dates given. Please comply them. The last one, if still they invite you, they call you, please meet them. Response to the notice. If you respond to notice, you will be good in their looks. This tax planning does not mean evasion of tax. No, people are wrongly misunderstand. Tax planning means a tax katadra. Is somebody, normally we compare with politicians, cinema stars and sports stars. Are they paying tax? No. Why should we pay tax? That's not the right way. You have to pay tax on income what you earn. Disclose every income correctly, pay tax, file return of income. That itself is good planning. Complaints manchirama. Complaints you will be attracted with income, with interest, penalty, and imprisonment. Who will take all these headaches? Better you pay. Still, I will tell you one thing practically. Once upon, in 1970s, income tax, the gross rate was in India was 97%. అంటే 100 రూపాయలు మీరు ఇన్కమ్ మీకు వస్తే 98% ట్యాక్స్ కట్టాల్సి వచ్చేది. న్యాచురల్గా ఎనీబడి ఎంత మంచివాడైనా కూడా 100 రూపీస్కి 97 కట్టడు. So what happened? That 97% is definitely a big amount to pay tax, to surrender with, to part with. So people are opting for some illegal ways to evade tax. That was long back. But after P.V. Narasimha Rao, Manmohan and Chidambaram, I'm not talking politics, I'm talking only economics. After these three people have come, they have registered the rates. Now the highest rate in the country is only 30%. Please note the important thing. Our neighboring neighbor countries are charging more than what we charge. For example, Pakistan and Bangladesh. We are perhaps definitely few countries in the world which charge less income tax, 30%. Okappudu 97. 97 ఉన్నప్పుడు అందరూ కూడా everybody was resorting to illegal means to evade tax, but it is not so. Now we can pay 30% voluntarily and lead a comfortable life. Next. Now, tax planning. Tax planning 4 రకాలండి. 1 షార్ట్ రేంజ్, 2 లాంగ్ రేంజ్, 3 పెర్మిసివ్, 4 పర్పస్. షార్ట్ రేంజ్ అంటే, ఫర్ ఎగ్జాంపుల్, ఐఎమ్ ఏ బిజినెస్ మ్యాన్. I incur some expenditure. The expenditure is genuine, relevant to the business. I will incur and I will adjust my taxation. Long range. Instead of spending unnecessarily, I will spend on plant and machinery, and I can claim benefit of depreciation. Similarly, instead of putting in small deposits, I make 5 years deposit. I will get interest. I will get exemption under 80 TTP. And also 80C. It's called long-term planning. Permissive. I will enjoy all the benefits permissible by the Act. Suppose I am eligible for 80C. I take interest on house building loan. I take education loan. I will take mediclaim. expense, all whatever is permissible as the law, accepted as per law, I will claim. This is called permissive tax planning. And the purposive tax planning. This applies in the case of capital gain. Suppose I got asset, I got a house, I purchased long back, now I am selling it. If I again buy one more house, I am exempt from income tax. This is simple law as per section 54 of the income tax. But suppose I wanted to use that funds for my daughter's marriage or my son's education, example I am telling. What I will do is, I will pay tax and use the balance amount for my daughter's marriage or for my son's education. ఇక్కడ ఏంటంటే కాన్సెప్ట్, the purpose of my tax planning is not to avoid income tax, to comply the law, first point, and to have money. Suppose I got 1.5 crore, I pay 20% as tax to government of India, 120 is left in my hands. With 120, I will perform my daughter's marriage very grandly. I will send my son to America for education purposes. Means my purpose is not to just evade tax. I avoid tax legally. I take all the maximum advantage of tax planning purposefully, and I meet my personal obligation. నేను చాలా మంది చెప్తుంటాను, ట్యాక్స్ గురించి మీరు వర్రీ అవ్వకండి, ట్యాక్స్ కట్టండి, ఎందుకంటే ట్యాక్స్ కంపల్సరీ కాబట్టి. మీ పర్పస్ ఏంటి? మీ పర్పస్, మీ ఆబ్జెక్ట్ మీ అమ్మాయి మ్యారేజ్, లేకపోతే మీ ఇంట్లో అక్క మ్యారేజ్, మీ చదువు, దానికి ప్రియారిటీ ఇవ్వండి. అది లైఫ్ ఇంపార్టెంట్. అలాగే చాలామంది హెల్త్ పాటు తీసుకుంటారు, అయ్యో సార్ ట్యాక్స్ ఎక్కువ పడిపోయింది సార్, 30% పడిపోయింది సార్, ఒంట్లో పోవాలి, బీపీ వచ్చింది, షుగర్ వచ్చింది. మీ హెల్త్ కన్నా ఇంపార్టెంట్ కాదమ్మా, చిన్న విషయం, మీ హెల్త్ సార్ ఇంపార్టెంట్. మీ హెల్త్ బాగుంటే యూ విల్ ఎర్న్ కోర్స్, యూ కెన్ పే 30%. 30% is small amount, please note the point. People unnecessarily, many people think that they are paying much tax, but we are few countries in the world paying less tax. Next time. Now gifts. This is very, very important. Once upon in India, we are having gift tax. Donor, doni. At that time, doni was taxable. Later on, they wipe off the act, they have removed the act, they have abolished the tax, gift tax, and they said donor is liable to pay tax. Means as suppose I have given 1 lakh to you, I am liable for tax. Why should donor pay tax? It's meaningless. Then they said, since we are abolishing gift tax in the country, we will go for gifts taxable in the hands of the receiver. Means doni. Malli doni kochina picture. Donor, doni, donor, doni. As of today, there is no gift taxes in the country, but gifts in the hands of the donor are taxable. They are treated as other income. Who will be taxed? Suppose I give 1 lakh to Mr. Naresh Reddy or Venkatesh. Both of them have to pay income tax because they are donees, first point. Second is, there is any blood relation between me and Mr. Naresh Reddy. We are all friends. We are all co-cost accountants or colleagues in the commerce department. Means gifts received from outsider is taxable. Gifts from father, mother, sister, grandmother, grandfather, granddaughter, hierarchy. That said, this said. అంటే పై వాళ్ళకి ఇచ్చిన పర్లేదు, కింద వాళ్ళకి ఇచ్చిన పర్లేదు, నో ట్యాక్స్. బట్ చుట్టాలు కాకపోతే మాత్రం గిఫ్ట్ ఈజ్ ట్యాక్సిబుల్ యాజ్ ఇన్కమ్. సో బీ కేర్ఫుల్, దిస్ ఈజ్ ఏ గుడ్ ప్లానింగ్. నార్మల్గా ప్రతి సంవత్సరంలో ఒక మనిషికి 50,000 రూపాయలు గిఫ్ట్ వచ్చింది అనుకోండమ్మా, ట్యాక్స్ లేదు. 50,000 ఎక్కువ వస్తే ఆ ఎక్కువ వచ్చింది అడుగుతారు, ఎలా వచ్చింది మీకు అని. సార్ నేను అంటా నరేష్ రెడ్డి ఇచ్చాడు, అయితే బాబు 10,000 ట్యాక్స్ కట్టు అంటారు. అంటే ఐ షుడ్ టేక్ ఎక్స్ట్రా కేర్, ఐ షుడ్ నాట్ రిసీవ్ ఎనీ గిఫ్ట్ ఫ్రమ్ ఎనీబడి, ఇట్స్ taxable as income. Next. Now, again, this is nothing but a legal way of avoiding. Pay insurance policy, health premium, you can avoid tax. Donation and direction on rent. Rent means at the income, you will not pay tax. తర్వాత ఇంట్రెస్ట్ హౌస్ ప్రాపర్టీ లోన్, తర్వాత సేవింగ్ బ్యాంక్ అకౌంట్ ఇంట్రెస్ట్, contribute to charity, 80 donations. I have given out of love and affection to Mother Teresa, or PM Relief Fund, or Corona Relief Fund, PM Care Samiti కొత్తగా వచ్చింది కదా, ఇవన్నీ కూడా ట్యాక్స్ ఫ్రీ. తర్వాత సేవింగ్స్ అప్ టు 1.5 lakh in section 80C is exempt. NPS, new pension scheme, exempt. These are all legal ways to evade. I'm sorry, avoid is legal, evasion is illegal. You can always avoid taxation by opting for these plans. Next. Now, I will talk about formats of ITR. See, ITR means we have got 7 forms. You can file electronically, no other option. Excel వాడచ్చు, Java వాడచ్చు. Income tax India filing of gov.in డౌన్లోడ్ చేసుకోండి. అక్కడ వెళ్ళిన తర్వాత ఐటీ సాఫ్ట్వేర్ రెడీగా ఉంటుంది. సెలెక్ట్ ది అసెస్మెంట్ హియర్, టిక్ ఆన్ ది సాఫ్ట్వేర్, హైపర్ లింక్ ఉంటుంది. అక్కడ మీకు ఒక ఎక్సెల్ యూటిలిటీ వస్తుంది, ఎంఎస్ ఆఫీస్. ఆ ఎక్సెల్ ఆఫీస్లో ప్రీ ఫిల్డ్ అంటే ఇప్పుడు నరేష్ రెడ్డి గారి పేరు పాను నెంబర్ కొడితే ఫారం ఫిలప్ అయిపోతుందమ్మా. నరేష్ రెడ్డి గారి పేరు, డేట్ ఆఫ్ బర్త్ అంతే డేటా ఉంటుంది, మొత్తం పేపర్ అంతా ఫిలప్ అయిపోతుంది. ఇప్పుడు కొత్తగా ఫారం పెట్టారు, ఆ ఫారం పేరు 26AS, తర్వాత చెప్తాను మళ్ళీ మీకు. 26AS ఫారము, ఇట్ ఈస్ మెయింటైన్ బై ది డిపార్ట్మెంట్. మీన్స్ ది అకౌంట్ ఆఫ్ ఇన్కమ్ ట్యాక్స్ అకౌంట్ ఆఫ్ నరేష్ రెడ్డి ఈజ్ ఇన్ ది హ్యాండ్స్ ఆఫ్ ఇన్కమ్ ట్యాక్స్ డిపార్ట్మెంట్, నాట్ విత్ హిమ్. హీ మే నాట్ మెయింటైన్, ది డిపార్ట్మెంట్ మెయింటైన్స్. ఫారం నెంబర్ ఏమంటారంటే 26AS. ఆ 26ASలో ఒక ఎస్ఎస్సికి ఇయర్లో వచ్చిన అమౌంట్ ఎంత వచ్చింది, టీడీఎస్ ఎంత, ఎగ్జామ్స్ ఎంత, అన్నీ వచ్చేస్తాయండి. అది మీ జాతకం అనుకోండి, మీ స్టోరీ, మీ కథ. ఇంకా చెప్పాలంటే మొత్తం కథ ఒక ఇయర్లో మీరు ఎక్కడెక్కడ ఏం చేశారు అన్ని అందులో రిఫర్ అయిపోతాయండి. అంతేకాదు, ఇట్ ఆల్సో కంటెంట్స్ అబౌట్ షేరింగ్స్, డైరెక్టర్షిప్స్, తర్వాత ఫారిన్ అసెట్స్ అన్నీ వచ్చేస్తాయి అందులో. ఆ తర్వాత ఎక్సెల్ షీట్లో ఫిలప్ చేసిన తర్వాత జావా ద్వారా మీరు జావా వరకెళ్ళి వాళ్ళు డెవలప్ చేశారు ప్రీ ఫిల్డ్ ఫారం, జావా ద్వారా మీరు ఫైల్ చేయాలి. ఇది చాలా ఈజీ టు డౌన్లోడ్ అండి ఫారం, కానీ చాలా టైం పడుతుంది. ప్రతిదీ ఫిలప్ చేస్తే కానీ మీరు ముందుకు వెళ్ళాలి. 1 2 3 4 ఈ కాంట్ సైట్ మీకు 7 9 11 9 10 11 1 2 3 4 సిస్టమేటిక్గా ఫిలప్ చేయాలి. నెక్స్ట్ అన్నీ 1కి అయితే మాత్రం జావాకి పనికొస్తుంది, 1 2 3 అందరికీ జావా పనికొస్తుంది. ఎక్సెల్ కూడా వస్తుంది. ఒక 1కి మాత్రం చాలా సింపుల్ ఫారం, 1 పేజ్ ఫారం. మిగతా అన్నీ కూడా ఎక్సెల్ యూటిలిటీ ఆర్ జావా యూటిలిటీ, దేనికైనా కూడా మీ సిస్టమ్ సపోర్ట్ని బట్టి ఉంటుంది. 1 చాలా ఈజీ, 2 కూడా పర్లేదు. 3 నుంచి మాత్రం ఒక్కొక్క ఫారము 20 పేజెస్ ఉంటుందండి. మీకు 5 6 6 7 వచ్చేసరికి మాత్రం ఫార్మ్స్ 30 to 40 నెంబర్ ఆఫ్ ఫార్మ్స్ పేజెస్ ఫిలప్ చేస్తే కానీ మీరు ఆ ఫార్మ్ని మీరు ఫిలప్ చేయలేరు. బట్ ఇట్స్ వెరీ ఈజీ. పిల్లలు మీకు చాలా ఈజీగా చేయొచ్చు. మీకు కావాల్సిన ఒకే ఒక 2 క్వాలిటీస్ అండి ఐటీ రిటర్న్ వేయడానికి, కామన్ సెన్స్, పేషెన్స్. ఈ 2 ఉంటే రిటర్న్ మీరు వేయగలరు. నెక్స్ట్ ఇది మళ్ళీ అంతే, అన్నీ ఆన్లైన్ ఇచ్చారు. వీళ్ళు ఏంటంటే ఈ సంవత్సరం కరోనా వాళ్ళు కొంచెం లేట్గా చేశారు. చేసిన తర్వాత ఏంటంటే ఒక్కొక్క ఫారం 1 2 3 అలా ఒక్కొక్కటి స్లోగా రిలీజ్ చేసుకుని వచ్చారు. సేమ్ మీకు సిస్టమ్ అయితే మారదు. సబ్మిషన్ మోడ్లో పెట్టిన తర్వాత వెరిఫికేషన్ ఆప్షన్ క్లిక్ చేయగానే రిటర్న్స్ ఆటోమేటిక్గా మీరు ఫిలప్ చేసుకుని వెళ్ళిపోవచ్చు. ఒక్కొక్క దాన్ని ఆథరైజ్ చేసుకుంటూ అథెంటికేట్ చేస్తూ ముందుకి వెళ్ళాలి. టైం పడుతుంది తప్ప ఈజీ అండి. నెక్స్ట్ ఇదేంటి ఎక్సెల్లో కొంచెం అన్జిప్ గిప్ ఉంటాయి, వ్యాలిడేట్ చేయాలి. అంటే ఫర్ ఎగ్జాంపుల్ నేమ్ వ్యాలిడేట్, ఎస్, పాన్ నెంబర్, డేట్ ఆఫ్ బర్త్, అడ్రస్ అన్నీ ఒక్కొక్కటి వాల్యూ చేసుకుంటూ ముందుకు వెళ్ళాలన్నమాట. ఇట్స్ అన్ని వెంటనే సేవ్ చేసుకుంటాము. బట్ మీకు తెలియదు, యూ నో మచ్ బెటర్ దాన్ మీ, ఐఎమ్ ఓల్డ్ మ్యాన్. అన్ని వాల్యూ చేసుకుంటూ సేవ్ చేసుకుంటూ ముందుకెళ్తే ఫోల్డర్ క్రియేట్ చేయాలి, ఫోల్డర్ పూర్తి చేయాలి, ఆ తర్వాత టిక్ చేయాలి. నెక్స్ట్ ఆటోమేటిక్గా XML క్రియేట్ చేస్తుంది. ఇది ఒకప్పుడు దే హావ్ గివెన్ ఆప్షన్ ఫర్ సమ్ పీపుల్ టు ఫిల్ మాన్యువల్. అప్పుడు ఏం చేయాలంటే మనం మాన్యువల్ ఫిల్ చేయాలంటే మనం డౌన్లోడ్ చేసుకోవాలి, అప్పుడు చేతితో కొట్టుకోవచ్చు. అది కూడా ఒక ఈజీ. బట్ ఆన్లైనే చాలా ఈజీ, మీకు ఈజీగా వచ్చేస్తుంది, పెద్ద కష్టమే కాదు. నెక్స్ట్ ఇక్కడ ఏంటంటే XML జనరేట్ చేసి జావా ద్వారా ఫైల్ చేయాలి. ఇక్కడ ఒక ప్రాబ్లం, ఒక రిక్వైర్మెంట్ ఏంటంటే డిజిటల్ సిగ్నేచర్ ఉంటుందండి. ఇప్పుడు దర్ ఇస్ కేస్ కాల్డ్ ట్యాక్స్ హైట్ కేస్. 1% టర్నోవర్ ఎక్కువ ఉంటే ఇట్స్ కాల్డ్ ట్యాక్స్ హైట్ కేస్. కంపెనీ ఉంది, డైరెక్టర్స్ ఇదివరకు అయితే అందరూ ఏం చేశారు, వైట్ పేపర్ మీద సంతకం పెట్టేవారు, సంతకం పెట్టి రాసేవారు. ఇప్పుడు అది అక్కర్లేదు. ఎవ్రీ ఎంప్లాయర్ ఫర్ ఫైలింగ్ టాన్ రిటర్న్స్, every employee whose turnover is beyond 50 lakhs, income is above 50 lakhs, business people, trust, firm, వీళ్ళందరికీ కూడా డిఎస్సి డిజిటల్ సిగ్నేచర్తో వేస్ట్. డిజిటల్ సిగ్నేచర్ చూపిస్తుంది. నెక్స్ట్ చూద్దాం. ఇది మళ్ళీ జనరలే, పాన్, ఫస్ట్ నెంబర్, మిడిల్ నెంబర్. ఇప్పుడు ఫర్ ఎగ్జాంపుల్ నా పేరు ఇందాక చదివేయడం నాగేష్ రెడ్డి గారు, నా షార్ట్ నేమ్ KCHIVS మూర్తి. నా దాంట్లో ఫస్ట్ నేము, మిడిల్ నేము, లాస్ట్ నేమ్ మీలా 3 నేములు రావు, 16 నేమ్స్ వస్తాయి. అయితే ద రూల్ ఈస్ ఐ షుడ్ గో యాజ్ పర్ ది పాన్ కార్డ్. పాన్ కార్డు రాసినట్టుగా యాజ్గా మీరు కాపీ కొట్టాలి. అడ్రస్ కానీ, ట్యాక్స్ పేమెంట్ కానీ, TDS కానీ, 1, 2 TCS కానీ, బ్యాంక్ అకౌంట్ ఆంధ్ర బ్యాంక్, సీనియర్ కాలనీ బ్రాంచ్, హైదరాబాద్. యూజ్ ది వర్డ్ యూజ్డ్ బై ది బ్యాంకర్. యూ విల్ నాట్ షార్ట్ కట్ ఆంధ్ర బ్యాంక్ ఓయూ లేదు, పూర్తిగా రాదన్నమాట. అంటే ఇక్కడ వీఆర్ రిజార్టింగ్ టు ఆర్టిఫిషియల్ ఇంటెలిజెన్స్. ఆల్ ఆఫ్ యూ ఆర్ మోస్ట్ అకస్టమ్డ్ టు ఆర్టిఫిషియల్ ఇంటెలిజెన్స్. ఇప్పుడు మీ సెల్ నెంబర్ ఉంది, నేను ఒక నెంబర్ తప్పినా నేను కరెక్ట్ కాలేదు కదా. సిమిలర్ ఇక్కడ కూడా ఏంటంటే ద అడ్వాంటేజ్ ఈజ్ స్పీడ్, యాక్యురసీ అండ్ కరెక్ట్నెస్. But disadvantage is, even if you do a small mistake, it will not update or it will not validate, it will not go further. ఇప్పుడు బ్యాంక్ అకౌంట్ 15 నెంబర్లు రాయాల్సిందే, ఏదో 5334 అన్నానికి వీళ్ళది. ఫుల్ నేమ్ రాయాలి, IFSC కోడ్ రాయాలి, నేమ్ ఆఫ్ ది బ్యాంక్ ఏబి. ఏంటి ఏబి? అలహాబాద్ బ్యాంకా, ఆంధ్ర బ్యాంకా, ఏ బ్యాంక్? పూర్తి పేరు రాయాలి. నెక్స్ట్ అమ్మ, సేమ్ XMLని అప్లోడ్ చేసేసి ఫైల్ అంటే ఆటోమేటిక్గా సబ్మిట్ అయిపోతుంది. ఇది నేను చెప్పేదాంట్లో ఈజీ అమ్మా, గుర్తుపెట్టు. నేను చెప్పేదాంట్లో ఈజీ మీకు. ఇక్కడ చూడండి, డిఎస్సి ఎందాలు చెప్పాను కదా, ఇలా ఉంటుంది డిఎస్సి ప్రొఫార్మా. ఏమంటారు మీ భాషలో దాని, అది గుర్తు రావట్లేదు నాకు. మనం నరేష్గా ఏమంటారు దాన్ని? మనం అందరూ ఫ్లైట్ పెట్టుకుంటాం కదా, దాని పేరేంటి? చిప్స్ ఏమంటారు దాన్ని? అలా ఉంటుంది ఈ డిఎస్సి. ఇందులో మీ పేరు అన్నీ ఆటోమేటిక్గా ఎంక్రిప్ట్ అయిపోయి ఉంటాయి. పొలిటికల్ పార్టీస్, కంపెనీస్ వాడాలి. ఇది చాలా దీనికి ఇది మనం పేమెంట్ ఇస్తే మనకి వాడు సర్వీస్ ప్రొవైడ్ చేస్తారు. 1 year, 2 years, 3 years లైఫ్ ఉంటుంది. ఇది ఉంటే ఆటోమేటిక్గా ఒక మనిషి సంతకం పెట్టి లెక్క అనమాట. ఇది కానీ ఇది మనం ఎప్పుడు చాలా కేర్ఫుల్గా ఉంచుకోవాలి. ఇది మన దగ్గర జేబులోనే పెట్టుకోవాలి. ఇది ఎవరికైనా దొరికితే వాడు కానీ వాడేసి మీ పేరు మీద వాడేసేసి ఇతను వేయచ్చు. సో బీ కేర్ఫుల్, డోంట్ డిపార్ట్ విత్ దట్. బట్ ఇట్స్ వెరీ సింపుల్ ఆపరేటబుల్. అది దాని ఏమంటారు, పెట్టగానే మీ సంతకం అక్కడ రికార్డ్ అయిపోతుంది ఆటోమేటిక్. నెక్స్ట్ సేమ్ అదే డిఎస్సి గురించి రాశారు. డిఎస్సి ఎలా అప్లై చేసుకోవాలి, ఎలా సబ్మిట్ చేయాలి. డిఎస్సి వచ్చిన తర్వాత IT డిపార్ట్మెంట్ అడుగుతున్నావు, బాబు నువ్వు అన్నీ ఫిలప్ చేసావా, నువ్వు అన్నీ చేసావా, ఎస్ అని అంటే అప్పుడు ఏమంటుంటే డిఎస్సిని అప్లోడ్ చేయమంటుంది. మనం అప్లోడ్ చేయగానే ఆటోమేటిక్గా సబ్మిట్ అయిపోతుంది. ఆటోమేటిక్గా మీ వెంటనే విల్ గెట్ ది అక్నాలజ్మెంట్. అంటే ఎంత ఫాస్ట్గా అక్నాలజ్మెంట్ మీకు వస్తుంది అంటే మీ సినిమా టికెట్ లాగా వస్తుంది, రైల్వే టికెట్ లాగా వస్తుంది. That's all from my side. Thanks to all of you. If you got any specific questions, I will try to answer them. I was instructed to talk much on the forms by Mr. Naresh Reddy, so I have opted for this. I did not dwell upon elaborating time, but all the points known to me are covered from A to Z. And if you got any questions, we will dwell upon.
Sir, thank you. Thank you very much.
Thank you.
Yes, sir. Wonderful lecture, sir, and nice, sir, for coming and delivering lecture.
Thank you. Thank
It
you.
is
Thank
your department.
you.
Without
Our
you,
department.
without you, we cannot do any program.
No, అదేలే
Yes,
సార్
sir. No, no, no. Wonderful, sir. And thank you. Personal, my behalf and behalf of the college, as a principal and the coordinator of the RUSA. Really, thank you very much, sir, for coming and delivering and addressing all the questions which were raised by the participants. And we are looking towards to the many more programs with your support and cooperation.
వెరీ సింపుల్ సార్. ఏంటంటే చాలా మంది పిల్లలకి ఇన్కమ్ ట్యాక్స్ అంటే ముందు భయం వేస్తుంది.
అవును, అవును.
అట్లా భయం ఉండకూడదు వాళ్ళకి అసలు. అంటే
Yes.
నాట్ ఓన్లీ ఇన్కమ్ ట్యాక్స్, ఏ యాక్ట్ చేసినా కూడా
Yes, sir.
నెంబర్ 1 ప్రియాంబుల్ మళ్ళా మనమాట అంత ఇంపార్టెంట్ కాదు, అంటే చదవాలి ఇంపార్టెంట్ కాదు. సెక్షన్ 2కి వెళ్ళండి. ఇట్ కంటైన్స్ డెఫినేషన్స్. డెఫినేషన్ మీకు అర్థం కాదు, బోర్ అనిపిస్తుంది, విసిగా అనిపిస్తుంది, కష్టం అనిపిస్తుంది. డోంట్ వరీ. బట్ కాన్సెప్ట్ మొత్తం యాక్ట్ మొత్తంలో యాక్ట్ పర్పస్ ఏంటి? ఇన్కమ్ ట్యాక్స్ యాక్ట్ ఫిజికల్ యాక్ట్ ఏంటి? ఫిజికల్ యాక్ట్కి కంప్లైంట్స్ కంపెనీలో ఏంటి? డూ ఏజిఎం కండక్ట్ చేయండి, ప్రొఫార్మా ఈ విధంగా ఇన్కమ్ ట్యాక్స్ అన్ని ఇస్తుంది. ఇట్స్ కాల్డ్ కంప్లైన్స్ యాక్ట్. దిస్ యాక్ట్ ఈజ్ నాట్, ఇట్ ఈస్ ఫిజికల్ యాక్ట్. ఇట్ సేస్ ప్లీజ్ పే ఇన్కమ్ ట్యాక్స్. వెన్ షుడ్ ఐ పే? వెన్ యూ హ్యావ్ గట్ ఇన్కమ్. వాట్ ఈస్ ఇన్కమ్? దే హ్యావ్ గివెన్ డెఫినేషన్ 1, 2, 3, 4, 5, 7. వెన్ షుడ్ ఐ పే? ఏప్రిల్, మే, జూన్, జూలై. తర్వాత దేని మీద కట్టాలి? శాలరీ, హౌస్ ప్రాపర్టీ, అట్లా ప్రతి దానికి ఆన్సర్ ఉంటుందండి. అండ్ మనం కొంచెం కాన్సెప్చువల్గా మీ లెక్చరర్స్ కూడా బాగా చెప్తారు, కానీ కొంచెం ఫియర్ తీసేయాలి వాళ్ళకి. భయపడతారు అంటే సరిపోతుంది అంతే. ఇంకేమైనా డౌట్ ఉంటే ఐ నీడ్ టు క్లారిఫై.
So thank you very much, sir, for coming and delivering the lecture and addressing.
Sorry for the technical glitches.
That will be there. Never mind. We are glad to you, sir. Nice to see you in coming programs.
Thank you, Chandrapur.
Yes,
thank you, Venkatesh.
Thank you, sir. Thank you very much.
So no questions means either they have understood or they have not understood.
Understood, sir.
Yeah. Tarvata, I don't mind.
Audience, now we have the break. We will go for the 10 minutes break again with the same ID and same password. You can log in after the 10 minutes. Sir, A.V. Shanmurthy, sir, you can have your own cup of coffee or tea, sir.
Okay. Sir, you can use this. అదే డిపార్ట్మెంట్ పార్టీకి అడిగి పుచ్చుకురావాలి, 2 సార్లు కాఫీ తాగాల మనం. ఇప్పుడు యూ కెన్ యూజ్ దిస్ PPT for personal benefit. I have no objection.
Yes, sir. You
can download, you can use it anything.
Yes.
And if anything, anywhere, anytime, income tax means costing, financial management, accounting, any subject little known to us, we'll share with you.
Yes, sir. Sir, in chat box also you can see so many thanks, sir.
Thank you.
It's a wonderful session. Thank you very much, sir. Very clearly explained. Even refund is also explained, and it is a good presentation, sir. You can see the chat box, sir.
Thank you.
Yes, wonderful.
Thank you, Chandrapur. Thank you, Venkatesh.
Thank you, sir.
Then Venkatesh, back end Venkatesh is wonderful, Venkatesh.
Yes. Take
Sir,
care.
thank you, sir.
Thank you.
We'll see you there.
Thank you, everybody. Thank you. Bye.
Thank you. There is a short break. After break, we will meet.
Hello. Hello, sir. Please. Hello, sir. Is it audible, sir? Sir, unmute yourself, sir.
Yeah, nice to see you in the mask. You are
Yeah.
much audible, sir.
Yeah. Sir. How are you, sir?
I'm good. I'm good. Thank you.
Yeah.
Can you have we started already, or there is still time for us?
Yeah, first session 2 to 3:30, sir.
Okay.
3:30 to 5 second session, sir. Third session 5:10.
5:30, 5:10.
No, sir. 5:10. 5:10.
What kind of language do these students speak? They are English or Hindi?
English, sir. Now, students are from throughout the country, sir.
Okay.
Yeah. All are postgraduate students, sir.
Okay.
The postgraduate students consist of MCOM, MBA, MSc, MA.
Okay. Okay.
Yeah. This is the combination of the group, sir.
Okay. Okay. You don't have a poll, this thing over here. There are already 30 participants here. But we don't have the poll. Yours is a paid version for Zoom?
Yes, sir. This is paid version, sir.
So there has to be, I wanted to actually take a poll from people, but that's fine. We'll ask them to raise hands or something of that sort.
Okay.
And how does it go? Do they speak? If they have questions, do they want to talk? How does it work out?
No, you can interact. You can also interact, sir.
Okay.
Or you can start speaking on a particular topic which is already given to you.
This is a dead.
In between also you may raise some questions, sir. Or otherwise, lastly also you can make use of it, 10 to 15 minutes.
Okay.
It is left to you only, sir. According to your convenience, you can take up.
Okay.
Maybe in between or maybe last, like.
Okay. Because this is a subject of a dead man.
Yes, sir.
So you want me to start sharing my screen, or how should I? First I'll talk and then share my screen or something of that sort?
That is left to you only, sir. If you want to speak few minutes,
I'll wait.
the overview of the subject, later on if you want to go with your...
So usually I put everything in the slide because these people are academic. And it is face to face, it is better to talk about a lot of other things.
Yes,
online, it
you can share your PPT, sir.
Explain on the slides.
Yeah, that's correct. Yeah. Good evening, sir. Yeah, good evening all the participants. I welcome to this third session of the day. Now, the speaker from Mumbai, Priyesh Sampath, sir is going to speak on estate planning. Now, I want to introduce the speaker to you. It is my honor to invite and introduce you, sir, for this technical session. Sampath is working last 3 decades helping the families across the globe to achieve financial freedom. Yeah, thank you, sir. You are working on this subject from the last 3 decades. Rich experience of over a decade in estate administration and execution. Now, Priyesh works to inspire people to take informed after life decisions behind numbers. He works in the premium segment of the society, and the majority of his clients are working professionals. His articles has been published in Midday and Hindustan Times as a personal finance expert. He has been quoted in Economic Time Wealth Cover Story 2. He was interviewed by Telenews Asia Singapore for his views on the infamous Paradise Papers. Many of his articles have been published on finance professionals' websites since 2009. Prius has trained more than 1,800 financial professionals globally. Apart from conducting financial awareness programs at corporates like TCS, Prius has been regularly invited across the country to speak and conduct certification courses on the subjects of estate and succession planning at Institute of Chartered Accountants, Institute of Securities Markets, various chartered accountant study circles, mutual funds, roundtable conferences, international business networking groups, LIC, etc. So thank you, sir, for your vast experience in the concerned field. So we are very happy and lucky to with you in this evening. I am also very much grateful to Professor Narasimhan, who has suggested your name. I am very much thank you, sir. Please start your session, sir. This is yours.
Dr. Reddy, may I request you to allow me to share my screen so
Yes,
I
sir.
can start my
Yes, sir.
presentation?
You can share, sir.
Thank you. You'll have to make me the co-host or allow me to share my
Yeah,
screen or
co-host. I
something.
want to go. Is it okay, sir?
Yeah, I'm ready.
Yes, sir.
So should I start, Dr. Reddy?
Yes, sir. Yes, sir. We can start.
So good evening, friends. I'm going to speak on a dead subject today, but I'll try to make it as interactive as possible. If you have any questions, you have my email address in the bottom. You can always write to me. I will try to reply to your questions because I have very clearly mentioned down below that the content in this session is intended to provide a general guide to the subject matter. Specialist advice should be sought for your specific circumstances. So we'll move on. So whenever I talk about estate planning, usually I talk about movies. I hope most of you must be watching Hindi movies, and there were movies in the name of Jolly LLB, if you remember. In that, the judge used to tell the lawyers that there are so many cases pending in the courts, and that is what Hindustan Times has also published. Around 2 crore 70 lakh cases are pending throughout the courts, and this was way back in 2016. The latest figures are much higher. Unfortunately, due to COVID, they have escalated. But on the flip side, there is a positive point that we are being able to, the courts have started online proceedings. So a lot of testamentary or any other kind of cases are coming on the board as early as possible. I'll move on. So basically, this relates to estate planning. The reason being that if so many cases are pending, and if you are going to look at the figures of how much cases are pertaining to family disputes, this is what Times of India says. 76% of this a little bit less than 3 crore cases, 76% of these litigations are family disputes. Now you can just imagine what happens, and this is not new. This has been going on since the time of Ramayana and Mahabharata. If you have heard these epic stories, you would know that why those fights had started. The fight of Kurukshetra in Mahabharata, everything evolves around the property. So we need to be very serious about this topic, and this is the most ignored part in financial planning of an individual, where people plan their finances, but they forget to do what is necessary. Now, I have a question. I would request each one of you. I just check how many participants are there. I would want each one of you to share in the text box. What do you do? What do you look at when you are doing an investment? I request each one of you to please type it in the chat window. What do you look at whenever? I'll type the question here. Security. Jyotirmay says security. Anybody else? Mr. Mayank Jain, thank you very much. You are a very, very, very normal human being. 100% people talk about return. Mr. Mayank Jain says he looks at return. Shravani says profit. Anybody else? With just 10% people have answered. So are people just just kept their screens on and moved out for some snack? Security returns, Sandhya Devi ji. Yes, absolutely. Sandhya Devi ji is very close when she says security. I understand when you say security, you are actually referring to a thing where you do not want to lose your money. Correct me if I'm right, Sandhya ji. You can type it in the text box. What you are meaning by security is that you should not lose your money. Is that correct? Anybody else wants to reply to this answer? What do people? Ibrahim ji says project continuity. Jyotirmay says what we invest, we need to get. Mayank Jain says security is priority. Absolutely. Jyotirmay says then profit. Okay. Absolutely. Yes, Sandhya Devi ji. Thank you so much for answering these questions. Now we look. I just close the chat. So usually we always invest for security or we invest for good returns. But personal finance is just taken for granted when it comes to passing on your money to your loved ones, and it can prove fatal. Just investing knowledge is not enough. I look at many gurus on the TVs who tell you that I'm going to buy this stock today, short this one, you'll make a lot of money. But making returns is not enough to have a great financial life. You need to have an afterlife also, because whatever you have made has to reach your loved ones. So you also need to be well versed with basic legal aspects and make sure you carry out all due diligence. Nomination is one important aspect you should seriously consider when checking for the financial products you have bought or plan to buy in future. So what are the kind of mistakes we make in personal finance? It is important to make sure that your loved ones do not face legal issues, and they should be happy, not happy, but they should mourn for a very less amount of time rather than keep on mourning or cribbing or abusing you or talking bad about you when you're not around, just because you have not made things properly. So today we are going to discuss all these aspects on how things are going to evolve in case of people who take these things lightly and do not do things in tandem. So if anybody can put in the chat box, what is this? I request everybody of you to please use your chat box. Shravani says family tree, absolutely true. So this is the basic part of estate planning. Yes, Ibrahim, this is a family tree. Absolutely, yes. Thank you very much for your answers. This is the basic part of estate planning. Whenever I am getting cases of any kind of estate recoveries or disputes or any of these kind of things, we immediately start drawing family trees. because this forms the most important part of estate planning. We'll go on. So a few years ago, I was in Hong Kong, and this is myself clicking this photograph in Hong Kong from a bus in which I was. This was a public bus which I was traveling in from my airport to my hotel. I was staying there in Kowloon this few years ago. Now look at what I found there. We Indians are very, very, very hypocritic. We talk about money, we talk about a lot of things, but we do not talk, we don't like talking about death. Over here, in many parts of the world, they have these kind of funeral parlors where they decide what they want next, how they want to live their afterlife. There is a lot of stress on estate planning across the globe. In India, still we do not have these kind of things. I have a question for everybody of you, and I will appreciate if all of you type this answer in the chat box. How many of you have made a will for yourself? Or if at all you think that your family member has made a will or something of that sort. I request each one of you, only 3 or 4 of you are answering. I request each one of you, please, if you can answer, how many of you have made your own will? I'll wait for the answers.
What's your voice break అయింది? Can you repeat the question, sir?
Should I put it in the chat box?
Yes, sir. Due to voice break and sir, network issue, sir. Once you tell again, sir.
Okay. Thank you, Mayank ji, for this wonderful idea. So you're talking about middle class. Am I audible now, everybody?
Yes, sir.
Yes, sir.
So the next slide, I am not trying to put anybody down or pick up on anybody, but it's a very enlightening slide, and it's a paper cutting again. And I have read this many years ago. Do you remember the Pulwama attack somewhere near Jammu Kashmir on our soldiers who were martyred, 40 of them? There was a bomb blast or something of that had happened. There is a place known as Ajmer, somewhere near Rajasthan. And just see what happened over there. It was shocking for me too. Just see what happened. This is again Times of India has reported. See, most 90% of Indians do not have a will. So we are not special. I have a will because I am in the profession and I think that I needed it very urgently. That's the reason I made my will. Just imagine a beggar having a will, and she donated. She had very clearly written that if I die, my money, all my accumulated money should go to martyrs. It should go to the people who have died while protecting my country. This is such a heartening thing, such a wonderful gesture. But then we, the so-called educated people, do not have a will, unfortunately. Now, when we talk about estate planning, a lot of people think that estate planning. Okay, Mayank has a question. He says, at which age we should make a will? Mayank, a will can be made by a major. Once you attain majority, you can make your own will. Usually will should be made once you acquire any kind of, as I say asset, it can be a bank fixed deposit also, and that's fine. And moreover, whenever you have dependents on you, the people who are depending on your earning, if you have these kind of dependents, you should have will. There is no need to be middle class or lower middle class or high class or something of that sort. So let me put this in front of you, Mayank. Thank you for this wonderful question. Abraham Lincoln, one of the presidents of America, did not have a will. The famous richest man of India's father did not leave behind a will. And everybody knows that there was a lot of ruckus which had occurred when the father of the richest man in India today, when he passed away, a lot of ruckus was there. So it is not that we, but then these things get settled when there are large amounts of money. But when there are small amount of money, now you just close your eyes and imagine when you were a child and you have a sibling, a brother or a sister, and there is only one toy to be shared between both of them. Have you never ever fought with your brother or sister, your sibling or your cousin? Just be truthful to you and let me know over here. Mayank, we will address all your issues, whether registration is required or not. All these issues I am going to cover in this session. See, Mayank is participating the most. I would request much more participation. Thank you so much, Mayank. Shravani, thank you. Everybody, each and every person here must have fought. Forget, okay, some people will say, I don't have a brother, sister, I don't have cousins, I've never fought. There are neighbors also. So when we are kids, we do not want things which are dearer to us to go away from us. And now just imagine when we are inheriting a few lakhs or crores. Why crores? Because there, a lot of time, there are family properties which are inherited. And you can just imagine what kind of fights we get into. And usually the fights are not started by the brothers or the sisters. There are more intelligent partners where we are married. So usually the fights are starting from that end, because that is not a blood relation. In the blood relation, at least we would consider something or the other. But when it comes to outsider, because if my wife is an outsider, she would not have that kind of commitment, love, or something of a brotherhood for my brother, what she has for her own brother. And same way around, I do not love her siblings the way I love my brother. So it goes without saying that you should be having a will as soon as possible. We will look at the other aspects also, whether it has to be registered, how it has to be made, and a lot of other things. Thank you for the participation. Jyotirmay, can you please, okay, Jyotirmay says for remote mostly, television remote, sure, thank you. So we move on. So this is a disclaimer and disclosure from my end. The one disclaimer is given down, which says that this content in this session is intended to provide just an idea how things have to be done. I have an experience of more than a decade now in estate planning. I am a trustee to many trusts. I manage a lot of estates. I have clients across the globe. Till now, I have transferred money, Indian rupees 21 crores, around $3 million across the globe to the beneficiaries of the people who have deceased. So, but when it comes to creating trusts or to applying for a probate, we do hire lawyers, law firms, and work in collaboration with them. Basically, I am a practicing financial professional, but this is the area of my specialty. This is where I specialize. I do a lot of investment planning and stuff, but this is my area of specialty. That is the reason I have been called here to share my experience with you people. Thank you very much. So I'm going to ask some stupid questions over here. You will have to forgive me. And I have the audacity to ask this kind of question to postgraduate people. So I would want everybody to answer however you think it is funny or whichever way. What is 1 + 1? I would want everybody to put it in the chat box. You will love the answer. Jyotirmay, in the last slide, I will be sharing my phone number and email address. Don't worry. Mayank Jain says 2 or 11. Vandana Jain says it can be 2 or 11. Wow. Sri Durga says 2. Garima Yadav says 2 or 11. Pravarli Karel Lakshmi says 1. Shravani says 11. Kanakati says 2. Sri Durga says buy one, get one. Sandhya Devi says 1, 2. So 2 is the normal answer. But you know what? I'll tell you one thing. Each and every one of you, your parents have taught you 1 plus 1 is 2. But no, you have to tell it is 10. You yourself are telling your children that 1 plus 1 is 2. But no, you have to tell it is 10. Does it sound funny? I don't know. Do you people keep your videos on? Yeah, I'm going to show it to you, Vandita. Don't worry. Mayank, I'm going to show it to you. You are doing this with your children, if you have many. And your parents have done this to you. I'll just share it with you. How it makes 1 plus 1 is equal to 2 is equal to 10. I'll just prove it to you. Can anybody tell me if I'm wrong? The bigger hand is at 2 and the smaller hand is at 10. Anybody? Right or wrong? So basically, what I'm trying to tell over here is that perceptions may vary. Galaxy M30, I cannot know your name. Thank you. Kanakati, I just put the answer over here. The bigger hand is on 2, and we teach our children that 1 plus 1 in math is 2, but when the bigger hand in the watch goes on 2, so whenever I'm looking at my watch and I look at 2, I don't say it is 10-2, I say it is 10-10. I hope we are clear. So what I'm trying to say over here is that the perceptions may vary. We are living in a country where there are a lot of perceptions. This is a democratic nation, and we are able to fight a lot of cases, and there are a lot of different kind of judgments being given. So there is nothing right and wrong in this land. But the whole idea is that the session will give you a little bit of insight where how things have to be approached and how you can take it forward. I'll move on to the next slide. We will talk about some elements of estate planning. Can I just take a break? Dr. Naresh Reddy, till what time am I allowed to speak, sir? If you can just tell me. Okay, I'll move on. I have a lot of stories to tell you, if at all, because I'm handling a lot of cases and I'll be able to share a lot of insights. If at all I supersede the time, it's a different ball game altogether. But if at all I am able to do this in time, better, because I would want you to know the course material also. That's the reason I was asking the time. If anybody knows till what time my session is about to run, so 6:40. Okay, thank you.
So I think 6:30, sir.
Never mind. If you enjoy, you can stay here. You can ask me more questions. Don't worry. So we look at some elements of estate planning. Estate planning involves broad activities. First part is identifying the beneficiaries and their claim to the estate through a comprehensive documentation. Creating tax-efficient structures such as trusts to manage the estate and make periodic payouts to beneficiaries. Today, we are not going to discuss about trusts because this is a very vast subject. Usually, my subject takes 2 full days to be explained and talked about. But over here, we have just 1.5 hours. So I will try to cover as much as things I can. One tip I would like to give to everybody is that whenever you are buying a life insurance policy in the name of term cover, they call it a term cover, it's a pure life insurance policy. I would like to suggest you that if you do not want to spend a lot of money in creating trusts and doing a lot of other things, you can buy the policy under the MWP Act. It is known as the Married Women Protection Act. The people who are married here, the men, can buy the policy under the MWP Act. MWP is a trust wherein your money after your demise does not go to any debtors. There is no attachment. Even the Department of Income Tax cannot attach that money unless and until you have intentionally taken the policy with intent of fraud. Otherwise, there is no attachment to that, and no debtors can touch that money, and your family is highly secured. So this is just one tip. If you do not want to spend a lot of money in creating trust because it costs a lot of money. Creating organizational structures, including trustees, executors, guardians, power of attorney, to perform identified functions in administrating, protecting, and managing the estate. Now, everybody loves to listen to stories. I would want to give you one story over here on the part C. If you read it properly, creating organizational structures. We ignore the trustees and executors, but look at these two words, guardians and power of attorney. Can somebody tell me what do I mean by guardians and power of attorney? Can anybody share in the chat box? What does that point say when it says that you need a guardian or power of attorney? If anybody can throw whatever light, the onus is on me. Don't worry. I'm very much happy to listen to the answers. Don't think that's right or wrong. You can just share it over here. I realize what I can tell you what other than parents. Mayank ji, yeah, okay, yeah, yes. Anybody else? Sri Durga supporters, okay. Mayank has given the correct answer other than parents. Guardian is someone who protects something. Vandita ji, yes, absolutely. Guardian save the minor property to appoint the court. Okay, I am not able to understand. Pravati Lakshmi ji, if you can just elaborate it a bit. Mayank Jain says power of attorney is owner right. Not really, Mayank, we'll discuss about it. I'll just give you some insights on that. Appoint the court. Appoint. Sandhya Devi says who guides us after parents. Okay. Sandhya Devi, only in case if you are a minor and both your parents pass away. Power of attorney is authority to act. Yes, absolutely. So I'll tell you two real life stories. So I have these two clients. Just a second. Huh? Anybody wants to answer? Power of yes, Vandita ji, absolutely right. Anybody else? I will appreciate if people contribute. Atul Kumar Tiwari, I don't know why you are thanking me. I am thankful to you that you are participating over here. Sandhya Devi says minor. Okay. So I'll give you two stories. There was a helicopter crash in 1985. Power of attorney can also be a legal document. Yes, absolutely, Vandita ji. Power of attorney is a legal document. So I'll throw some light on why these kind of documents are necessary. I'll give you two examples. Firstly, I'm giving you the example of a guardianship. We call it testamentary guardianship. If you have a pen and paper on you, you can please take it down if you want to take it down. It is known as testamentary guardianship. 90% of Indians do not have wills. 99% of Indians do not have testamentary guardianship. Now, testamentary guardianship can be on a plain piece of paper only in case of both the parents dying at one go together. Only then the testamentary guardianship comes into force. If either parent has to die, the other parent is the legal guardian, so there is no need for a testamentary guardianship. But if both the parents had to go together, then it is one of the most important documents. So each one of you, whoever is here in this classroom, and you have minor children, you need to identify your brother, your mother, your father, or somebody younger to you, your brother or your wife's brother or your husband's brother, whoever you trust for your children, to appoint them as a testamentary guardian. The reason being in 1985, I met, in 1985, there was a helicopter crash in Bangalore, somewhere in the country, I don't know where. Now, the children of a couple who died in that helicopter crash are my clients. Now, they are not my clients because their parents were my clients. I met them eventually just in a bank, and then they started dealing with me, and I realized that both the parents had passed away together and two minor children at home. Fortunately, both these children had uncles and aunts who could take care of them without money, because the court told all the relatives that these children will not only get money after they attain majority. Are we clear here? Do you feel how important is this testamentary guardianship? So you need to write this on a piece of paper. Don't worry at all. It's just a confirmation, because usually 1 in 1,000 or 10,000 cases, we see that both the husband and wife died together in an accident. But it is not it is an unfortunate thing, but it's not that it will never occur. It can occur. It doesn't mean that it will occur in our life, but then it is better to have a testamentary guardianship letter. This was the guardian part. Now we look at the second part, which we talked about, is the power of attorney. A lot of you people have given the answers. The power of attorney is a legal document, blah, 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 blah. Yes, very much. Absolutely. Now, I have a client. His name is Mr. Jatin. On 10th of August, 1998, he was traveling with friends. I'm from Mumbai. He's from Mumbai. He's my client as well as my good friend. 10th of August 1998, he was traveling on a highway and he came across an accident. Now, in this accident, my friend Jatin, he damaged his nerves, which join his brain and the body. So he is a paraplegic. Now, immediately for the first 6 months, he was in coma. Today, he's hale and hearty, but he's immobile. He's bedridden. He needs people to take care of him. His hands are moving, but he still gives a thumb impression. He cannot sign. The lower body is totally dysfunctional with the neck. Only he keeps on moving his neck and keeps on moving his hands, but he cannot write, hold the pen, or something of that sort. Now, for the 6 months, till the time he was in coma, his wife, he has one child, his wife, his child, everybody was in a trauma because he was a businessman. He is a businessman. Fortunately, he's retired now, made enough money, but he's a businessman, and most of his debtors came up to his family and said that we have to take money from him. He does not have to take money from me. And there were a lot of creditors who were tensed. If this fellow dies, where will my money go? So just imagine, the money was lying in the bank, but they could not do any transactions because everything was in his name. So this is where the power of attorney comes into picture. I don't know whether many of you watch Hindi movies, but there was one Shah Rukh Khan movie which was known as Bazigar. In that movie, his father had given a power of attorney to a manager. The manager then became boss of the factory. Then again, Shah Rukh Khan went there to seek revenge, and he took a power of attorney from that manager. If you remember the movie. So you should be very careful whom you are giving the power of attorney to. It can be given to the next of kin, your parents or your spouse or somebody of that sort, rather than just giving it to Tom, Dick or Harry. But it is a very important thing. So I'm moving on to the next level. We talked about two things: guardianship and testamentary guardianship and power of attorney. Now, When I'm talking about power of attorney, you have one option available. There is something known as a springing power of attorney, which says that in case of I becoming incapacitated to act, only then this person can take over. So you do not have to worry even if you are giving a power of attorney to somebody, your business partner or something like that. Only in case you being mentally incapacitated, only then it comes into force. So we'll do some Q&A over here. I want everybody to type in the chat box what happens if a person dies without making a will. Can I request each one of you to please type? Thank you, Vijeta. Family suppers, Jyotirmay, absolutely yes. Any more people want to answer this question? I'll request everybody to participate, please. It makes the speaker more happier that you are gaining something. Sri Durga says it might go to trust. Jyotirmay says children's education collapses. Mandita says anyone will try to take that property who is not capable of. Yes, such things do happen. The family will suffer. So always I say my favorite day is today. So it's a wonderful session. Thank you so much. Everybody is answering. Garima Yadav says his power of attorney transfers to spouse or children. Garima, thank you very much for this wonderful answer. For your kind information, everybody in the room, power of attorney ceases to exist in case of death of the donor. So person who gives the power is called the donor, and person who receives the power to sign is known as the donee. So please be clear, power of attorney only stays till that person is alive. Okay, Jyotirmay says everybody will give sympathetic looks and no one will help. Yes, absolutely. So there is one word answer. There is one word answer to this. What happens if a person dies without making a will? It's a one word answer. Most of you people are from Hyderabad itself, or you are from different parts of the country? Just a flying question to make other people participate. Sri Durga says court decides. Vijeta Sahu. I don't understand your answer, Vijeta ji. Vilanama.
Vilnama.
Vilnama, okay. वही मैं आपको पूछ रहा हूँ, what happens if a person dies without making a will? Okay, you are saying that. What is the meaning of Vilnama? Are you talking about?
Means will, sir.
Sorry. Can you repeat, please?
Will.
But the question is, what happens if a person dies without making a will? If you see the screen, I put the question over there. What happens in case a person dies without a will? So there is a one-word answer to this.
She pronounced in Telugu, sir.
Oh, okay. Okay. Thank you, Vijeta ji. I learned a word today in Telugu, Vilanama. Thank you so much. Dispute. Yes, Mayank ji. I would love to give a round of applause to Mayank ji. Yes, dispute, fight, and so many things. There are so many words associated to this word, dispute. Yes, absolutely. But this is a funny answer when I say dispute, but yes, it is the truth. But usually, legally, technically, what happens, we'll just see. Succession of a person dying without leaving a valid and enforceable will is called intestate succession. You can write this down if you want. You can take a snapshot of this slide, whichever way. Now, principles of distribution of assets in this regard are based on personal laws applicable to deceased. When I say personal laws, I am talking about the faith which the deceased is professing. The faith the deceased is professing. So we have few faiths in India: Hindu, Muslim, Sikh, Isai, Christian. So these are few Parsi. So these are few faiths: Buddhist, Jain. So these are few faiths. Now there is something known as, so we will look at those parts also. We have Indian Succession Act, we have Hindu Succession Act, and we have Muslim Succession Act, and we have an Indian Succession Act. So these are certain acts which I will be showing it to you in the further slides. So what happens if a person dies without making a will? It is on the principles, the distribution of assets will happen on the principles of the succession which that deceased is following, faith which that deceased is professing. So law of intestate succession are different for Hindus. I just said that Hindus, Muslims and Christians. Now what does Hindu, who all fall under the Hindu Succession Act? Buddhist, Jains, Sikhs and Arya Samaj. The law of intestate succession is codified in Hindu Succession Act 1956. Just imagine, these acts were actually drafted in all the way back in 1956. There are a lot of amendments in this, but still a lot of things are happening according to what the Britishers used to say. For your kind information, we have an Indian Succession Act also. When I talk about the Indian Succession Act, where the Christians fall under, in Indian Succession Act, most of the things are exactly the same what there is in Britain. So अंग्रेजों के जमाने का act अभी भी इंडिया में चल रहा है. A lot of amendments have been made, but yes, still most of them are identical. There are a lot of people entering the room. Okay, I go forward. So we talk about the Hindu Succession Act. So how it is classified. So male Hindus, if a male Hindu dies intestate, if the male Hindu does not leave behind a will, there are 4 classes of legal heirs which come into picture. I am trying to keep this as short as possible because I can talk on this for the whole day, but that doesn't make a case out of it. So there are 4 classes of legal heirs: class 1, class 2, class 3, class 4. The property will pass on exclusively to legal heirs specified in class 1. Now, if there is anyone available in class 1, class 1 relatives includes, this is a very important thing. Ladies and gentlemen, be very careful while reading this. Class 1 relatives include wife, son, daughter, mother, son, daughter, or predeceased son, daughter, or widow, or predeceased son, and few other such relatives. Now, I have a question for all of you. I am typing it in the chat box. I want each one of you to answer that, please. And I want most of you to answer that, please. I am a Hindu. I die without a will, leaving behind my parents, wife, and children. I have 1 crore. This is, for example, I have much more money, but I'm just writing I have 1 crore. How will it be divided? I want everybody to participate, because if you are going to participate in this, you will be able to actually understand. Rajesh Nara says goes to wife. Absolutely false, Rajesh ji, but thank you so much for the answer. I really appreciate that you are participating. Vandita says elder of the family. Absolutely false, Vandita. What I want you people to give me the answer is, if I have my parents and my family, so okay, I'll elaborate this more. I leave behind. So who I leave behind is I'll give you. Father, mother, spouse, son, daughter. So there are five people who I leave behind. Sandhya Devi, absolutely false. Ravika Kanekati, absolutely false. I am a Hindu. I died leaving behind 1 crore. I want you people to tell me what will be the percentage these people will get. What will my father get? What will my mother get? What will my wife get? What will my son get? And what will my daughter get? Reddy Navya Reddy, absolutely false. It does not go to my wife. Goes to family equally. Sri Durga, I want Sri Durga, if you can help me with the amount of rupees. Can you say equally, you mean to say 20 lakh rupees to each one of them? Shravani, absolutely false. First, some will go to parents. No. Some for wife. Yes, absolutely. Some for children. Yes. But I want you to write numbers. Out of 1 crore, Reddy Navya Reddy says 20 lakh each. No, absolutely false. Anybody else for the answers? I don't want to get stuck up over here because I have a lot of slides to share. I will love if you share, if you try to participate as much as you can so that we can move on. Yeah, Rajesh Naraji, I will tell you what exactly happened. Now you read the last clause over here. Look at these male Hindus. I'm a male Hindu. Class 1 relative includes my wife, son, daughter, mother. My father is not mentioned over here. Hello, are we here? So I have left behind 1 crore rupees for my wife and my children, not my mother, because my father has enough money to take care of her and they are happily living. I am living on my own. They are living on their own. They have enough money. Shravani says 50 lakhs to wife, 25 to elder child, 25 to younger child. No, Shravani. Read this properly. Class 1 heir. So it will be equally divided between my mother, my wife, my son, and my daughter. So each one will get 25 lakh rupees each. Now, I am not staying with my parents, nor are my children staying with me. My elder one is staying on his own. My younger one is staying with me. Now, my mother also has a son who she loves more than she loved me. Because I am not staying with her, the other son is staying with her. Now just imagine the whole scenario. I leave behind 1 crore. I have not made the will. 25 lakhs goes to my mother. Whom do you think she will give that 25 lakhs to? My wife and my children? Hello, are we here? Can you please participate? I'll be thankful to you. My mother gets 25 lakhs out of my estate being a class 1 heir. Whom do you think she will be giving the 25 lakhs to? No, not necessary. Whether it is a joint family or a nuclear family, don't worry about that. It's mother's wish. Absolutely, Sri Durga. Thank you so much. That's a bang on answer. It's her wish. She may not want to give it to my wife and my children. She loves my younger brother more than me. She would want to give that money to my younger brother, or my younger brother will convince her that why don't we spend this money on blah, 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 blah. Absolutely, Garimaji. It's absolutely her wish. Now my son is also staying. He's 19 years old. My son's name is Kushal. He's 19 years old and he's staying on his own and he does not want to give that money to his mother. Now, how much is my wife left with? 25 of her own and 25 of the child. Do you feel 50 lakhs will suffice? It's just a question. Are we here?
Yes, sir.
So this is what happens. when we die intestate. We move forward. Now we come to the female Hindu. If that female Hindu had to pass away, it is as good as the husband. It is as good as her husband. Now, class 1 relatives are somewhat similar. That is husband, the sons, the daughters, including children of the predeceased son or daughter. That is fine. If none of them are there, then just read this line properly. If I am not there, my children are not there, and my wife had to die intestate, it will not go to her family, it will go to my family, my brothers and sisters. Hello, are we here? See how complicated things can become. But in case she has brought something from her parents' house or a property or something, it will go back to her parents if they are living. But then for all these things, we will have to approach the court. Because people say, in Hindi, we say, kabja balwan hota hai. What I am trying to say over here is, whoever has the possession is the owner. This is what usually in Hindi they say, kabja balwan hota hai. Are we here? It makes things so complicated. So we are here to simplify things for our own life. Now we come to the Mohammedan law. This is again more complicated, but that's fine. We are taking a little snippets like the Hindu law. I gave you 2 things. There were many other classes of errors over here also. I'll give you a few of them. So there are different personal laws for Shias and Sunnis also. A lot of you must have heard about the Sharia law also. And such laws are not codified. So basically Muslim law is not governed. It is only governed by the Mohammedan law itself. Now for Sunnis, following Hanafi law, most of the Muslims in India follow this law. So personal law restricts legacies to maximum 1/3 of the estate remaining after taking care of the funeral expenses and other expenses. A lot of people entering outstanding wages to domestic servants and debts, etc. Now, whatever is left later on, सबसे पहला हक लगता है उनकी wife का. So there is something known as meher. You have Muslim friends over here in the classroom. You can ask them what is the meher. If the meher was not paid at the time of the wedding, the first part from whatever estate is left behind goes to the spouse in case the meher was not paid during the wedding. This is something promised by the husband, and this would be the first charge, priority debt, if the same has not been paid by the deceased during his lifetime. I'll move forward. We come to Christians. So can anybody answer this? Where do Christians fall? In which succession act do Christians fall? I'm just taking a quick exam that whether people are paying attention or not. It's a request to all of you. Just type in the chat box, or you can just on your mic and tell me where, in which succession law do Christians fall? We have 33 participants over here. Somebody has answered. Sri Durga, no, Christians do not fall under the Hindu Succession Act. Let me go back a bit and show you where do they fall. See, you can read the first. Hindus have these in under the Hindus, the Buddhists, Jains, Sikhs, and Arya Samaj fall. Muslims fall under the Mohammedan law, and Christians fall under the Christians, Parsis, and Jews. They fall under the Indian Succession Act, ISA, which I shared with you. That it goes, a lot of it is identical with the laws which are there in Britain also. So it was originally made by the Britishers. So as regards to Christians, the widower inherits 1/3 share and balance goes to the lineal descendants. In case there is no lineal descendant, then 1/2 goes to the widow. So half, 50% goes to the widow and the balance to the other relatives. Are we clear over here? Any Christians in the room? If you raise your hand or say hello in the chat box. Mandita, lineal, your line of your lineage. Sri Durga, we are living in a country, we are a democratic country, and votes are only available if there is reservation in this country. So that is the reason different laws for different religions. Britishers always believed in divide and rule. So we are still going through the same thing in our life. If you see so many things, not in Hyderabad, I have seen a lot of brotherhood in Hyderabad. But if you see most of the places throughout the country, we are just fighting on religions. This is how it functions, and this is the law of the land. I would love to have more questions, please. Do you have any more questions? I will go ahead. Is stamp duty payable on will? Can anybody answer this? Is stamp duty payable on will? You can just on your mic and start talking, because I don't want to miss. I'll try to cover as much as possible. Is stamp duty payable on will? You can on your mic and you can start speaking. I'm okay. I'm comfortable with that. So I don't have to open my chat box. I can just hear and understand what I'm trying to tell me. Okay, Garima Yadav says yes. Pravari Kalya Lakshmi says yes. A. Amakan says yes. So I'll just answer it for you. There is no duty payable on the will, but some people insist on making it on a stamp paper, thinking it makes it more legal. So it's totally fine. If the testator, the will maker, wants to do it that way, let them do it, no problem, but not compulsory. So don't worry about it. There is no stamp duty payable on any kind of will. Please remember that. Is it compulsory to register a will? You can just on your mic and you can start speaking. These are few questions I am asking you for your participation purpose only. I could just run it as a course for you, but if there is more interactive session, you will grasp more and you'll remember it for a longer time. That is the only reason I'm running it in the form of trivia, where I'm asking you Q&A. So that if there is something in your mind, it will be cleared out. There is nothing more than that. Is it compulsory to register a will? Garima says yes. Anybody else? No. So a lot of people are saying no. I like it. And why no? If somebody can tell me why no?
Will is an immovable property, no sir. So why it is need to be registered?
Can you please introduce yourself, ma'am?
Sir, I am Vandita Jain.
Okay.
So will
So
is
if
a
there is immovable property, Vandita ji, you say that if there is immovable property, then only it is compulsory to register?
No, sir. No, I am telling it's no need to register because it's an immovable property. I'm giving the reason as immovable property.
No. So will is a movable property, no?
Yeah, right.
So will is actually not a property. Will is a document, but it moves
Yes.
around. So, but yes, you are absolutely right. It is not required to register a will. So I'll give you one more story. I had a client in Gujarat. I went there for a wedding, and that night I met her because her young son had passed away, used to be my friend and my clients also. So when I went to Gujarat for a wedding, I said, let me pay a visit to her because the son has just passed away. Let me meet her and pay my condolences. I met her, her daughter-in-law, her daughter, and everybody else in the family, and she was very broken, heartbroken, and all. She was bedridden. So I asked her that, do you want to make your own will? Because the son has passed away, daughter is a divorcee. There is usually this happens, there is a fight between the sister-in-laws. The daughter-in-law and the daughter don't get along with each other. There was a lot of dispute, which is still going on. They have locked horns because she said, don't worry, my sister is a high court advocate in Gujarat. She will make, and she will make it on a green paper. Have you seen legal documents on that green legal paper?
No,
So
sir.
she thought that any kind of agreements are made on that green colored paper, which is actually called the ledger paper, legal size. But she was waiting for that, and the time I reach Bombay from Gujarat, I receive a call in a soft voice. Her daughter is telling me, "Mummy passed away." That night, I felt she was hale and hearty. She could sign. I was there for witness. We could have taken some other neighbor as a witness, but she did not make the will. And she passed away just thinking that it has to register, make it on a green paper, nothing like that. So don't worry. Anybody wants to make a will, you can allow them to make it on a plain piece of paper. Holographic will is better. Handwritten will is better. So that there are some people who will testify that yes, this handwriting belongs to blah blah blah, or it can be matched with whatever writings they have. I go further. There is no need to register a will. Can you please read this? But once if you register a will, each time in case of any additions, omissions, the codicil, whenever you are making a correction in a will, that document is known as a codicil, or you are making a fresh will, also needs to be registered. Now, when you are doing additions or omissions, when you are buying a property, when you are selling a property, when somebody has died, there is a divorce, some things of these things happen, that time you are making changes. And these things do happen in our lives. The last written will shall prevail. Please remember this. Whenever a will is written, it is very clearly mentioned in that this is the last testamentary document I am preparing for myself. All that found written before this date shall be accounted as null and void. So the last dated one will be accounted as the perfect one. Further effort should be made to give effect to the maximum bequest. Now, lot of people tell me that if I write this over here and there is a fight, the whole will go for a toss. No, it is highlighted in a case whenever there is an ambiguity or impossibility. Balance part which does not have ambiguity will be remaining valid. So I have given you a case study over here. This was a case in High Court. It is highlighted that in case of consistency between two parts of the will. So there was a part A, part B, there were two properties. Part A, there was no dispute. Part B, yes, there was dispute. So part A was to be given away to the beneficiaries, and the testator is allowed to change his mind as many times the testator wants to. So this is unlike a sale deed. If we are going to make a sale deed, if we make a sale deed, we buy a property, we sell a property. Can you change things? No, we are not allowed to change anything in that case. We can only change the will as many number of times we want to. So can a beneficiary become a attesting witness? in the same will. So I am a beneficiary to my parents' will. Can I become a attesting witness in the same will? Can somebody share, please? You can on your mic, speak, you can type, whichever way you would like to do it. Rajesh Nara says no. It is better that somebody speaks so that we can interact and we can get the answer. Or should I just jump on the answer? I'll jump on the answer. Let me tell you the answer. Okay, Ramanth. Pravali Karayalakshmi, it is wise to stay away from being a witness in a will where either you are a direct beneficiary or an indirect beneficiary. Please be very clear about it. Be very clear about it. It is wise to stay away from being, because there have been many instances where the courts have thrown away. I convinced my father, "Papa, please give me more money than my brother or my sister." And he writes it down to me, and my brothers and sisters fight in the court saying he has fooled my father. He was not supposed to get a single penny. He fooled my father. He told we will give everything to my brothers and sisters, and he is getting everything. So these things can happen. So please be wary about these things. Do not get into being a witness in a will where you are a direct or indirect beneficiary. When I say indirect beneficiary, your spouse, if the spouse is a beneficiary somewhere, please stay away from being a witness. And if that person is making you a witness and forcing you to become a witness, that means that person does not want your spouse to enjoy that money. Please remember that. I'll move on. What is the difference between a gift and a will? If anybody can answer, you can just on your mic and answer this question. What is the difference between a gift and a will? Yeah. Please introduce yourself. Yeah, okay. I can see your name. Tell me.
Will is the responsibility, sir, but gift is not the responsibility.
So both the things are responsibility. I'll tell you one thing. So what is the difference between a gift and a will? Gift is given in a lifetime, and will comes into force only when the person who wants to give it dies.
Yes, sir.
कुछ पाने के लिए किसी को मरना पड़ेगा. Somebody will have to die for the will to come into effect, but the gift can be given in one's lifetime. That is the difference between a gift and a will. So gift is also one type of estate planning instrument where there is a lot of distribution to be made to a lot of people. So I have one case. I am again giving you one story. There are 5 brothers, very influential people, and they have one sister, a married sister, a widow. The sister is widow. Now they inherited a property of 20 crore rupees. So 4 crore per head. But they did not give a single penny to sister. In that case, the parents of the children, all these 5 children, when I am talking about these people, they are already 70 years old. Some of them have died also. But these are the kind of cases which come to us. They did not give a single penny to the suffering sister. And when each one of them got 5 crores, they built a big house, they took a big car, they enjoyed their life. But the sister is working like a servant in her own house because she does not have enough money to enjoy her life. And this is, we call it cursed money. We would want pious money, isn't it? What happens if the attesting witness dies before the testator? Anybody wants to just on the microphone and you can speak, or I'll tell you what happens if the attesting witness dies before the testator. Yes, Navya Reddy ji, thank you very much. Yes, absolutely. That's the correct answer you have given. What happens if the attesting witness dies before the testator? Does anybody want to share? So basically, in India, when you are making a will, there is a compulsion, necessity that you need to have 2 witnesses. But it does not restrict you to have 2. You can have 3, you can have 4. So first of all, understand one thing, I have handled such cases where witnesses have passed away. One of the witnesses has passed away. So the second witness has given a consent affidavit saying that yes, the testator had signed in my presence. There is something known as a doctor's certificate, which proves that I was mentally fit when I signed my will. That cannot be accounted as a witness, but if the will was signed in presence of the doctor, it's a good thing to do. I have made wills for a lot of blind people. So whenever we write in the will, it was signed in each other's presence, and I have explained him the contents of the will. In blind people's will, we write that he has heard all the contents in the will by the executor, and the witnesses were present together, and the will was signed by the testator. Because whenever will has to be certified, it has to be certified by a competent court. And whenever it goes to the competent court to be certified, the document is known as a probate. Certification of will is very important. Yes, Mr. Rajesh? Yes, Mr. Rajesh, you can tell me. I'll clear your doubt if I can.
What happens if all the witnesses died?
So usually what happens is, Rajesh, whenever one pops off, usually the will maker, the testator, uska batti jalna chahiye. I need to have another witness.
Yeah.
I need
got
to
it.
change it. But when we are already making 3, when we are taking the doctor's certificate, let us sign in front of the doctor also. There is no harm in that. So there are 3-4 people, and usually they say take witness of a younger people rather than taking the older people than you.
It's better to have younger people in witness.
It's better. It is better.
Yeah, thank you.
What happens if the beneficiary dies immediately after the testator? Anybody just on the mic and you can ask me. So testator is somebody who is writing a will for their own properties to give away to the beneficiary. The beneficiary can be wife, children, mother, neighbor's wife, whoever the beneficiary he can appoint. That is one thing. Now, what happens if the beneficiary dies immediately? Like I have nominated my wife, I die, immediately she dies before receiving my money. What happens to my money? What happens to my estate? All my assets form a part of my estate. What happens to my money? It will immediately, my beneficiary was my wife, it immediately devolves onto her succession. So if she is a Hindu, immediately if she has not prepared a will, I have a will, my wife does not have a will. If I had to die, I make a will and die, and she had to die intestate, it will evolve around her beneficial interest according to the succession which she is professing. Are we clear about this? Okay.
So can you once again?
Yeah. Ask me.
Can you repeat the previous question once again?
What happens if the beneficiary dies immediately after the testator? All the estate devolves around the faith which the beneficiary professes, provided the beneficiary has died intestate. If my wife has a will, it will go to her it will be distributed according to her will. But if she does not have a will, it will automatically devolve around her faith which she is professing. Can anybody answer this? Does the beneficiary have to pay any tax on inheritance? Anybody? There is another story over here for this question. I'll share it with you. I'm weak with dates, but I'll share the story with you. So in the March of 1985, we had a finance minister. His name was VP Singh. And till now, the biggest inheritance in the country, politically as well as economically, had happened in India. Can anybody share who had received the inheritance in 1985? If anybody has an idea? Anybody? Don't worry, the onus is on me. You can type your answer the way you want, or you can just on your microphone. Okay. Our ex-Prime Minister, Mr. Rajiv Gandhi, had inherited the political and economical power in India. Now it was a huge inheritance. Barring the political part, it was a huge economical part. Now, in those days, till 1985, he had tax on inheritance in India. It still prevails in many parts of the world, including the USA. I'm not sure whether it's going to come here. I'm not saying that, but beware if at all it comes. So right now it is not there, but in 1995, then Finance Minister, late Mr. VP Singh, had eroded this section at midnight of around between 25th March, somewhere at that time in 1985. So be aware about it. I move forward. I hope I am clear till now. So we talk about some of the estate planning tools. I have already shared all the aspects. What does these things mean? But still, I am just getting you through this so you can take a snapshot of whatever you want to do. So you will be remembering these things. So during a lifetime, power of attorney important or not? You can just type yes or no. I have already given you the stories. What happens in case of absence of power of attorney? You can just type or say yes or no. I would love to hear from all of you. Please. Important. Yes, absolutely. Yes. Thank you, Vandita ji. Thank you so much, everybody, for answering. We'll move on. Joint holding. So there is no need of power of attorney when your spouse is holding your account jointly. My friend and my client, who was in coma for 6 months, was not having any joint holdership, and he did not die. So his wife could not withdraw the money, and she was in a big problem. Fortunately, her father is rich enough to provide her with whatever she wanted, but it becomes very difficult. It becomes very difficult. Welcome, Kuldeep. So joint holding is another way. Gift, we just discussed about the gift part. Family settlements, trust. Now what happens after death? So there are two things. Will comes into picture and there are nominations, which you should not miss. I'll put some light on nomination part. I have this question. Now you know about what is a nomination. Okay. So nominee is just a trustee, not the owner of your asset. Usually in any kind of asset class, if you have nominated somebody, that person, if you have 3 children, you have nominated 1 child, the nominee is just a trustee. It should be divided amongst the legal heirs in case of the person dying intestate according to the faith which that deceased person has been professing. Now, what happens in case of nomination in a demat account? Let us look at this classical case. And this still stands true. If there is a husband H, there is a wife W and a nephew N, and the husband H has nominated N. Do these kind of things happen? We have relatives we are more attached to, so we can, or for convenience purpose. So nominee of his shares in demat account. Who will have the legal right to own the shares after husband's death? Now, usually, whenever I am asking this question, everybody says wife. Anybody disagrees? Legal heir, class 1 legal heir, wife. Garima says nephew. Yes, Garima. Yes, absolutely. Now, why nephew? Why nephew in this case? Usually, nominee is a trustee, but in this particular case, there has been given by the High Court, and the judgment reads this way. In case of stocks, it does not usually work. In case of absence of a will, in a verdict given by Justice Roshan Dalvi, he struck down a petition filed by the wife, who was seeking permission to sell some of the shares held by her late husband. The court noted that as she was not the nominee, she had no ownership rights over the shares. Her lawyer argued that as she was the heir of the husband, the legal heir, the first heir, husband was a Hindu, she forms a part of being the first legal heir. Still, she was the heir of her husband who had died intestate without a will. She should have ownership rights of the shares and be able to do anything with them as she wished. But the court gave this order, which read, in case of her husband had nominated his nephew in favor of the shares, the Justice Dalvi said, however, noted that under the provisions of the Companies Act, now here, the Companies Act and the Depositories Act, these acts are superseding. They govern the transfer of shares. The role of the nominee is different over here. So this specific case, you have to be very, very careful. I have clients who have shares worth 300 crores also. So they need to be very careful whom they are nominating in their demat account and whom they are mentioning in the will. A reading of section 109A of the Companies Act and the Depositories Act, the section is mentioned here, makes it abundantly clear that the intent of the nomination is to vest the property in shares, which includes the ownership rights thereunder in the nominee upon nomination, validity made as per the procedure prescribed, as has been done in this case. So all the money went to the nephew. Thank you, Garimaji, for the answer. It means that if you have not written a will, anyone who has been nominated by you or your shares will be the ultimate owner of those stocks. The succession laws of inheritance will not be applicable. It will supersede. But in case you have made a will, that will be the source of truth. This is the judgment given by Justice Dalvi, not me. So we usually take these kind of judgments into application so that it becomes easier for people to understand. Thank you so much for your wonderful participation. I really appreciate and thankful to Narasimhan sir, NISM and Reddy ji. Thank you so much, Dr. Reddy. If the host can just come online and...
Yeah, thank you, sir. Thank you. Thank you for your wonderful interaction session. Every student participated. They asked some questions and contributed certain answers to your questions also. Yeah, any doubt up to this? Dear participants, any doubt?
I hope they are not bored and they have not gone away.
Thank you. They are saying thank
Because
you.
this subject, this
Thank
we
you
call
for
it,
your.
we call
Sir,
in
there-
Marathi. In Marathi, we call Mrityu Patra, means a
Yeah.
death warrant or death certificate. I don't know what Mrityu Patra.
Marana
In Marathi,
Patra.
it is the Mrityu Patra. Can I request each one of you, whoever is available, to so I can see everybody and say hi to everybody. If you can on your cameras, I'll be thankful to each one of you.
Say thank you to you.
Thank you so much. I really appreciate Mr. Reddy. I have given my credentials on the last slide.
Sure.
If you want, anybody can get in touch with me and I'll try to reply with my emails. Whoever
Yeah,
has
thank you, sir. Thank you for your wonderful session. So, in this evening, they enjoyed a lot. So, thank you, sir. In future, we will try to meet in other programs also. This center will
Sure.
organize so many programs in coming future or near future. Thank you, sir. Thank you. Thank
An
you very
honor
much.
that you have you had me here. Thank you so
Thank
much.
you, sir.
I am
Thank you
deeply
for your
grateful.
session.
Thank you.
Yeah, thank you for all the participants for active participation. Yeah, we have one more session. Yeah, welcome, Kuldeep sir. Where are you? Yeah, welcome,
Hi.
sir. Welcome to the session.
Thank you.
Thank you.
So, shall we begin?
Yeah, few minutes, sir. 1 or 2 minutes. I want to introduce
Sure.
the audience.
Sure.
Yeah, welcome, sir, for this last technical session of the day. Yeah, our students are participating like anything. Thank you for your acceptance. I thank NISM Dean Professor Narasimhan sir and Narasimulu. Yeah, they helped me a lot in bringing the resource persons from NISM and other parts of the country. Thank you, sir, for your acceptance. Kuldeep Tahareja, Assistant General Manager, National Institute of Securities Market, an educational initiative by the Securities and Exchange Board of India. Mr. Kuldeep has spent more than 14 years working in the domains of financial services, information technology, and financial education. He is a postgraduate in banking and finance and holds postgraduate diploma in securities markets. He is also a certified financial planner. He began his career with IT, IBM India Private Limited, and worked there in different capacities from customer facing to revenue management and workforce planning. Presently associated with NISM Mumbai, taking care of investor education and financial literacy portfolio along with other capacities. building initiatives of various regulators. The training areas are in corporate finance, personal finance, financial markets, and risk management. Thank you, sir, for your vast experience and wonderful sessions that you have already conducted in different areas. So I invite you for this session, and thank you, sir. Thank you for your acceptance and presence here.
Thank you so much, sir. So, may I begin?
Yes, sir.
Okay, so I believe all these are students of Osmania University.
No, sir.
Okay.
Part of, from various states of the country, sir.
Okay, so they are postgraduate students, or any of them are working also?
Only postgraduate students, sir. MCOM,
Okay.
MBA, MSc, MA.
Okay, okay. So
They
good
are
evening,
students.
good evening, everyone, and welcome to this session on behalf of National Institute of Securities Market. One thing I would like to, tell you in the beginning itself, in case during the presentation any question crop up in your mind, as right now we are not in physical environment, we are in this online mode, so you can drop in the chat. I hope the chat option is given available to all.
Yeah, yes, sir. They can write.
So whatever question crop up in your mind, so after every 15 minutes, I would be going back to the chat option and seeing any question, and I'll try to answer question during the session itself. Otherwise, last 15 minutes, I'll take all your questions. So are we good to go?
Yes, sir.
Okay, so can I share my screen? Do I have the rights? Is my screen visible?
Yes, sir.
Okay. So retirement planning. So as you all are, just studying, or maybe in the final years of your study, so you all may be thinking, isn't it too early for us to, go through this session? But believe me, by the end of this session, you may start thinking, it was a good idea to spend 1.5 hours worth of time in understanding why it is necessary to start retirement planning at the early stage. So, do we actually get retired? Anyone? Okay, I presume that the answer may be, coming in online mode. So, generally, it's a feeling that, we get retired after working. Okay. Sir, can anybody speak in case they want to speak?
Yes, sir. That is also allowed. They may speak or they may put their message in chat box.
Okay.
According to their convenience.
Okay. Fine. Thank you. So, does every one of you have retirement plan? Or maybe, right now you may be thinking that you have not started earning, or you are not earning. So, why this session is for you? Believe me, in case you are in post-graduation, believe me, whosoever is earning member in your family, maybe it's your father, mother, they are on the verge of retirement. So this session will help you know, okay, in case they have planned for their retirement, good enough. In case they have not and they have certain amount of money, what best they can use with that money. So I presume that maybe half of you are having retirement plan, half of you are having no retirement plan, or maybe none are having retirement plan. But why it is necessary to have retirement planning? It's a process of Retirement planning is the process of ensuring that you have sufficient fund when you get retired and you can live the same lifestyle post your working years. It is one of the key elements in financial planning. A good retirement plan always provide you, enough corpus so that you can spend the life the way you were spending during your working years. And it involves smart selection of various investment products, sometimes equity, sometimes debt, sometimes, mixture of both. And as your working year progress, you keep changing these asset allocation. So why we need retirement planning? First, in our older years, some 10 years back, in India, the family were in joint family mode. But nowadays, everyone, people are moving from their hometown villages to big cities, and now they are staying in nuclear family. And in a nuclear family, everybody is on their own. So what happens? Generally, a breakdown of traditional systems. So in case once you have moved out of your home from your traditional support systems, like you have moved out from joint family and you are living in nuclear family, believe me, till the time of retirement you will be like that only. So you are on your own, interest rates are falling, you want to protect your family. And earlier in India, people used to die at the age of 70, 75, but with so much progress in the field of medicine, the life expectancy also has gone up. Plus, medicine cost is too much, health cost. Even we are in the times of earlier, let's say if this session would have happened a year back and I was telling you about, investing in health, you may be laughing on me, but not now. So health cost also get increased, and then your lifestyle, your existing lifestyle, how you maintain that lifestyle after you get retired, that is all about planning for retirement. So when do you want to retire? Someone 45. How many of you watch movies, wherein people take early retirement? Or like, how do you think that these cricketers who have only a span of 10, 15 years or sometimes 20 years, how they plan for their retirement? Okay. But they do plan because they have a very short working span. Okay. But retirement is not the only goal. Before retirement, you have, let's say you are now 25, 26. Retirement time is still 60. But before that, you have so many other life goals. And retirement is the ultimate goal, to spend life after your working years. But these other goals could be, buying a home, your marriage, your children education, buying some land, set up some small business. And retirement generally comes in our criteria in the last, but it is one of the most important. Why? Because these goals you keep doing when you are earning. Retirement goal you have to accomplish because after that you won't be earning. So if you put up these goals in pecking order, believe me, if retirement is not coming in the pecking order in top 3, there is some problem with the planning itself. How it is? And all these life goals are also financial goals, because whatever goal you have in your mind, it requires money. Every goal dependent on money, whether you are buying house, going for marriage, planning your children education, or setting up some business and all. So money is important. And how you grow your money? For growing money, the best way is SIP. You must have heard this SIP word so many times. Some people called it, systematic investment plan. It is fine. The definition could be any. In my thing, it would be simple, intelligent, and practical ways to achieve these goals. And how we can do that? Another SIP definition. Only 3 things: saving, investment, and protection. How many of you think you save? Anyone would like to say anything? Are you saving? Anybody? Okay. Saving. Why saving? And generally, when I talk about this.
Saving.
Hello? Hello? Is there any issue?
Hello?
Yeah, please go ahead. Hello? Hello? Okay, may I continue? Or is there any issue?
No issue, sir. Continue, sir.
Okay. When we talk about saving, investment, and protections, the first thing come up in mind, saving. People generally keep saying that they don't have money for saving, and many of you would be thinking that you don't have enough money. In case you are studying, don't have enough pocket money or don't have enough part-time income to save. Saving is the first step First comes saving and then come investment. In case you think that you don't have savings, just remember the expenditure you have done in the month of April 2020. That is the minimum you require to live a decent life. Rest all is luxury. Just compare. Maybe you can write it down. What was your expenditure in the month of Jan, Feb, March, and what is your expenditure to live life in the month of April 2020 when everything was locked out, only essentials were there. So that decision you can make. What is saving? Saving is just, keeping aside money. Investment is using that money to make more money. So there's a difference between saving and investment. Saving, if you are save only, it get accumulated, but it's if you are investing, your wealth grows. It's like, the example of your tree. In case you are saving all these things, but in a jar, it won't, like, the picture you can see. If you are saving 1 rupee coin in a jar, the value remains same. But if you are investing that 1 rupee, your money plant will grow. And these are the misconception generally we have about saving as an investment, that we don't have enough income to save. Why bother about saving when I'm doing well, or don't have enough time to make a plan to invest? We have, every one of us are having time for ourselves. So if we are saying that we don't have time, maybe this pandemic forced us to think other ways wherein we can spend our time on ourselves, our health, our priorities, or in fact whole priorities may be reset once this would be over. There are certain useful tips on saving. It's not done once, it's done regularly. So let's say if you develop a habit of saving 5% of whatever you get, maybe right now you are getting 1000, so 5% would be meager 50 rupees. In case you are getting 10,000, it will multiply and then it will be 500. So similar way, whatever you are earning, if you have a habit of saving minimum 5 to 10%, the amount you can decide, and not only save, invest that money as well. Don't take unnecessary debts. In this age, whatever unnecessary debt you could take, maybe if friend is having new iPhone, why won't I can't have it? No, buy the things you need it when you are not earning, or even when you are earning, buy the things you need it. Wants could be endless. You should spend your money on wants when you have enough money to spend on them, after taking care of all the aspects, all other your goals, be it marriage, retirement. Once you have set aside the money for these goals investment, only then spend on your wants. Save and invest first and then spend later. Why we keep telling that saving and investment is important? Because there are certain concepts in finance which impact our saving as well as our investment. What are these? Inflation. I hope every one of you know what is inflation. So let's say I have a money deposited in bank account by rupees 100. How much interest I am getting? Let's assume 4%, though it has reduced. So after 1 year, my balance would be 104. But I was getting 1 kg apple at 100 rupees. But 1 year inflation is 7. So after 1 year, the balance in my account would be 104. But for buying 1 kg of apple, I need to spend 107 rupees. So how much I am in deficit? 3 rupees deficit I am having. So I am short by 3 rupees after 1 year, despite saving the money. So what should we keep in mind? Ideally, I should make my investment in somewhere where at least I can get any interest rate which is more than inflation rate. So depositing money in any simple bank account may not serve my purpose. I need to deposit my money. I need to save and then to invest somewhere wherein it can beat the inflation. Let's say I would have spent, invest this money in some other instrument where I was getting 8%. So next year the inflation is only 7%. So at least I was getting 1 year 1% real rate of return. There are two types of rate of return we generally talk about. First is what rate of return we get and see all these instruments offer us, be it FD, mutual fund and all. They offer, let's say they are offering us a rate of return, bank FDs are offering 2 to 3%, post office schemes, certain senior citizen savings schemes, and certain bank FDs for, let's say, 5-6 years, they are offering 6%. But what is the inflation rate in economy? Whenever we take inflation rate, we generally take the long-term average of inflation. Let's say presently India inflation rate target is 4 to 6%. So we have this one monetary policy committee. Its mandate is to run inflation between 4 to 6. If it goes beyond 6, they have to take steps. If it is go less than 4, they have to take steps. So we can assume that our long-term inflation target is, let's say, 5%. So in case your investment is earning more than 5%, you are going good. Otherwise, there is always a mismatch between whatever you need and whatever you would be having through your investment. Okay. Why we say that long-term investing give more return? Assume that you are investing 5,000 rupees per month in any instrument which is giving 8% per annum. So shall we see how much we would be getting? What is our investment? Rupees 5,000 per month. In 15 years, I have invested rupees 9 lakh only. But due to compounding effect, my value has become 17 points, close to 17.60 lakh. 17,60,000. Let's say instead of withdrawing money after 15 years, I invest for 5 more years. In 5 more years, the additional investment I have made only 3 lakh, and total amount invested in 20 years is 12 lakh. You can count 20 years means 240 months into 5. I have invested 12 lakh, but due to the power of compounding, my value has become 30 lakh. And if I don't withdraw and let it grow for next 10 years, the amount I have invested is only 18 lakh, but in 30 years, my value has become 75 lakh. So I have invested only 80 lakh in 30 years. So let's say in case you are 25 years old or 30 years, even if you start saving in 25 years, till 30, next 30 year would be 55. So a monthly saving of 5,000 rupees at just 8% per annum can give you 75 lakh rupees, which all we can easily save. Okay. But let's say, why we say that start early? Because delay in investing can be costly. Let us see through an example. Suppose one is having a goal of child education. The amount required is 15 lakh rupees. Expected return, I am again assuming 8% per annum, and duration is 20 years. So let's say today is 2020, I need this money in 2040. If I start investing today, I just need to make an investment per month, assuming 8% per annum. I just need to make per month investment of only 2,500 rupees. If I start from today itself. But let's say I think that, okay, now the child is small, let me spend some time on other goals or other luxuries. I will start saving for child education after 3 years. So after 3 years, the time would be, I have only 17 years to save this 15 lakh. So I need to save per month close to 3,400. My amount goes up by 900 rupees per month. So, okay, till now it's just a addition of 900 rupees per month. But if I delay it by, let's say 5 more years, then I have only 15 years to reach 15 lakh goal. So per month I need to make 4,300, and let's say if I delay by 10 years, I need to make per month investment of 8,200, which is 5,600 more each month for next 10 years. Similar way. So with this example, you see that if I have a goal right now, if I have decided this is my goal, the best time to start investing is now. The more you delay, the more you have to, shell out from your monthly income. If you start saving now, you can achieve that goal in 2,500 rupees per month for next 20 years. If you delay it by 5 years, every month you have to, set aside 4,300. And if you delay by 10 years, thinking that right now the child is small, so after 10 years you will start saving, every month you have to bear a burden of 8,200 rupees. So whatever your goal is, start investing for that goal right now. Okay. But before we go for any saving or investment, there are three pillars of any investment. And what are these? The first pillar is safety. Wherever you are making your saving, place should be safe. When I say safe, it's not local. The principal you are investing, that should be safe. There should not be any fraudulent activity or fraudulent company wherein you are investing your money. Liquidity. Liquidity means the money should be available to you when you want it. Let's say you are having 5-year fixed deposit in a bank, but you have certain emergency at home. So you can approach your bank, they may deduct some 0.25% from the entire corpus and give you the money. So liquidity is there. Whenever you need it, you should get it. And growth. Wherever you are investing, it should not be like that your principal is lying 5 years in some scheme, but after 5 years also it is same. It is not even earning the bank interest rate. So all three aspects should be there in your investment allocation. So this is our life cycle and financial planning. So when we are 10 to 20, we have generally, we start planning for our, and this is all part of financial planning. First, we plan for our protection. What is protection planning? I'll come up again. Then our investment planning, tax planning, and then come the part estate and retirement planning. Estate, you all know, because I think the session before me was for estate planning only. So why retirement planning? As we already discussed, rising cost of medical expenses, advancement in medical sciences leading to increase in average life due to inflation and rising cost of living, and early retirement can increase the post-retirement time period itself. Let's say these days, let's say you have a retirement period up to 60 years, but and you have planned everything like that. But what if you thinking that I'll start saving when I would be 50, but is there any guarantee you will remain in your job till you are 50? No, there could be any possibilities these days. So the nature of job market is also changing rapidly. So the moment you start earning, start planning for your retirement. Every retirement needs a right plan. And what is this right plan? A right plan ensures you of a comfortable lifestyle even after your retirement. It should not be like that right now you are having a lifestyle of spending say 40,000 per month, but after you get retired, you have to cut down your, of course some of the expenses will be cut down, like say every day you are not going office, so that sort of running daily conveyance expenses would be lower or may not be there itself, but then new expenses would be at up, medical costs would be more. And the second aspect of any retirement plan is make sure you continue to earn a regular income. In your earning days, you get a regular income in the means of salary, business profits and all. But post-retirement, whatever money you earn till you get retired, the interest earned on that money is only your income. So post-retirement, until unless you are working also. And there is a saying that when you get retired, generally don't get retired from working life. Just get retired from your worries, and worry could be any. In case financial, then you can take care of. Other than financial, you have to sit down with other friends, family, or in case there is a medical problem, maybe with the doctor. But at least financial worry should not be there. So how we do what are the steps in creating any retirement plan? First, you need to know your post retirement income needs, how much income you require. Then once you decided I require this much income, then how much regular saving I need to do to achieve this. Then you have decided, okay, this much saving I need. Then you need to go through different products which are available in the market. So what product suits your requirement considering your risk and return appetite? And then you need to keep review it periodically. Like let's say you have selected a product which are presently giving 12%, but suddenly the rate fall to 9%. Then you need to review your plans. Either you need to, increase your per month contribution, or you need to find another product which can give you the same 12% which you have assumed while making the retirement plan. Till here it's fine. Okay. So this is one illustration. The goal is to make retirement plan. Suppose the current age of anybody, say let's say X is 30 and the retirement age is 60. Post retirement, we believe that the guy X would live till next 20 years, so till the age of 80. And during that retirement period, the moment he get retired at 60, every month for next 20 years, he need a monthly income of 50,000 rupees. So at the age of 60, how much money should he be having in his corpus or in his deposits, so that every month he can get 50,000 rupees per month? Okay, you need two inputs here. Years we are having 20 years, but how much would be the rate of return and how much would be the inflation rate during his retirement period? So this is the answer. We are assuming rate of return 12%, long-term inflation 6%, and post-retirement return 8%. Whenever we calculate how much we would be, let's say I got retired at 60 or X got retired at 60. Once you get retired, whatever return you would be receiving on your investment, always take that return in terms of real rate of return. What is real rate of return? Interest rate minus inflation rate. Let's say when you get retired, interest rate is only 8% you are getting. And why 8%? During your working years, you can take more risk. So you invest in, certain instrument which promise equity return, where return and risk are proportionate to each other. So let's say once you get retired, you won't be taking those risky bets or those risky investments. So post-retirement, we are assuming, let's say the interest rate is only 8%. But once you get retired, inflation does not go away. So to keep that inflation thing in mind, whatever rate we take, once you get retired, it is always real rate of return. I'll show you one example. It would be more clear. As far as this example was concerned, assuming we are having 12% rate of return, long-term inflation in economy is 6%, and post-retirement return 8%. We need somewhere close to 1 crore rupees when X get retired at the age of 60 to get 50,000 per month for next 20 years. And if he is at the age of 30, how much per month he need to save in case his investment earned 12%? Only 2,800 rupees. And we all can save that. If we start saving 2,800 rupees for next 30 years, we all can achieve, provided we are having 12% rate of return, we all can achieve a corpus of somewhere close to 1 CR. Any questions till here? Okay. So any retirement planning, we need to answer 3 fundamental questions. How much have you got today? How much will you need when you retire? Or how do you build what you have today into what will you need at retirement? So before I go further, I would request some participation from the participant. I would like to do retirement planning for any one of you, or maybe 2 of you. Any volunteer? I need volunteer. Any volunteer for retirement plan?
Please respond, students. Anyone?
Sir, you are having retirement plan? Sir? Am I audible? Volunteer, please. So may I do for yourself?
Sir, carry on, sir.
I need one volunteer for whom I can do the retirement planning. Can I do for you?
You can do, sir.
For you, I can do. I need
Yes, sir.
participation. Huh?
Yes, sir.
Hello?
Yes, sir.
Okay. So I'm opening this sheet. You need to tell me the figure. Okay. Your present age?
29.
29. When you want to retire?
At the age of 60.
60. And how much you expect that you live post your retirement years?
25.
So let's say till 85 you will live.
Yeah.
Okay. So there are two ways to do all these things. Either, okay, sir, how much is your present expenses per month?
It's around 2K.
Only 2000.
Yeah.
Okay, sir. Assume that you will get married and having a family. How much would be the expenses?
Around 15K.
That's it? Sure?
20K.
Let's assume 25K.
Okay.
Okay. So presently you are having an expense of 20,000, 25,000 per month. Assuming you are having family and all. And I am assuming long-term inflation in economy is 5%. So presently you are having expense of 25,000 per month. But when you get retired, due to inflation, the per month, the value of this 25, you need to maintain 1,13,451 rupees. These 25,000 would be equivalent to this money because of inflation. You're getting my point?
Yeah.
So whatever you can buy right now in 25,000 rupees, when you get at the age of 60 years, you would be requiring 1,13,000 rupees to maintain the same lifestyle. So what will happen? Now assume when you get retired at the age of 60, your rate of return, when let's say at the age of 60 you retired. So now you need this 1,13,451 rupees for next 25 years. Correct?
No.
Why?
Come
You
again.
want to, I am saying, we are assuming we want to, make same lifestyle which you are having right now. Presently, you are having a lifestyle of spending 25,000 rupees per month.
Yeah.
At the age of 60, this will be increased by this will be increased to 1,13,000 due to inflation. So whatever is the value of 25,000 right now, after 31 years, when you get retired, this 25,000 would be equivalent to 1,13,000 due to inflation.
Yes.
Whatever you can get right now in 25,000, when you get retired, you would be requiring 1,13,000 to meet the same expenses or to live the life in the same way because of inflation. Till now, am I clear?
Yeah.
Okay. So when you get retired, every month you need now 1,13,000 rupees to maintain same lifestyle. And you need this amount per month for next 25 years because you get retired at 60 and you want to live till 85. For next 25 years means 300 months. For next 300 months, you need 1,13,000. So how much money should be there in your account when you get retired at the age of 60? We are assuming, and how to calculate this money? There are certain formulas. Maybe I think that formula you may be knowing. In case you don't know, maybe we can have some other session to explain this. But for this sake, we are assuming when you get retired at 60, whatever money you have, you invest that money in 8%, any investment yielding 8% per annum. So at the age of 60, you are getting 8% per annum return. Inflation is still 5. So your real rate of return is only 3%. And every month you need 1,13,000 for next 25 years. So when you get retired, you need somewhere close to 2 crore 43 lakh rupees in your account at the age of 60 to maintain same lifestyle. So what you should do to achieve this? Let's say now what will you do? Hello?
Hello.
So now what will you do?
Have to start investing or saving.
Have to start investing. And now assume that to achieve 2 crore 43 lakh rupees, you start investing in any instrument yielding 12% per month. So your age is 29, you have 31 years. So if you per month you save only 6,100 rupees, you will be able to achieve it.
Okay.
But let's say okay. Let's say you delayed by 35 years. You keep thinking that why I need to start saving for retirement presently. I am just 29 years old, and you start thinking about retirement in the age of 35. Then to achieve this 2 crore 43 lakh rupees, every month you need to save 12,000 rupees, almost double of what you have saved when you start saving from 29 years. So the more you delay, the more you need to save more. In case you would have started in the age of 29, you would have got this 2 crore rupees when you get retired. But if case you delay by, let's say, 6 years, every month you need to shell out 6,000 rupees more, because now you need to every month save 12,000 rupees. If you delay till 40, then the amount will become just double. So the more you delay, the more you need to save and invest every month. So for retirement, the day you start working, start saving for your retirement days, because this would be the time when you won't be having any income. Is that fine? Is anyone there?
Yes, sir.
So can you save 6,100 rupees per month? Can you save? Am I audible?
Yeah.
So this is one approach, like wherein we have discussed your present expenses. But now let's say you have simple thinking that, you know, at you want to get retired at 60, and maybe, you know, you would be living at 85, but at the age of 60 years, you just want 1 lakh rupees per month, assuming after 60 years. Right now, 25,000, maybe, you know, due to inflation, you after 31 years, you would be requiring 1 lakh per month to live with the family. I'm just assuming. So, total, how much total years you would be having in retirement life? 25 years you would be living retire. Your present age is 29. So how much for having you know, having 1 lakh rupees per month at the age of 60? You should be having somewhere close to 2 crore 39 lakh rupees in your account when you get retired. And to reach this 2 crore rupees, in case you invest this money somewhere in any investment avenue giving you 12% per annum,
12%
only,
return.
so only you need to have 6,000 rupees. If you save per month, you can easily have this much amount.
Okay.
Got it?
Yeah.
So the moment you start saving early, the better it is. The moment you keep delaying, let's say you delayed by 5 years, 6 years, almost double you need to save per month. If you delay by more 5 years, amount keep getting increased. If you keep delaying it, even if you delay by 5 years, the amount just become double from 12,000 per month to 24,000 per month. So in case you want to save for your retirement, start saving from the day you start earning. Otherwise, there is always, yeah, please. Any question?
What's the best way to invest in, like, I heard about NPS. It gives
Sure.
around 8 to 10%.
So far I was discussing, yeah, please continue.
What's the best one? It's NPS or
See,
ESSL? I heard about.
There is no definition of best. Till the time you are earning, you can take risk. So in my assessment, whatever instrument you said, and NPS is one good instrument, and the past return is somewhere close to 9 to 10%. But here I'm assuming I would be okay. Let's say I assume that I would be getting 9.5%. So for with 9.5% return every month, I need to save 10,000 rupees per month.
Yeah.
So that's why I was looking for some instrument which can give me 12% per annum for next. And this instrument would be only mutual fund, believe me. So when I am earning, I can take more risk. So mutual fund, I hope by now you would be clear what are mutual funds and everything, right?
Yeah.
So,
actually, I missed that class.
Okay. So there are certain, okay, now I come to the instrument part. What are the different instruments available to save for retirement before achieving retirement, or once you get retired? What are your options? Let's say maybe, you know, your father or mother would be getting retired in next 5 years or maybe next 2-3 years, wherein you can park their money for safe return. Because once you get retired, you cannot take the risk of equity. So after getting retired, you need certain safe you know, investment avenues where the money would be safe and you can get whatever interest you can earn on that money. So now I'm closing this practical part and going back to the PPT. So as you rightly asked, what are the various investment avenues available in case you want to save for the retirement? These are the asset classes you can invest: equity, direct equity, mutual funds, gold, bank FD, fixed income instrument, and senior citizen savings schemes. And now if you look at the risk return parameter, the risk is on x-axis and return on the y-axis. So postal saving would be having lower risk, lower return. And in this way, it would be going onwards. Bank FD, mutual funds, and equity means direct equity. What is the difference between mutual fund and direct equity? Is in mutual fund, a fund manager is investing your money on the behalf of various investor class having same investment objective, and everyone's money is being pulled into companies. In direct equity investing, you are searching the company yourself and investing into it. So risk return trade-off, same way, it's like similar thing. The lesser the risk, the lesser the return, and the more the risk, and I would not say more return, but the potential returns are more. Our expectation become more, because when we are taking more risk, our expected return would be more. It's never like that higher risk means higher return. Higher risk means only higher expected return. We are expecting it, thinking that as we are assuming higher risk, we should be rewarded with higher return. But it's not always like that. Now up to your part, wherein you can save for retirement. The best way to save for any retirement is saving through your, whenever you start earning, or maybe you can see the salary slip of your mother or father. There is one component called EPF, Employee Provident Fund. This is the fund wherein, generally you save 12% of your basic plus DA salary, and your employer also contributes. Generally, people are having this conception that, this is the deduction in your salary which reduces your take home. In case your salary is lesser, you have a certain valid point, because this amount reduces your take home. But this is one of the best avenue to make or park money for your retirement. Generally, this EPF is there in every organization where a certain amount, generally 12% of your basic plus DA, get deducted as deposited into this scheme, and your employer also contributes same amount, 12%. The best part with this scheme is you will get presently the bank FD interest rate is somewhere close to 3 to 4%, but this is the scheme wherein you are getting last day only the government has decided to give interest on EPF at the rate of 8.5%. This interest rate is much more than even the interest we get on senior citizen savings schemes. So in case you are planning for your retirement, this is your best bet, because the return are ensured, and this return comes under the category of EEE. What is triple E? Triple E means exempt, exempt, exempt. And what does that mean? In case you are making any contribution into EPF, let's say this comes under tax planning. Let's say every month you are saving some 50,000. Every year you are saving 1,50,000 in EPF. So you will get a deduction of that 1 lakh rupees under section 80C. So when you are saving, you are getting deduction in income tax. Whatever interest you earn on this, every year the government notify the interest rate. For last year, financial year 2019-20, the interest rate is 8.5%. So whatever money you park in that fund, you will be getting 8.5%. This interest income is also tax free. Let's say 1 year you save 1 lakh, you got 8.5%. So next year your account would be having 1,08,000. Next year again you say 1 lakh. So interest on interest keep accumulating, and when you get this money in your hand at the age of 60 years, then also it is tax free. Triple E means when you are making contribution, it is tax free. Whatever return it is earning, that is tax free. Whatever you would be getting at the end of the investment period, that is also tax free. So there is no tax on this investment. What is voluntary EPF? So generally we can say that only 12% being deducted in EPF. But in case you want to save more in this, you can opt for voluntary EPF. What does that mean? You just need to give one form to your HR stating that apart from 12%, which the employer is mandatorily deducting, you want to set aside certain more money into this fund. What would be the benefit? The benefit would be you would be getting the same interest rate, backed by Government of India, no risk. So save investment avenue for saving for your retirement. Then comes senior citizen saving schemes. Let's say these days the bank FD rates have dwindled to 3 to 4%, but this is certain saving scheme. It is only meant for senior citizen. And what is the definition of senior citizen? Anyone who has achieved the age of 60 years. Any Indian citizen less than 60 years cannot participate in this scheme. This is only meant for senior citizens. What is the best benefit? The interest rate is the best benefit, which is somewhere for this year, every year the government notify the interest rate. For this year, it is somewhere close to 7.4%. The maximum amount you can save in this scheme is 15 lakh. More than 15 lakh you cannot save, and any amount of saving more than 1 lakh, the transaction can only be done through banking channels. You cannot deposit cash. The interest on this scheme comes every quarter in your bank account. Let's say you have 15 lakh rupees. So the interest would be somewhere close to 1,10,000. So 1,10,000 divided by 4, somewhere close to 28,000 every quarter. After every 3 months would be credited in your bank account. And generally these schemes are available only through post office. Certain banks also offer, certain nationalized bank offer this scheme, but generally people prefer post office for this scheme. Then comes the national pension system. After 2004, no government is allowing any pension to anybody, neither in government sector nor in private sector. So the government created this system which we called national pension system. How national pension system is different from the things which we have discussed, like mutual fund investing or any FD investing. In national pension system, if I get into one time, let's say I cannot withdraw money till the age of 60. The best part about this system is it can only allow me to withdraw certain amount of money in certain emergencies. Let's say, but only 3 times during the life. Let's say at the age of 29 years, I become part of NPS, and every month I am saving it. This system is having 2 type of account: tier 1 account, tier 2 account. Generally, all those people who are in employment, they have to mandatorily open tier 1 account. In tier 1 account, whatever money you are depositing and whatever scheme you are selecting, there are 2 type of scheme available here also: equity, debt, and a mixture of both, which we call balance or hybrid. You can select any scheme based on your risk appetite. But the best part with this system is this system forces you to save, because you cannot withdraw money more than 3 times, and that to certain specific purpose. So let's say you start saving from 29 years till 30, you can withdraw money only on 3 times during all these 31 years, and that too for certain causes. It's not like that this year you want to go for Europe trip, so you can withdraw your pension money. This money is only meant for your pension purposes, so this system won't allow you to withdraw money till the time till the time any exception is there. There are 3 type of exception here: any marriage, any critical illness, or construction of house. Only for these 3 causes you can withdraw money from this fund, and that too only 3 occasions during the lifetime of this fund. Then comes your bank FD that we all know, and pension funds. Pension funds are certain type of fund wherein you park whatever money you get at the time of retirement. You park this. These pension funds also invest into market, and they pay the interest rate which is at times certain 100 or 200 BPS, which means 1 or 2% higher than bank FD rates. So, but that rate would be surely less than any rate offered by senior citizen savings scheme. So let's say your father or mother are looking for certain safe avenue. Presently, there are 2 type of avenue available if they are of 60 years of age. And what are these avenues? Wait a minute. 2 schemes: senior citizen savings scheme and this scheme, Pradhan Mantri Vay Vandana Yojana. This scheme is only meant for senior citizens. But what is the difference between these 2 schemes? And let's say if a person is of 60 years of age, what scheme that person should choose? Maximum investment you can make in both scheme for yourself and spouse is 15 lakh only. Senior citizen savings scheme have a maturity of 5 years, wherein PMVVY is for 10 years. Interest get credited in your account quarterly. Herein you can choose the frequency, whether you want monthly, quarterly, half yearly, or annual. Interest rate in both the schemes are same. In case, let's say you retired as senior citizen, wherein your annual income is more than 5 lakh. So now you come into tax bracket. But whatever interest you are earning on this senior citizen savings scheme, up to 1.5 lakh is deductible under section 80C. So any investment in this scheme Interest on it would be taxable in both cases. Premature exit. Premature exit is easy with senior citizen savings scheme with penalty of sometime 1.25%. But in case of PMVVY, it is only allowed in certain cases, critical or terminal illness of self or spouse. So let's say if someone is at the age of 60, which scheme should I recommend them? There are certain caveats with senior citizen savings scheme. This PMVVY may not be extended for after March 2021. So in case I want to have 7 point, I want to, and I think that the interest rate will keep falling or would be less than 5% even in bank FDs. So what I will do, I will, because this PMVVY may not be available, and if I know that 10 years I can lock in my money, I would prefer this PMVVY. In case I think that I cannot lock in my money for next 10 years, I would opt for senior citizen savings scheme where the maturity period is 5 years. After 5 years, PMVVY after 10 years you cannot renew it, but in case of senior citizen savings scheme, after 5 years you can renew it for again 3 years. So let's say someone at the age of 60 years, he opt for PMVVY. After 10 years he cannot opt for PMVVY because it is not renewable. But senior citizen savings scheme, if someone opt for after age of 65, he or she can renew it for again 3 years. So the maximum tenure for senior citizen savings scheme is 68 years. But after 68 years you cannot renew it. So it is up to you. If you think that you cannot lock your money for 10 years, opt for senior citizen savings scheme, extend it, and if any such scheme like PMVVY would be available after 8 years, you can opt for it. Otherwise, if you think that you can park your money for next 10 years, you don't need it, you can survive on the interest income itself, opt for PMVVY. Once you attain 70 years of age, go for senior citizen savings scheme. For next 8 years also you can get certain decent assured return by government of India. So that way you need to plan. Maybe not for you, maybe for your parents. There is another concept called reverse mortgage. This is a new concept when we start discussing for our retirement planning. Let's say you have planned for everything, but how during your retirement you have nothing left for living a decent lifestyle because you have not planned properly, or maybe it got expense somewhere. What best you can do? In case you are having your own home with you, you can give that home to bank, hypothecate that house in bank name, and based on the value of that home, bank will start giving you money. Why it is called reverse mortgage? What is mortgage? You take loan from bank for buying a house. In this case, you are giving your home to bank again to buy money. So based on the value of your home, the locality, how much value this home can fetch. Let's say you don't have any income, but a very good property near highway, or very good residential property or commercial property. Just hypothecate that property with bank, and bank based on the value of that property will give you monthly installment till that. The maximum amount here is also prescribed by RBI is 20 years. So you can, for 20 years, you can get annual or per month income by hypothecating your house. But people have generally, houses having very emotional value. So people have this hope. Every time I explain, people have this question: what will I die? Then your legal heirs, your son or daughter, would be having two options. Either they can repay the loan to the bank along with interest, or the bank can sold the house as it, because he has to recover whatever the money he has given to you once you hypothecate your home with the bank. So that way, in case you are having no money during your retirement time, but you are having your house can still make you a money. You are not selling your house. You can even this could be a good concept in case when you get retired, your children are not very family type and they are only after you for money. You can save, and you are having a good house. Instead of putting that house in their name, just hypothecate with bank, keep having the money income, and in case you die, in case the children wants, anyway they have not helped you during your retirement time. In case they want your house, they will pay back your loan with principal and interest, or otherwise your home helps you to survive your retirement days, fair and square. Now, when I was discussing this thing, I said three things: saving, investment, protection. You can do saving, you can do investment. But what if certain uncertainty crop up? That uncertainty can kill every goal of yours, including retirement. So to avoid that uncertainty, each one of us should be having one insurance. This pandemic teaches the value of health insurance. The life insurance earlier also we all were having, but we were very skeptical with the health insurance. But maybe going forward we would place that much or certain more emphasis on our health as well. So I presume this insurance you all would be knowing, so I'm not spending too much time here. In insurance, I would always say go with the term plan because it is the cheapest plan available wherein you can get maximum risk cover. And as you all are student and maybe not earning, there are two type of insurance schemes which is being run by Government of India, Pradhan Mantri Suraksha Bima Yojana and Pradhan Mantri Jeevan Jyoti Bima Yojana. The first Suraksha Bima Yojana is accidental insurance wherein by just paying 12 rupees you can get an accidental cover of 2 lakh. And the second one, Jeevan Jyoti Bima, again the risk cover is only 2 lakh rupees. But in case you are just a student, you should opt for it because you are not earning anything. And in case of your unfortunate demise, your value will not be come back to your parents, but at least they would be getting certain money back in case there is any mishappening happen to you. So for student also these two insurances must. One 12 rupees accidental insurance which we call Suraksha Bima Yojana, and for another one is life insurance, it's called Jeevan Jyoti Bima Yojana. For next, the second one, the premium only is 330 rupees per annum, and that first one accidental insurance only also 12 rupees per annum, not more than that. So 1 rupee per month that we all can afford. So will and nomination, I think you all know now. What is will? It's a legal document and it ensures smooth transfer of funds. This is required in your retirement planning. So never leave your fund anywhere. If you want your funds to be spent in certain way, always write a will. Nomination is never a will, and nominee is just like the earlier speaker also explained to you. It's just a caretaker of your fund. Your will decided. Let's say if you are having nominee as well as will. Do remember, will always supersede not only nomination but also Indian Succession Act. What is Indian Succession Act? Indian Succession Act says that after father the money should go to his children. But let's say if you make a will that after me my money should go to my ex-friend, not to my children, then in that case Succession Act won't come into picture. Your will always supersede. Whatever you wrote in your will would be qualified and would be distributed as per your wish. Now, there are certain do's and don't. Don't lose your hard-earned money to fraudulent investment scheme. This generally happen with the retiree people because they are having bulk of money and they are looking for, generally they should look for safe investment avenues. But people get greedy for 1 or 2% interest rate and keep park their money where they should not park. What are the certain do's? Do start with your own goals. Keep emergency fund. What is emergency fund? The value of emergency fund we realize maybe after this pandemic, everything goes standstill on March 24th with just one circular, one order of government. For next 3 months, there was loss of employment, loss of salaries for many people. So at least create a fund known as emergency fund wherein you should park at least 3 months of your expenses. Let's say if in an unfortunate event you can't go, you meet with some accident or your job goes, at least you should have 3 months of your expenses already available with you. So you should need not borrow from your family or friend. Already said, start early and invest regularly. Keep protect your plans, your dreams by taking medical and life insurance. Always have your nominee. It's better to write will, but nominee should be there. Do take safety measure with all your online banking, debit, credit card. Don't get prey to all these frauds. Do monitor your investments periodically. And what you should not do, don't put all your egg in one basket. What does that mean? In case you are young, maybe you can invest in equity, but once you get retired, uh, never buy, never put all your retirement money in one thing. Let's say don't buy a house or don't spend entire money for marriages. This money is meant for your retirement, so use for that purpose. And don't invest this money. Let's say in case you want, let's say you got, you say you are able to save 2 crore 40 lakh, whatever was required in that example. Now you have 2 crore 40 lakhs, and you have assumed that during retirement, yeah, I would be getting 8% only. So don't start thinking that let me park this money in one particular share. Maybe you can still use that 2 crore to park that money in certain good mutual funds in case you can bear risk. But if you can't bear risk, just put that money in any bank FD or any senior citizen saving schemes wherein your return is ensured. Always don't you check your investment performance every single day when you are your working years. This mistake certainly happens with all of us. Let's say we keep checking our mutual fund holding daily. If it is not increasing, we stop the enthusiasm and stop saving. It's not like that. If you're investing for long term, don't look at the price daily. Don't take on any debt you may not necessarily need. What does that mean? Take only good debts. What are good debts? The good debts are those debts wherein which help you to create any asset. In case you are buying a debt for home loan or buying a debt for education loan, that's a good debt because you are creating asset for your future. This education will enhance your value and increase your earning capacity. But if in case you are buying a debt to buy iPhone or some high quality another Google Android phone and all, then this debt is unnecessary. You don't need it. Don't fall for fraudulent offer of easy money like lottery scam, mass marketing fraud, like spend 2 hours, just give us 12,000 rupees and we will provide you opportunity working from home wherein you can earn 500 to 1,000 rupees per day. Believe me, if it is that easy to make money, no one would be searching for regular employment. So if all these schemes are certain, there may be certain good also, but 95% of all these schemes are fraudulent schemes. Avoid investment that offer extraordinary return. For retiring people, it is must because during your working years, let's say you become victim of any fraud, you can still survive because you may think that okay, I am in my working years, I will again earn and save more. But during retirement period, if you lost your money to any such investment scheme in greed of some 1 or 2% extra return, that will demoralize you because your retirement money which you have saved during your working years for peaceful retirement life, that money is gone. So that will reduce your morale as well. With this I would stop. This is the part, our journey, tenure track. We identify our goal, build our portfolio, accumulate asset, and then we part it off to next generation. With this, thank you. If you are having any questions, I'm open for that. Anyone?
Post your questions in the chat box. Students, post your questions in the chat box.
Oh, there are 50 questions. Okay, there is one question from Anant Reddy. He is saying, why is the limit to deposit more than 4,50,000 by a single person in post office? See, generally, I don't know why, but generally this scheme is for monthly income scheme. But what you are talking about? In monthly income scheme, the rate of return is a notch higher than your bank FD rates. For single person, you can only park 4,50,000 as you are saying. But if you open a joint account, let's say family of two, husband and wife open, then 9 lakh, up to 9 lakh they can deposit. Yeah, tax limit is always there for 1.5 lakh only. Even if you are earning 1 crore or if you are earning 6 lakh, the exemption limit under 86 is 1 lakh for 5,000, 1 lakh 50,000 only. So, any more question? So, any more question?
Sir, excuse me, sir.
Yeah, please.
Present I am 50-year-old.
Okay.
Sir, which plan would you suggest to have after retirement, sir? Which is the best plan?
Sir, you want to take risk or you don't want to take risk?
Sir, I don't want to take risk.
Okay. Okay. So let's say at retirement you get your gratuity, EPF and everything 1 CR around. Okay. I'm just assuming. How much should I assume? 50 lakh?
No, 40,000. I'm
No,
earning.
no,
Sir,
you are
what up?
earning 40,000. But when you get retired, how much money you would be
I
having?
might be getting 70,000.
You may be getting 70,000.
Sir,
So are you saving anything for retirement? Have you saved?
I started saving per month 6,000 at present.
Okay. Okay.
Apart from EPF is there.
Okay. But you need 70,000 per month, right?
Right, sir.
So I am again opening that sheet. We can see whether you would be able to achieve it or not. Shall I open?
Open, sir. Once just glance.
Sure. Okay, sir. So sir, your age is 50, right?
Sir,
And you would be retiring at 60?
62.
62. Okay. And how by what time you expect you would live till next 25 years, 20 years? Any
Up to 85.
up to 85. So next 23 year you would be living. And you need 70,000 is your present expenses.
Yes, sir.
Okay. So, sir, you would be requiring somewhere 2 crore 54 lakhs.
Sir.
At how much money you would be getting at the time of retirement?
In terms of salary, sir, or anything?
No, gratuity, EPF and all.
Might be EPF is there not. I don't know about gratuity, but
I think
employment.
if your salary is 70,000, maybe you will be easily getting some 8 to 9 or 10 lakh around gratuity.
Sir.
So how much would be EPF saving? Any idea?
At present, EPF is there more than 3,500, sir.
No, but how much is the see in EPF you would be saving when you start earning. Right now you are 50. So if you have start earning 30, the amount would be huge in EPF.
Sir, 3,500 at present.
3,500 per month is per month saving, right, sir?
Sir.
And this is your saving since you are working.
Sir.
So this amount would be okay. Now let me assume certain things. For having 70,000 per month income, when you get retired, you need 2 crore 50 lakh 4 lakh rupees. Now I assume that when you get retired, you would be getting EPF of let's say 20 lakh.
Might be, sir.
And gratuity of another 10 lakh. Okay. So 30 lakh you would be having, but you need 2 crore 54.
The gratuity is the result of EPF, sir?
No, gratuity is the result of your year of service.
Okay, sir. Year of service that is contributed by EPF, sir?
No. Year of service in an organization.
In the organization?
Yes, sir.
Okay, sir.
No, I'm just assuming numbers. Even if I don't assume, let's say I don't assume anything. In that case, you need 2 crore 54 lakh. And if you start investing today in any scheme which is giving you, let's say, 10%. So every month, sir, you need 91,000 of saving. This much you cannot save because this is more than your this thing. So what you need to do, you need to reduce your expenses when you get retired. Otherwise, you cannot save. In your case, sir, if you are already having any saving, that may help you. Otherwise, it's a bit tough job.
Up to no savings, sir. Only EPF contribution is there.
So sir, in case you would like to have 70,000 when you get retired, it would be certainly tough for you. So you need to cut down your expenses when you get retired. So maybe, you know, it would be a certain kind of wake up call for your students.
Sure.
So any more questions? What is the best option for retirement plan? There's no option. You just, the moment you start earning, just find out any investment avenue. Let's say you are start earning at the age of 30. So you can take the risk in your in any, you know, direct equity mutual fund you can take. Just check out, there are certain sites available wherein you can track the performance of equity mutual fund. I am not supposed to tell you take any name, but there are certain sites like Morningstar, Value Investing. Just go to these sites. They tell you top 5 performing mutual funds. Always look for 10-year return, 10-year CAGR return, not absolute return. Absolute return is, let's say I invest today, after 5 years, the difference return is absolute. Always look for cumulative annual growth rate. Always look for CAGR return of mutual funds. And any mutual fund which is having 10 years of history and CAGR of more than 10% is good to invest. Any more question?
Anybody?
Or to nice study, sir.
Yeah. Yeah, any more questions? Otherwise, we'll end up this session.
Sure. Okay. Thank you so much for the opportunity to interact with your students. Thank you so much, sir.
Yeah, thank you, sir. Thank you, Kuldeep.
Thank you.
For your excellent presentation.
Thank you.
And answering all the questions
Thank you,
which
sir.
are posed
Thank
by
you.
our students.
Sure.
So, I thank your Dean, Narasimhan sir.
Yes, sir. I'll convey to him.
Yeah. I'm
Okay,
very
sir.
much
Thank you
grateful
so
to
much.
Narasimhan,
Be safe.
Dean of your NISF, Mumbai. Narasimhan, they helped a lot in getting resource persons like you. So thank you, sir. Thank you for your
Most welcome,
presentation.
sir. Thank you so much.
Sharing of your knowledge with our students. Thank you. Thank you
Thank
once
you.
again.
Thank you.
Venkat?
Sir.
Venkat? అయిపోయిందా ఫీడ్బ్యాక్ ఫామ్ పెట్టాం
సార్ చెప్పండి సార్
ఫీడ్బ్యాక్
ఎస్ సార్
అయిపోయిందా
ఎస్ సార్
ఓకే
Dear participants, feedback form is available in chat box in YouTube and Zoom. Please fill feedback form.
Yeah, dear students, we have 2 more days. Tomorrow we have 4 sessions, but day after tomorrow we have only 3 sessions. And last session is value study session. Yeah, you have to complete all your feedback form before the completion of all the sessions and value study. Now I will also send another questionnaire after listening to all the resource persons. If there is any improvement in your knowledge or skills, so that you can also answer with other questionnaire. I can also forward you tomorrow or day after tomorrow in the morning. So now we can also answer all those questions which are posed in the questionnaire. So that will be very much helpful to us. So before going to attend this workshop, what is your level of knowledge, and after attending the 7 days workshop, if there is any improvement in your skills or the knowledge, like that we want to know. So if there is any improvement now, whatever the efforts that we have initiated here, that becomes very much fruitful to us. So anyhow, I thank on behalf of the Center for Promotion of Financial Literacy and Department of Commerce, Usman University, Now another thing also there in valuation, yeah, you please give your names. We will go by from 3 to 5 students from different states. Yeah, you must share your opinion about our workshop in the value decision in front of the chief guest, guest of honors, and the head dean and the chairperson from the Department of Commerce and our principal will be there. So give your feedback about our all sessions or your experience about this particular program. So please send your names put your names in WhatsApp that you want to speak 1 or 2 minutes about the workshop in the last day, that is on Sunday. Last session is our value study session. Yeah, thank you one and all. Good night. Bye bye. See you.